because the Dow futures up in the green, even as we are seeing, this is how the Dow closed on Friday. This is Friday's trade, but if you can pull up Dow futures maybe in a bit. In Friday's trade, you had the Dow down over 770 points, the S&P 500 down about 1%, and the Nasdaq Composite about 1.5% as well, because US markets were plunging in Friday's trade as Israel attacked Iran. Bond yields spiked as well as Israel-Iran tensions escalated, the 10-year at 4.4%. All eyes, of course, are now on the Fed meet outcome this week. For us, it'll be Thursday morning when we will be able to dissect and see the impact of what the Federal Reserve is saying. Oil prices, of course, have spiked after Israel hit the South Pars gas field. It's one of the largest in the world. Brent was above the $75 mark. Asian markets have also risen in early trade, and kind of a mixed bag there. But the Nikkei nearly 1% up, and the implied open also showing that we're up in the green. Let's just listen in to the latest from what US President Donald Trump has said on the Iran-Israel fight. He says he thinks it will stop.
Well, I hope there's going to be a deal. I think it's time for a deal, and we'll see what happens. But sometimes they have to fight it out, but we're going to see what happens. I think there's a good chance there'll be a deal.
All right. We're starting the conversation this morning with Ben Powell, Chief Middle East and APAC Investment Strategist at BlackRock Investment Institute. Ben, a very good morning to you from where we're sitting. Pleasure, as always, to speak with you. Do you see a limited impact as things stand in the conflict we're seeing between Iran and Israel and the escalation we've seen in the last 24 to 48 hours?
Good morning. Great to be with you. Yes, for now, the market is very much, I think, treating this as a contained episode, at least for economic implications. Of course, it's a human tragedy, that goes without saying. But for now, the market is very much treating this as something which is going to be contained, and I think is implying that the damage to energy infrastructure should be relatively limited. So far, the attacks have been very, very targeted around military and nuclear kind of facilities, I think deliberately avoiding some of the key energy infrastructure. So for now, yes, of course, we're all watching very anxiously. There's always the risk that this could spiral into something more significant, bringing in more regional and perhaps even global players. But for now, the market is, perhaps surprisingly, but the market as we wake up on Monday morning is mostly shrugging this off and looking to move forward.
How crucial would the market perception of the US participation in the conflict be? Because a few people believe that if the US were to get involved, then there could be a swift end to this, and that from an investing lens is positive. I mean, leaving geopolitics aside, from an investing lens, that might be considered positive?
Absolutely. If we can, as President Trump was saying, overnight our time, if we can get a deal and see a ceasefire, hopefully a permanent cessation of hostilities, clearly that would be tremendously positive for the how can I say, the aversion of the very bad scenario. So for now, as I say, the market is treating this as a contained issue, but we're all acutely conscious that even the best laid plans can go wrong and spiral into something unexpected, unforeseen, and much more critical. So taking that off the table, perhaps with US intervention, encouraging both sides to come to the negotiating table and come to a deal a bit more quickly, if we were to see that, that would be straightforwardly positive news for markets.
Morning, Ben. Just zooming out a little bit from just this conflict to talk about everything else that may have gotten pushed to the back burner. The last time you spoke to us, I think one of the comments that you'd made went viral, where you're talking about the fact that across the globe, India is a country that you cannot ignore. I'm paraphrasing here. But has that changed at all in the current context? Are global investors perhaps holding back the checks just so that a semblance of normalcy comes back? And do you think that there will be a pause, if anything?
A little bit. I mean, it's quite normal for investors to, how can I say, react cautiously to the headlines that we're seeing vis-a-vis the geopolitical context. So that's totally normal and should be expected. But there's still a lot to like in the world from a market perspective. Globally, we have the astonishing technology, artificial intelligence boom. That's continuing. And from a geopolitical perspective, geographic perspective, there are many countries which are well positioned to take advantage of kind of changing economic, global economic environment. And India continues to be towards the top of that list for us at the BlackRock Investment Institute. A continent-sized economy, tremendous kind of demographic prospects, a growing labor force. But I think at least probably even more importantly is the gains we've seen in efficiency, productivity, which look set to continue. So it's a complicated world, that's for sure. In aggregate, probably we're all a bit more nervous given the context, but there are going to be standout winners. And yes, we at BlackRock Investment Institute continue to have India as a winner overall, even in a turbulent time.
Let me drill a little deeper into that concept. So within India, I'm just curious what you see as promising right now, specifically. And I know that you're looking at the artificial intelligence story globally. There's not too much in the way of a play in India specifically, but are there beyond that, are there promising trends that you see?
Absolutely. So this is a well understood story. The astonishing kind of technological efficiency gains we've seen in India, playing out over the last 10 years and more, I think is an ongoing bull story where we have this potential for more and more efficiency, more and more people coming into the formal banking system, perhaps even into capital markets over time. So this kind of trend, I think we can say it's well established and well understood. But I do think in a more turbulent world where even assets like the US Treasury maybe aren't completely safe, I think global investors are being compelled to look further afield, be that by asset class or be that by geography. And again, I think when we're looking through the emerging market kind of context, India for us stands out as a pleasing combination, clearly a continent-sized economy that can, to a large extent, look after itself, even in a very uncertain global trading world. And we've got the ongoing double tailwind of a growing labor force and a more efficient and productive labor force. So for me, where I'm focused is on the domestic demand story, the kind of self-help, if you like, as India becomes an ever more prosperous, successful, efficient economy. Lots to like.
Just a point, Ben, on what could be a fly in the ointment is the July 9th deadline of trade tariffs. Do you think that all markets, including the Indian market and global equity markets, analysts have sort of been underestimating the impact of this, or that we've shrugged it off too early?
Yeah, it's been very interesting, actually, to your point, to see how resilient the market has been since Liberation Day. So we had the shock of Liberation Day, markets down a bit, and then we've just seen this really amazing kind of global rally. So trade tensions are going to continue to be a feature. This is not going to be a short-term kind of situation where we get through July 9th and then we're kind of in the clear. I think the US administration's style, very differently from predecessors, is to have quite an active trade policy, even a very active trade policy on a bilateral basis. So with 200 countries in the world, it's going to be kind of relentless trade negotiations, trade tariffs, trade tensions, kind of persistently. But for India, we're all watching at what's going to happen in the G7 over the next day or two to see if there can be kind of positive signals coming out from that. US naturally will want to be seen to be playing tough. But again, sorry to belabor the point, but again, it does feel like India is an economy and country that both of the strategic rivals, China and the US, will want to be on good terms with, given the economic, geopolitical heft that India represents. So let's see how the G7 goes. It's going to be complicated. There will be some, I'm sure, kind of disconcerting noises, but we feel somewhat reassured that India is in a relatively good spot just because of the very huge structural significance that India presents to the US and also to China as well.
Ben, just one follow-up, and that is the markets are probably used to geopolitics, but we've kind of forgotten about the rare earth issue, maybe because of the US-China talks, also about the tariff pause, which ends after the 90-day period, so on and so forth. Does that have the potential to disrupt the equilibrium, if you will, in equity markets worldwide, or do you reckon that could kind of play spoil sport?
We're still positive. So our view would be from BlackRock that we've learned, I guess, over the last couple of months that the U.S. administration they're not kind of fanatical, right? They are responsive as they had a kind of market negative impact. They slightly lessened their aggression level vis-a-vis trade tensions. So if that's the view, and that is our view, and I think it's the market's view, that the U.S. administration is going to approach these various kind of discussions. Of course, they're going to try and do the best for America. That's fine. The approach may be somewhat more aggressive and even kind of combative than we've been used to over history. But if it's true that the US administration is very mindful of the negative impacts that they could have on their own economy and their own market if they go too far, then that gives us a degree of comfort that they won't cause us too much kind of problem. But look, we're all kind of learning in real time. So we'll be watching that July 9th deadline as closely as everyone else. We stay positive for now, but for sure, there is some risk around this. And again, we're all going to have to, I think, learn to live with this. It's not going away. Sorry for that, but it's going to continue to be kind of a news story and a fact of economic and market context for many years to come. We stay positive, but of course, we're watching July 9th as well as G7 in the days ahead.
G7 as well. Thank you so much, Ben Powell there of BlackRock, speaking about how he sees the situation panning out. And this morning, what we're trying to do, viewers, is get you as many global voices just to get a sense of where the situation is moving and how worried we should be. Ryan Bowl is the next one. He's Senior Middle East North Africa Analyst at Rain Network. Ryan, thank you so much for joining us. Pleasure speaking with you. Is there an underestimation of the level of escalation we could see between Iran and Israel? Have we seen the peak of it yet? And what are you making of some of the statements that are coming from Washington regarding this so far?
So I don't think we have seen the peak of escalation, but there are many steps that can still be taken in the course of this ongoing conflict before we hit kind of the absolute worst case scenario that would cause, say, a market meltdown or an oil shock. The Iranians and the Israelis have started to target one another's energy infrastructure, but they aren't targeting all of one another's energy infrastructure, and they aren't spreading beyond their own geography. So that's just one example of the ways that it can get worse if they decide that energy is a no-holds-barred target and then decide to broaden that out, especially on the Iranian side, to countries like Saudi Arabia or the United Arab Emirates. And of course, we are watching very closely for whether or not the United States decides to insert itself into the conflict as anything more than what it is right now, which is a very defensive power. It's helping shoot down some of these missiles and drones on behalf of Israel, just as it was under the Biden administration last year during the two previous attacks. But the Trump administration is volatile. They could rapidly decide to change their mind based on some provocation and decide to intervene offensively against Iran. And if that happens, then that would mean that the Iranians would have very little incentive not to cause an energy shock, not to attack the Gulf Arab states.
Ryan, do you see the possibility of energy prices escalating further from where we are? I mean, there has been a swift uptick already. Could that happen?
Well, I think that, and I really respect oil traders for working on fundamentals here. They're looking at supply, whether or not supply has actually changed, and not the perception of it, but the actual change on the ground. And I think this goes back to a lesson from 2019, where the Iranians hit Saudi Aramco, and it resulted in significant destruction, but oil supplies were not fundamentally interrupted for very long, and Aramco very quickly repaired the damage, and we all moved on with our lives from that episode. And so Iranian threats of closing the Strait of Hormuz is not enough to cause folks to panic at the moment. On the other hand, if the Iranians decide to carry out even a limited harassment campaign in the Strait of Hormuz, I think that would cause a lot of upward pressure on energy prices across the board, because it really suggests that tankers won't be able to cross that with the freedom that they have today. And then it also very strongly suggests that the United States would get involved militarily. And again, if the U.S. is getting involved militarily against the Iranians, it suggests all of their bases within the region are targets of an Iranian retaliation, and the oil infrastructure alongside it and the gas infrastructure alongside it would be too.
Got it. Okay. Ryan, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time.
Thank you.
Now viewers, just before we get to the trade setup, Tamanna, you've covered geopolitics your entire life, right? I mean, quick thoughts on this.
Yeah, so, it's there are a couple of versions which are coming out of it, and one is that maybe Iran doesn't have the kind of backing that they would have hoped for yet, which is my sense. Yeah, from the rest of the Arab world. Rest of the Arab world, definitely. China and Russia, what they do next is what matters, because Iran has been a pariah otherwise, apart from China and Russia. And China and Russia have not yet come out with the big guns to help them. America also is sitting on the sidelines. Usually by this point, you would have seen a US and a UK jump in to aid. And the fact that the rest of the world is not jumping is what is keeping markets calm, in my view. Also, if you listen to what Trump is saying, and I mean, he's saying, I'm going to strike a deal, I'm going to get them to the negotiating table. A lot of back channel stuff would be on right now. So yes, it's alarming. But the fact that the major supplies have not been impacted, they've been threatening to shut off the Strait of Hormuz, but they haven't yet. I think that's what markets are taking some reprieve from, which is why you're seeing the implied up in the green.
Yeah, US futures too in the green, so keep that in mind. And maybe it is in US interest to ensure that oil prices don't go up too high, right? Impacts inflation, helps Russia, all of that. So let's see if there is a swift end to this. From a humanitarian perspective, we certainly hope there is. Okay, what's the trade setup for the day in light of all of this, right? I mean, remember, Friday was a bad day, so you don't equate what happened on Friday with what could happen today, because they seem like completely distinct days. The implied open is up in the green. It's very crucial to see that if indeed the markets were to dip, do the lows of 24,600 are protected this week or no? Because I think that's the crux of the trade setup, that you look at 24,600 as being the key support level of the last dip, and if that is protected or not. Now, higher crude, FI flows present near-term headaches for the bulls, but does that remain that way? I think anybody's guess. So you've got to bear that in mind, that we'll keep an eye out for whether crude prices go above $75 per barrel swiftly, or do they become steady here? And are there FI outflows, serious FI outflows from bulls' perspective? I mean, the fundamental thesis for any of this gets challenged only and only if crude stays higher for a period of 2-3 months. If there's a blip and then it were to cool off, then maybe the fundamental thesis around India doesn't get challenged. And as you heard Ben Powell say, that India is top of the list, nearly top of the list for almost all people when it comes to investing in the global arena right now. Quick two things. I mean, from an optimum strategy perspective, for an investor, the optimum strategy is buying dips gradually. Do not go out and try and buy in one go simply because you think that the markets have bottomed out. This isn't over until it's over, but there are dips and you might want to buy dips gradually. The optimum strategy from a trader's perspective is to trade with strict stop losses. I mean, suffice to say, Tamanna, that things like oil upstream, etc., will be active in today's session as well, despite whatever the market does. And because the markets are in a bit of a uptick, at least that headline Nifty is, very interesting to see if the broader markets have a swift reaction to this, or do they stay a bit subdued. So interesting.
I think one reason also why you're going to probably see some amount of strength in the Indian markets today is because even though we closed in the red on Friday, look at the recovery from the lows. It was astonishing.
Yeah.
You were at least, I think, 200, 250 points above the lowest point of the day is where you ended up closing. So that is showing some inherent strength coming in.
Most certainly.
So yes, of course, I agree with you completely. Yes.
And just a word on maybe defense could be in focus, Tamanna, simply because Israeli markets on Sunday went up higher, led by defense companies. I wonder if Indian defense has that.
But Indian defense was buzzing on Friday's trade as well. So I agree completely. So defense stocks in focus once again. The Iran-Israel conflict will impact crude sensitive. So watch out for ONGC. ONGC was the big winner in Friday's trade. If you can just pull that one up, you had obviously the downstream companies suffering, but ONGC was 1.5% despite everything. Some of your paint majors, your airlines, everyone who has to depend on oil was impacted. But then a lot of clarity coming in that a few days of oil spikes is not going to hit too badly. Nevertheless, in Asian Paints, a Berger, and in Indigo, watch out for all of those today. Indian companies with large presence in Israel could also be in focus. I would mark out that one factor. So whether it's a Sun Pharma, it has a Taro over there, whether it's a Lupin, a Dr. Reddy's, Infosys, TCS also have establishments in Israel, so does Adani Ports. So, you have to look at some of those and see what is the extent of impact. So I must note over here a clarification that has come from Adani Ports yesterday saying that these rumors and these social media posts saying that the Haifa port has been hit are completely untrue. Now, let's just set up what you can expect to see today. The Nifty fell second day in a row in Friday's trade, but recovered 1% from the day's low, closed 0.68% or 169 points lower. Small and mid caps fell third day in a row, but outperformed the benchmark. Most sectoral indices recorded declines. Nifty, IT, Realty, Media were the only gainers. PSU banks, FMCG were the worst performers. Nifty has closed below the key level of a 30-day moving average at 24,748. For the upcoming session, 24,873 to 25,000 zone will be critical resistance for the Nifty, and 24,460 to 24,220 provides near-term support. So resistance at around 25,000, I would say, up to 25,200 perhaps, and support at 24,240. The Bank Nifty has fallen 4th day in a row. PSU banks have led the decline, resistance at 55,940 and support at 54,850 for the Nifty. But then it's all about individual stocks as well. So let me start with those. I'm watching SpiceJet this morning, and I found this quite astonishing, Neeraj. SpiceJet seems to be a bit of a turnaround story. And it's very interesting as well, and we're hoping Ajay Singh comes back and speaks to us. I don't know if you recall when we spoke with Ajay Singh, and he's like, we will turn around a profit, and then I want to come and talk to NDTV Profit about it. Mr. Singh, we're waiting to speak with you once again. So in Q4, these are the kind of numbers that we saw, an 18.5% improvement. This is just Q4 year-on-year comparison. In revenue and EBITDA, 83% up, EBITDA was 151% up, and PAT was 12 times up. So what are the factors that have aided performance? Increase in net profit owing to one-offs. There were one-offs, higher fares, reduced costs, and forex gains. One-off income of 220 crores was due to restructuring of lease liability. Passenger yield also improved quarter-on-quarter and year-on-year owing to the Kumbh Mela. Reported profit for the first time in 7 years, and reduction in cost items like fuel, airport charges and maintenance added profitability. They've earned a higher yield, that is the average fare per passenger per kilometer for FY25 at 5.18 versus 4.9 last year. Not so much for Sun Pharma. Sun Pharma is a thumbs down this morning because the US FDA has issued 8 observations to Sun Pharma's Halol plant. Inspection was from June 2nd to 13th. Resulting in a Form 483. Halol is a large plant with a history of US FDA issues. It remains under an import alert since May 2022 and currently has nil revenue contribution due to this alert. But the additional strictures may be a sentimental thumbs down for Sun Pharma. Swiggy is the other one that I'm looking at this morning. Might be interesting. So there's a note out which predicts that the MSCI India Standard Index expectations, the August rebalancing and the rejig, which will be announced on August 7th, could see 4 inclusions with an estimated inflows of $850 million. The changes would be effected from August 27th. So this is a JM Financial assessment that I'm talking about. According to them, Swiggy has a high probability of inclusion. Mazgaon Dock has a medium probability of inclusion. Shipbuilders, Hitachi Energy India have a low probability, and so does Wari. So medium, to repeat, medium is Mazgaon, Hitachi Energy, and low is Wari, according to JM Financial. So these are some of the ones I'm looking at. Just wanted to add, Neeraj, Ramkrishna Forgings, because this whole, what's happening with this company is very interesting. So their board meeting has revealed that there is an inventory overstatement in the company, and a 22,000 lakhs inventory overstatement for FY24-25, reducing their net worth by close to 7%. They intend to implement process enhancements and disciplinary measures. This company was in focus, if I'm not mistaken, because the company was buyback. There was a buyback by promoters
At 2100.
At 2100 for this stock, and then this comes in. So I don't know what exactly is going on with RK Forgings, but keep it on your radar today.
Yeah, could be interesting for sure. 3 stocks on my list, one of 2 pharma names, one positive, one negative, or maybe not so negative, but let's see. Syngene is the first one. Companies received an EIR for the Bengaluru facility. Remember, it's an important facility. They've gotten an EIR, Establishment Inspection Report. The US FDA certified compliance with good manufacturing practices for the facility, and the EIR concluded outcome as a voluntary action indicated or initiated. Now, in case this is confusing for you, an EIR and then a VAI, which is voluntary action initiated, is the lowest form of strictures passed by the US FDA. It's almost a positive, or in fact is a positive, and therefore you might see Syngene actually have a positive reaction in the session today. The second one is Valor Estate. Okay, let's pull that one up for you. It's received an NCLT approval to demerge its hospitality business, going to separate the hospitality operations into a new unit, Advent International. Shareholders of Valor Estate will receive 1 share in Advent for every 10 shares held in Valor Estate itself, and Advent will be a wholly owned subsidiary of Valor Estate. So this is a long time coming. I think the stock had reacted a little bit to it already. You probably see more reactions maybe, so keep an eye out for that one. I do want to mark Sun Pharma because US FDA has issued 8 observations to the Sun Pharma's Halol plant in Gujarat. Remember, for anybody who's tracked Sun for last 10 years, Halol was the biggest thing for Sun until it ceased to be so. And the inspection from the US FDA on Halol was conducted from June 2nd to 13, 2025, recently, right? And it resulted in a Form 483, 8 observations, which is large. Halol is an import alert since May 2022, so it doesn't contribute to the US business, but it's an incremental negative, sentimental negative. You might see Sun Pharma reacting a bit negatively, so keep an eye out for that. And Tamanna, I too have a 4th one, simply because Privi Specialty Chemicals is an interesting announcement. They say, the official announcement is that they've dropped the 1,000 crore QIP plan, citing improved financials and cash position. We are going to do a deep dive on whether the cash position and the financials have indeed improved significantly or no. But it's very rare to see a company make an announcement for a QIP and then say in 6 months or 3 months, the financials have improved so much that we don't need 1,000 crore rupees. So I wonder if there's also a bit of a lukewarm response here. I'm not saying there was, but we need to analyze the financial and the cash position in detail. But I thought this announcement was a bit intriguing. I suspect that the street may not take too kindly to this announcement, despite the fact that they have said that they are letting it go because they are better off. I suspect the street might not quite.
Look at it in normal parlance.
Yeah,
Okay,
right.
I have enough money. I don't need any more.
And just 3 months before they've announced it.
So have
should be
you
interesting.
tempered down on your growth plans? Would you not increase your strategy if you have more funds? Good, you're doing great, but why would you not want to raise funds? There are a lot of questions there, I agree. Just let's quickly go through the watch list for NDTV Profit and put it all together for you. So on the thumbs up side is an Arcade Developers. They've won projects with GDV of 2,000 crores. Syngene International, the US FDA has cleared their Bangalore unit. HBL Engineering, they have orders worth 164 crores. Watch out for that. Birla Corp has won a lease for Dhani Limestone Block. And Yes Bank, Moody's has upgraded its credit rating.
And SpiceJet, something that we highlighted, Q4 PAT up 12x QOQ, 7x YOY, second consecutive quarter of profits, may react positively. Like we said, Privi Specialties dropped that 1,000 crore QIP plan. Diamond Power, 117 crore order win, could be interesting. Adani Enterprises, the new company to manufacture ammunition, etc., being formalized. And Hyundai, UBS initiated coverage with a 21% upside. And in the case of Sun Pharma, like we said, in fact, both Tamanna and me said, maybe it was that important, but the Halol unit has gotten 8 observations. Now, before we get into a break, let's also take a look at the upcoming IPOs, because investors can anticipate, 7 IPOs this week, Mahima, including 2 on the main board, and 5 on the SME platform. Mahima, details please.
Right. So as you rightly mentioned, yes, there are 7 new IPOs this week that one needs to watch out for, 2 from the main board. Now, in terms of the main board space IPOs, the first one that's a new IPO is Eris Infra Solutions. The company is basically a modern platform that helps construction and infrastructure companies to manage their finances as well as their material buying. In terms of the details, it starts on 18th of June and ends on 20th of June. The price band is set between 210 to 222. Lot size is 67 shares and the issue size is roughly 500 odd crores. The next IPO that is already open is Oswal Pumps. The company is basically a manufacturer and distributor of pumps. In terms of details, it started on 13 June, but tomorrow is the last date for the IPO. The issue price band set is set between 584 to 614. The lot size is 24 shares, and this is roughly a 1387 crore IPO. Now, in terms of the SME IPOs this week, the first one is Samay Project Services. Well, this IPO basically, the company basically offers EPC services and specializes in balance of plant services. Now, in terms of details, it starts on 6th of June, that is today, and ends on the 18th of June. The issue price is between 32 to 34. Lot size is 4,000 odd shares, and it's roughly a 15 crore IPO that they're issuing. The next one is Patil Automation. The company specializes in welding and automotive solutions. The IPO dates, again, it starts today, ends on 18th of June. Issue price band set between 114 to 120. The lot size is 1,200 odd shares, and it's a 69 crore IPO. The next one is Influx Healthcare, where this company is a healthcare focused company specializing in contract manufacturing. In terms of the details, the IPO opens on 18th of June and ends on 20th of June. Issue price is between 91 to 96. The lot size is 1,200 odd shares, and the issue size is roughly 58 odd crores. And lastly, Maya Shield Ventures will be the last SME IPO, which basically constructs roads and highways for NHIDCL as well as government departments. The IPO starts on 20th of June, that is on Friday, and ends of 24th of June. The issue price is set between 44 to 47. The lot size is 3,000 odd shares, and this is a total issue of roughly 27 odd crores. So these are the few IPOs to certainly watch out for in this week.
Well, primary market action, block deals, etc., all hots up when the markets are active. This is certainly an indication markets are active. Time for a short break. On the other side of the break, we get you top trading strategies, fundamental investment ideas, and more. Stay tuned.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down. Cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered.
Welcome back. You're watching India Market Open, and at this moment, from all of us at NDTV Profit, we'd like to wish all of the dads out there a very happy Father's Day. Of course, it was on Sunday, but we're celebrating today. And let me also go to our guests in studio, Parag Thakkar of Fort Capital and Kush Vora of kushvora.com. Gentlemen, happy Father's Day.
Thanks.
And we asked you in advance to pick stocks that could go into intergenerational portfolios. We're calling it portfolio ka baap or baap or portfolio, something like that. But which are we picking?
So basically, I have picked the stocks from my portfolio itself, PMS portfolios. That is City Union Bank, Federal Bank, Remco Cement are some of the names. And one the advice which I would like to give to, of course, my kids also and other people's, the new people who are entering into market also, just don't get fantasized by a size of opportunity of a particular business. Most important thing in my view in investment is management quality, DNA of the company, balance sheet of the company, operating cash flows of the company, and leverage of the company. If you just focus on size of the opportunity, sometimes, for example, we know in past, in retail sector, for example, in real estate, we have seen various accidents, right? So, if you want to avoid them and see it is a 20-year investment, so then you have to be backing a financially prudent company. So sometimes, when I, for example, City Union Bank is a small bank, right? 53,000 crore loan book. But, it is a disciplined bank. After COVID, they realized that their customers are not doing well. They slowed down. They took their time. Now also, if you read their interview, they are saying that we will not increase our loan to value in gold by 85%.
Your kids take your advice. They listen to you on investments. I think that is the asli question.
Or is ghar ke murge dal
they take my advice. So, and they are also passionate about stocks. So, yeah.
So what are the top 3 or 4 things that you have, said unke liye portfolio mein hona chahiye?
So these are the stocks which PMS, so I have skin in the game. So these are the kind of stocks. See, as I keep telling, either earnings should be at the bottom or valuation should be very reasonable for a high quality franchise. Those are the 2 things which you can do. And of course, please keep some cash in your portfolio because things are very, very volatile. Every day something or the other happens. That cash helps you generate very good returns when you buy during those dips.
How much cash are you keeping right now?
Right now, I'm at 10-11%.
Okay. Okay.
So that cash actually acts as ammunition when there is a big dip in the market. Of course, right now, because of the lot of liquidity in the domestic mutual funds, the dips are getting bought into very quickly, and so you don't get enough fall in the market to deploy that cash effectively.
Kush, are your children old enough to trade?
I am, and I'm about to teach them.
Old to you, Alex?
Which is why I asked.
No, but my son occasionally has told me, Papa, ye paisa market mein invest kar do, whatever he gets as birthday kitty or whatever. So because he knows he has a portfolio and he's had one since, but he was 1 year old or something. So yeah, he knows.
How old is your son right now?
He's 13. And we've played our first cricket match together, leather ball. He's played for my team. So yeah, that old, he's already...
But Warren Buffett invested at 11. You can start him off.
That's what I said. I mean, he's perhaps a little too late for starting out himself. But yeah, I mean, he's had a portfolio all since, as I said, he was perhaps 1 year old or something.
Have you started giving him advice?
Always, every day. I mean, if you mean investing, that's a different story.
That's
but
what I'm talking about.
But otherwise, yes. I think he sees us do a lot of those things and he emulates. While it's a little too early for financial advice, and this is right now more formative year, so more values and those things. But I'm sure we'll get to the financial bit also gradually. Yeah,
what are the top 2 or 3 stocks you've put in your portfolio for him?
Nestle, top of the mind, is it was the first stock that we bought for him. And imagine, about 10, 12, 13 years, right? So it's already been a multi-bagger for him. Bajaj Finance was another. So these are a couple of stocks that are already there and sitting in his portfolio. So yeah, he's not complaining.
And you plan to keep them?
Absolutely. In fact, I plan to, invest in those and a few others for my daughter as well, who now turns 3. But yeah, why not? But that said, even for those fathers who've not really started out a kitty for your kids, let me just give you a doha that my dad used to tell me, which in Hindi, just poot kapoot to kyun dhan sanche, and poot sapoot to kyun dhan sanche, which means that if your child has good values or bad, why are you still going out and parking a kitty aside for him? If he's not the right person to manage that, he'll probably wash it down the drain. And if he's got all the right values that you've passed on to him, he'll perhaps build his own. So the point is that don't feel that thing about we've not started, but it's not a suggestion to not start. Please do start and have a kitty for your kids as well. Yeah.
Okay. Kush, let's get to advice for the general public, not just keep it to our families. So, for this morning, it's looking like a good morning, I think. We spoke on Friday's close as well, and we talked about how the way the markets ended on Friday with some element of strength, you could see long positions come into play today.
Absolutely, and we did discuss this, right? But just one last quick bit. No Father's Day celebration is ever complete without a dad's joke, right? So just a quick one. It has to be.
Yes,
just a quick one. So why did the dad sit on the remote?
So that nobody else would change the channel from NDTV Profit.
Nice segue. But no, because he wanted to control the situation. And now if I have embarrassed my son enough already on national television.
I hope he is not watching NDTV Profit at 13. Actually, I hope he is.
He will watch this clip for sure, I can guarantee.
We want to catch them young. Oh, great.
But speaking about controlling the situation, a lot of parameters which are not in our control at the moment, and especially the geopolitics, right? And we know that will dominate the news flow and also the market moves. But I take heart from the fact that, as we discussed on Friday, markets rebounded from day's low, which suggests that there is still buying, there is still some appetite for Indian stocks at lower levels. That I believe will continue for the week, for the coming couple of weeks as well. What's happened is that the PCR is already oversold. It's close to 0.68 for the Nifty, 0.7 for the Bank Nifty, which means the room on the downside is perhaps a little limited, and you will see short covering come in rather immediately, again, like we saw on Friday. What is a little worrying is the fact that the FII positioning is still about 81% short, and that hasn't moved, neither in terms of percentage nor in terms of the contracts, which means despite this kind of fall, they are not even covering their shorts. Perhaps they know a little bit, a little more something than we do. So I remain a little cautious, but cautiously optimistic. While there is support for Nifty at 24,400, 24,500, and we will see a rebound, I think 25,000 is a stiff resistance for Nifty to cross. So I don't see a V-shaped kind of a recovery. But nonetheless, if all the news was aside and if I was just looking at my charts, I would take this as a froth coming off kind of a move. and the base for the next leg of up move. That could happen as in when the news geopolitically subsides. But I would still go out and accumulate on a dip like this that we're seeing, especially in this mid space as well of the markets.
And what are the stocks for the day, Rikush?
On that optimistic note, still going with 2 longs, although I do have my short candidates list also prepared. But for now, we're going with 2 longs. SBI Cards, what a phenomenal move on this one, and has been making that for, I think, all of this calendar year. Smart recovery on Friday, a close in the green as well. So on the way up, 1022, 1035 are your targets. 992 is where you place that stop loss. And the other one is Senores. This too has had a very good recovery, and as we usually do on Monday, we see things from a weekly lens. For the last 4 weeks, this has made a higher high formation. That's a very interesting, formation that you're seeing on Senores. This upward momentum could continue for 580 and 605. Stop loss being at 530.
Okay. Parag, a lot of pharma stocks in news. Syngene has gotten an EIR. Sun Pharma, the whole facility, not contributing, but 8 observations. Any thoughts on these?
So basically, we would continue to hold small positions in pharma. We have little bit of Sun Pharma, and this Halol plant is actually, as you rightly said, it is not going to affect much. And the domestic business is doing well, and specialty US pharma is also doing well. So that should be okay.
But Parag, the fact that for so many years Halol has been under a cloud and they're still not able to resolve it.
Yeah, it's a surprise.
Largest pharma company.
India's largest pharma. Yeah, I completely agree with you.
Yeah.
I completely agree with you. So we have Sun Pharma, we have Indigen, as I told you last time, recently bought in our portfolios. So we are equal weight in pharma. I would say, and see, one thing which I would like to allude to is that right now the situation is such that you, apart from 10% or some cash in the portfolio, you have to buy quality stocks across the sectors. Because someday some sector will run because of the sector rotation, because of the macro things which, for example, IT recovered nicely on Friday, right? So we have equal weight position in IT also. We have recently introduced Wipro in our portfolio. We had HCL Tech, TCS and Emphasis. We introduced Wipro in the portfolio, 4% dividend yield, 7% cash flow yield. And the expectation set by Wipro for Q1 is so low, minus 1.5 to plus 0.5% growth. So I would say that it's okay. If the tariff thing settles down a bit, you will see some recovery. So apart from banks like City Union and Federal, which I am very bullish on, and today there is a news that SBI has cut savings rate by 20 pips, which is a surprise actually. And because of this excess liquidity given by RBI, and I think the demand for money is not there, banks are cutting saving rates, deposit rates very aggressively, which will cushion their margins.
So you see it as a positive for SBI this morning?
Sorry?
And you see it as a positive for SBI
Yeah,
this morning?
I see it as a positive for all the banks.
Okay.
Because
maybe
SBI
banks
cutting
which are
saving
been
rates.
suffering will see
SBI has in the past said that they will not cut saving rates, and they have cut saving rates by 20 pips today. That is a positive in my view. And apart from the deposit rate cuts which they have already done.
Yeah.
Right? So City Union Bank also said that, for example, they converted their gold loan portfolio, which was 25% of the portfolio, to fixed rate last year. So such dynamic steps, plus this deposit rate cuts and saving rate cuts will cushion the margins. So although Q1, Q2 will be affected, but at the end of Q4, they will be at the same margin. Most of the banks, like City Union Bank has said on the media, that it will be back to the margins as per last year. And plus there will be 15-16% growth.
That CRR cut also will bolster.
Yeah, that's right. And you have a 15-16% growth, you have a stock which is trading at 10 PE and 1.2 times book for 1.5% ROA. Plus, they are building a secured retail book in LAP, which is high yielding, which has crossed 1,000 crores, which is growing at 20% plus. And they have a CD ratio, which is 83%. So there is operating leverage also. They can go to 86%.
You're talking about City
Union Bank.
Okay.
Okay. Staying with the BFSI space, Bajaj Finance is rewarding investors with a stock split and a bonus issue, transforming 1 share to 10, aiming to attract more investors with a lower price point. Harsh joining in with all the details.
Well, yes. So first off, it's going to be a stock split. Just the mechanics of it. It's going to be a 1:2 stock split where a shareholder owning 1 share will now receive 1 more share as part of the stock split arrangement. And then you have a bonus coming in where a shareholder holding 1 share gets 4 more bonus shares, which means that both of those effectively means that if you hold 1 share of Bajaj Finance, you're going to receive 9 more shares, or your shares are going to become 10x. The close price of Bajaj Finance was 9,334, or rather 9,340 rupees. Apologies for that. 9,340 rupees at close on Friday. The implied price, therefore, on the 10 shares that the shareholder ought to receive is 934. Need to wait and watch what this one opens at to kind of understand the gains, if any, as a result of this.
Okay, thank you for that, Harsh. I just have another question for you, Parag Bhai. With the kind of escalation that we've seen over the weekend between Iran and Israel, and the fact is that it's not that India is completely devoid and not vulnerable, but you're not seeing that reaction at all. I just want to pull up the implied open. You're not seeing it in Dow futures. You're not really seeing it in crude prices. All right, 75 ke aaspaas,
sure,
but no big shocker. What is the collective thinking on this?
So collective thinking, I would, so I was also surprised a little bit. So I checked with a few of the analysts, oil and gas analysts, which is because oil is where the pain for India lies, right? So we have to keep an eye on oil. If it crosses 80, definitely there'll be some, and that is why we are maintaining cash. So I would say that people are saying that Iran does not have that kind of, because a lot of their exports go to China through the Strait of Hormuz. Where 21% of the global gasoline is transported. So they cannot shut it because large portion of their revenue comes from their exports to China, of course to India also, sometimes to India, mainly to China, through that Strait of Hormuz. So they cannot shut. Plus a lot of their essentials they imported also, that also comes from that route. So I think market is not right now going into the narrative that anything will happen with that particular Strait of Hormuz, and which will disrupt the oil significantly. And up to 80 is okay for India, in my view. Between 65 and 80 is it's okay. It should remain below 75. But above 80, if it crosses, then out of all 7 India's macro things, which are fantastic, 2 gets disrupted: current account deficit and inflation. And that is a problem, but I would say that let us keep our finger crossed that crude oil doesn't shoot up too much.
Yeah. I'd already seen pairing out, frankly, in terms of the action that we saw. Friday, you saw a 13% jump, has paired down a fair bit. I just want to talk about one stock before we hit the break, and we'll come back, of course, with more. And I'm going to come to you, Kush, on the charts on this, which is SpiceJet. In terms of their numbers, and there are one time, it's all of that happening, but highest profit in 7 quarters. Expect some reaction over there. What would you say in terms of an investment idea today?
So, Tamanna, for the longest time, SpiceJet has been on my avoid list and continues to remain there. I mean, there isn't much suggesting that there is a massive uptick from here. The risk-reward ratio seems extremely exciting from here, but then that has to be coupled with the price action. So right now it took resistance at the 44 mark, which is also the 20-day moving average. Then on the upside you've got 45.5, which is the 50-day moving average. There will be some resistances along the way, despite the kind of spikes that it has seen in the recent quarters. It's always come back to this 40-45 zone. So unless it breaks this and comfortably settles above that, I wouldn't really be too excited about it. I mean, if you have it, the only silver lining, as I said, is the 40-41 zone is a good support zone and tends to rebound from there. In the past 5 months or so, it's rebounded about as many number of times from that level. So I think the bottom formation activity is happening. The uptick momentum is missing. Once it crosses 45, 46, closes above that for a couple of sessions, maybe then you could consider. But for now, just put it on the wait and watch list. I wouldn't really advise entering it just yet.
What did you make of the numbers, Parag bhai?
So basically, I have decided that I will not track some of the companies. Okay, like for example, when I tell banks or financing institutions not to, they should learn to say no. Like HDFC and Kotak said no to infrastructure loans in 2007-8, and look at the returns. So basically, that is, so Indigo is a survivor in airline because during COVID time also they were debt free. Right. So, and look at the wealth created by the companies which were debt free or which had very low debt. JSW Steel in steel, right? Bharti Airtel, in spite of intense competition, voice going free, this company survived and thrived. Yeah. Right? Indigo in airlines. So that way, I'm always backing those companies which are strongest in terms of their balance sheet during good times and bad times.
Yeah, and you can only.
So you said no to even tracking this company.
Yeah, because Indigo was a clear survivor and we knew that Indigo was thriving. So, so net debt to EBITDA is a number which I see. Of course, I have not seen for SpiceJet, I should confess that. But net debt to EBITDA is a number which I see. If it is above 3.5x, it is out of my coverage.
It is about 3.5x. So
Yeah.
let's park it.
And you can only track a certain number of stocks, right, or companies. But we are going to talk about more. After this very quick break, we'll bring you the pre-open rates as well as more stocks that you should watch out for and trade. Do stay tuned. This is India Market Open.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
All right. Welcome back, and we're just very close to the pre-open session. Remember, we likely start off in the positive. This was probably unthinkable after Friday and all the developments that have happened over the weekend geopolitically, but we are starting off positively. Come on, Israel markets ended in the green with the defense sector leading them higher. So no surprise that this is happening. The only question is that, only point is that until that happened, it was almost unthinkable. Implied probably 74 points higher, we'll probably have a start in the green. The question only is that what happens later on. I mean, let's ignore this 3.5% downtick on the Sensex for the time being. I think maybe look at some of the individual names and try and figure that out too. While we just wait for the rates to settle, one question is on real estate, right? The perceived prime beneficiary of a rate cycle which is headed lower. Now, Parag Thakkar, the RBI has done what it has done, but there is a bit of a flare up in crude. Maybe temporary. Yeah. So a lot of moving parts, of course, but is the cycle looking down, and therefore, is it a good time to buy into real estate stocks now, or if there is a dip because of all that's happening around us?
Yeah. So basically, as we discussed last time, and I keep focusing on rate sensitives, which are again prudent. So, we discussed last time over a reality, arcade developers. And these are some of the real estate stocks which we had in the portfolio. We have booked some profit, but definitely on dips I would like to buy them, because as you rightly said, the interest rate cycle, apart from leaving aside this last 4 days of geopolitical tension led move in crude oil prices, I would say that over a period of time in second half, real estate companies should see. But there also, see again, I'm not actually saying that it's a macro call. Again, it's a bottom-up call. Wherever there is a financial discipline, wherever the companies are rightly choosing for example, Arcade has done a deal with this Thane land acquisition of 6 acres at 173 crores. It's a very good deal, right? The GDV is 2,000 crores. So I would say that in past they did Goregaon land, I think it was 6 acres or something. That was also a very good deal. So on one hand, company is debt free, doing good deals, financially disciplined promoter with very high promoter stake in the company, unpledged shares, zero leverage on balance sheet.
Are the valuations comfortable? Would you buy today?
Yeah, 3,200 crore market cap. See, when I met Oberoi first when the stock price was 260 rupees, I felt people were saying that it is only a Bombay play. What is the size of opportunity? I was saying he's a disciplined promoter who has shown his execution. That is, same goes with Arcade. I'm not saying Arcade can become 60,000 crore market cap company. That much foresight I don't have. But I'm saying that remain with good promoters who have skin in the game, who have very good resources in their hand, no leverage or very less leverage, I would say, and then ride it on. You know, the size of opportunity will evolve itself.
Yeah, I must say though here, viewers, that the MMR or the Mumbai Metropolitan Region market size annually is probably 2x or combined market of 2 or 3, number 2, number 3, number 4 combined is not as large as MMR. So MMR actually is virtually a market unto itself. You can't think of it as a small market, so bear that in mind. But Kush, anything on your radar? Amongst other stocks, a Mumbai-based Valor Estate, which was in news today as well, was up. Is that a good trade? Is Arcade Developers a good trade? Because that is also in news today.
So Oberoi is a common trade between Parag Bhai and I, and we've recommended Oberoi Realty on the channel as well about last week a couple of times. Now even better with the 200-day moving average crossed and sustained. So that's a common trade. But Valor Estate, yes, I mean the 3 stocks that in this sector that have been on my radar and we've given them out as calls are Oberoi, Valor Estate, and Brigade Enterprises. All 3 have done well, and I do credit Alex and Ask Profit, for actually putting Valor Estate on my radar. If you'll recall, it was a viewer query, and it's done rather well. Even now, if you see, it's agnostic of what the rest of the market is doing. Price action, volume action, both fantastic. You should continue to hold. In fact, you could look to add as well. As far as Valor Estate goes, on the way up now, it's coming close to the 245, 250 resistance zone. But once that is taken out, the rounding bottom formation resistance will also be taken out, and you're actually looking at targets of 270 and then about 285, from a momentum trade perspective. Stop loss on this one close to the 225 mark.
Very quick question on Arcade. Would you buy today? Fundamentally, according to Parag Bhai, it is something to look at.
So we had bought at a lower price. I would not say, I'm not recommending to buy at current
fair
price.
Point. But it's on the charts?
I will perhaps wait. There's a negative divergence playing out. Nothing to say from a medium-term perspective. It's done phenomenally well. From a near-term perspective, perhaps some consolidation. So 195, 197 zone, if that is taken out, you will see further momentum build up. That's from a very near-term perspective, perhaps a day or a week or that kind of a time frame.
So, okay, let's take a look at the big brokerage call of the day. And this is a stock which is seeing a lot of brokerage attention recently. I'm talking about Hyundai. UBS has now initiated coverage on Hyundai Motor with a buy rating. Harsh joining with more details.
Well, yes, and a 20+% upside as well. So 2,350 rupees is the target price that they've given to Hyundai. In terms of what they like, first one, it's the second largest PV manufacturer in the country. So already has a decent market share, but they're optimizing. And that optimization is likely to start to play out going forward, especially with the start of the Maharashtra plant is what UBS is saying. This will increase overall capacity by 30%, will bolster domestic as well as export growth. They're expecting FY26 to 28, the domestic volume growth to be at 10% versus the 2% number between FY19 and FY25. So that is expected to substantially drive growth going forward. How will this happen? One is gaps in portfolio likely to get addressed. You're going to have new launches which are going to come through, and there's also dealer network expansion which is happening. They're expecting a 16 to 18% EBITDA CAGR over FY26 to 28. The risks being over-reliance on the Creta as a product and missteps in future launches, which is the new launches which Hyundai is expected to make.
All right, Harsh, thanks so much for that. And it's an interesting take on a stock that has underperformed, to say the very least. It is up about 4.8% or thereabouts. But if we have the metric on move since the listing and the change from the issue price, if we can, it's not really done too much. Parag Bhai, quick view on Hyundai?
So we discussed last time, right? That I bought on the day of rate cut. at around 1835. So, because see, I like to buy this kind of, that is what my theme is, right? Net cash of 12,000 crores in the balance sheet, very high ROC, no short-term trigger, but I took a call that market will take this narrative that if rates are going to get cut, you have to buy some auto company, and all the other auto companies have moved up. Right, like M&M and all. So basically, M&M, TVS, which are my favorites, had already moved up. So I thought that let me latch on to this particular stock. I'm lucky that now all these reports are coming. But say 5 to 6% cash flow yield for a good brand who understands India's consumers. Right now, they don't have capacity. Only 91% capacity utilization is going on. They'll start their plant in Q3. And by that time, I would imagine that because of lower interest rates, car demands will pick up.
But you're not worried about declining market share and the reliance on one particular...
I don't worry about declining market share. That, let me tell you, if financials remain robust, I don't remain too much worried about market share, because right now they don't have capacity only. Let the capacity come, let them bring the new products, refreshes in the market. Then we'll see that whether they are able to gain back their market share. Right now, they are at 91% utilization. Why should they go after market share? They should go after profitability, which is what they are doing. In the March quarter, they withdrew some of the discounts, and so then profit margins went up.
Yeah.
Capri Global in focus after their fundraise details have come up, and I wonder if you can pull those up on the screen as well. That stock in the pre-open session, pre-open rates have now settled in, is seeing a bit of a hit. RK Forgings we told you about, and really curious case there on RK Forgings, where the company now comes and says there's this accounting discrepancy. We just added too much inventory in our books. Strange stuff happening. That stock under a bit of pressure. So is HDFC AMC this morning. You're probably going to see a few of your paint companies also see pain. Indigo, Paints, Berger are some of those that you could look at. But what's also working this morning, and I just want to quickly go for that after the pre-open session, look at a Bajaj Finance. And I think we should get a quick view on a Bajaj Finance. Yes, the stock split and the bonus shares is what's exciting. But in terms of the record date, I mean, does Bajaj Finance make sense right now? Parag Bhai?
So I am playing it through Bajaj Finserv right now. Bajaj Finance, I already captured. Luckily, I was able to get move. Bajaj Finserv, I am because see, remember one thing, when Sanjeev Bajaj said that I am going to buy 25% stake from Alliance at 24,180 crores, he is actually thumping the table and saying that my insurance companies are going to do very well in over next 3 to 4 years by the time he lists it. So now, when they get listed, Bajaj General Insurance and Life Insurance, then Bajaj Finserv will have 75% stake in them. So that value will get unlocked at that time, plus the 51% stake in Bajaj Finance itself, which will also grow. And where again there is a tailwind, right? The cost of funds are picking out, the credit cost will pick out over a period of time, hopefully. So I would say that it's not a cheap stock, but a high quality stock. So I am saying that holding it through Bajaj Finserv makes more sense right now.
Okay. So Bajaj Finance in focus, and just a few minutes left to go for markets open, but very interesting story that we have Hiral with us for. India's top marquee investors are placing significant bets on emerging and turnaround markets for FY26. These investments reflect confidence in sectors and companies poised for growth. My colleague Hiral has that list.
Thank you so much. There's interesting names that we're picking up with regards to their $1 million buys from here on. Few of the names, let's just quickly highlight them. We're talking about Kedia Securities, which is owned by Vijay Kedia, Samit Vartak of Sage One Investment, Madhu Kela of Singularity Equity Fund, and Ashish Kacholia. 4 of them have looked at a couple of stocks in FY26. Firstly, let's look at Advait Energy. That's where Vijay Kedia has gone ahead and bought 0.93% stake, and the value was around 17.2 crores. To be noted that these are just new entries that have been made so far that have come in. Earlier shareholding patterns do not really reflect their names so far as well. Moving on, look at a Shankara Building Products. That was another one where you have Samit Vartak of Sage One Investment Managers. They've gone ahead and bought 1.23% stake at 27.8 crores. Madhu Kela also is another one who's come in and bought Shankara Building Products. He's picked up 1.89% stake, and this is through Singularity Equity Fund for 42.6 odd crores. And very lastly, you have Som Distilleries and Breweries. That's another one where Ashish Kacholia has gone ahead and bought 0.82% stake in the company at 9.98 crores. That's the deal value. So these have been the major ones where marquee investors have looked at smaller names right now. And what's interesting is these are all small companies in terms of market capitalization. So no big bets yet coming in from the deal size perspective.
Okay, so the names are interesting. The names are interesting because it also gives you a sense of the kind of stock picking that large investors are doing. All right, just about 4 minutes to go before markets open this morning. Kush, what are you spotting after the pre-open session?
There were very interesting moves on Max Healthcare. This was a call that we gave out last week. Friday action was extremely encouraging. The volume actions have picked up today. Also, you're seeing a further uptick on Max Healthcare. If I did buy this, last week, basis the conversation that we had, I would continue holding on. If I didn't, I would still consider a fresh entry with a stop loss around the 1220 mark. On the upside, you're looking at 1275, 1295 as your next targets. Very solid moves on this one, especially in a market which is volatile to say the least.
I want to ask about Shipping Corporation of India, one of the big movers on Friday, for obvious reasons because freight rates are going up amidst this conflict. It's up 3% or thereabouts in the pre-open session. What is the potential upside from here?
So, Alex, the way I like to read stocks is to see what were they doing before a key event as well. You're right, on Friday these stocks were in the limelight. But if I actually dial the clock back, go back about 8 to 9 weeks, Shipping Corporation of India has been in this bullish kind of a setup, on a weekly basis for the last 8 to 9 weeks. What's happened on Friday is perhaps giving that fillip and giving that thrust for it to break higher. But the base formation was already there and the up move had already started. So on the way up, I am actually looking at 250 and 265 as the next targets. Mind you, these are positional targets. And, on the downside, support comes in close to the 220 mark. So that should act as your stop loss. But very good moves. And as I said, it started, way before the Friday big move came about.
Okay. From the broader markets, I'm curious about what you're making of some of these AMC plays. Parag bhai, do you have coverage on them? Do you look at them, for example?
AMCs are fantastic business.
So therefore, HDFC
it generates
AMC,
cash.
Great. So, and the story is untapped. A lot of people are speaking about that. HDFC AMC down about 5.5% in pre-open. If that is the case, would you use opportunities, or is that a good opportunity?
No, I'm not looking at buying some of these names because a lot of these stocks have done very well. Plus, there's a lot of, I would say, competition also coming. So I'm not looking to buy in this way. I like the business, but so when I bought HDFC AMC when there was a block deal where Standard Life sold the stake at 2,000 or 2,100. But right now, I'm not looking at buying in this space as of now.
Okay, well, 30 seconds left, and keep an eye out for a clutch of rate sensitives for sure. Keep an eye out for oil upstream for sure, because oil prices have only inched higher. Keep an eye out for gold, because gold is at record highs in India, so that might be an interesting one too. Of course, you can't necessarily trade it here on the markets, but an ETF maybe, sure, could be a shoo-in. But yep, the dips could be fairly swift too if the conflict gets resolved soon. We hope it does, by the way. But here come the first trades this Monday morning, right here on the Indian markets. Flat, absolutely flat. So we don't have that 70-point uptick that the implied open was suggesting, but we are not cracking. That is part one. Let's see if this picks up. IT, which recovered smartly in Friday's session, flat currently. Broader markets come up on your screen next. Mid caps flat, small caps I reckon would be flat. It's an absolutely flat start. Let's get the heat map up on the screen. Maybe the oil upstream companies might be okay. Nothing dramatic, but ONGC is up 0.8%, giving it companies power grid actually. And Bajaj Finance with all of those corporate actions, bonus and stock split. Frankly, I don't quite understand about a stock split really getting investors excited, but a bonus, sure. Bharti, Cipla, Shriram Finance, Hindalco, Asian Paints are some of the others. On the flip side, Sun Pharma starts off lower, 0.66%. Adani Port is the second one. Kotak Bank, Coal India, Dr. Reddy's. Not too many losers, more gainers. And as I hand it over to Tamanna, keep in mind, viewers, the market is just starting to pick up a little bit of steam. Now the Nifty 50 resembles what the implied open was suggesting. Keep an eye out for Bharti as well. It's perking up and is now up about 1%.
Not a big boost, I would say, but definitely, no big fear seeing seen either on what has been happening in West Asia over the weekend as well. Watch this. This is an important one. The India VIX down about 1.5% or close to 2% is telling you that there's no big fear in the street right now. Let's pull up the broader markets and get a sense of what's happening there. We'll start with the mid cap 150, about 0.25% up. The small cap 250, about 0.5% up. Actually doing better. The broader market is doing better than what you're seeing on the Sensex and the Nifty right now. Let's pull up the sectoral indices and see what's happening there. Keen to know what IT is also doing. IT, remember, was up in Friday's trade, but you're seeing defense stocks up, and we talked about this on the show when we opened today, that would you see defense in focus once again, like in Friday's trade, when the region itself is going through this kind of turmoil. CPSE, public sector stocks are up, small cap 250 also doing fine. No major theme coming in there. With Nifty Media, I reckon, and we'll pull up Z in a bit, maybe that is also pushing up the Nifty Media index, because there's a board meeting today to decide on fundraise. So that's one of the stocks that should be on your focus. Banks not doing great for second day in a row, even after SBI has cut its savings rate. Auto stocks are also pretty much languishing, but this is not a bad screen. This is largely red, with PSU banks completely flat. I would say a pretty decent Monday morning considering what's going on in the world right now. But let's look at specific stocks and give you a sense there. And I just want to revisit Bajaj Finance. It's interesting that a stock split has got the street happy. Investors like stocks with a smaller quantum of a selling price, perhaps that's why. About 0.25% up. Swiggy, we talked about, and interesting to see what Swiggy is doing. There's hope of an MSCI inclusion which will come in August. Nothing much this morning. SpiceJet is something that we're tracking, inching towards profitability. In fact, profits after 7 years, 2.5% up on the stock. Sun Pharma has seen new observations from Halol, and we looked at it on the Nifty, but let's revisit. About 0.5% down right now. Hyundai was our big brokerage call of the day that we talked to you about. UBS has initiated coverage with the buy rating, about 2% up, and that's pretty much the range of movement actually. RK Forging, discrepancy in their accounting system has put that stock back in focus, about 1% down right now. Let's look at the crude sensitives, Indigo, Berger, Asian, all of them seeing a bit of a middling kind of a reaction. Asian Paints actually up in the green right now. Likewise for HPCL, BPCL and Oil India on the downstream. Actually, there's clearly no concern about crude prices in India right now, even at 75, which is heartening by all extent. Yeah.
Absolutely. Shipping Corporation of India, I do want to point that out as well. Big move on Friday. It is moving up today as well, 4.4% higher. And just on the point on Bajaj Finance stock split getting people excited today, a lot of small investors can सीना तान के they can say मैंने 100 शेयर खरीदे Bajaj Finance के. But specifically on something like an Eris Life, which is up about 5%. Kush, this is one of the buzzers in trade today. Is there potential upside?
Again, one of those stocks that we have discussed time and again in this space. Very big moves for the last 3 weeks on this one. Now is the time to actually start booking some profits. It's already hit overheated territories, while the momentum can well take it further to about 2000 territory and higher. I think from a near-term perspective, you're better off booking it partially and holding the rest. If you realize, this is the theme that I've mentioned for a lot of stocks in the recent past as well, because of the momentum play. If you didn't do that, you would have perhaps missed out on a lot of money-making opportunities in this mid space, especially in the in the defense stocks, which just kept running higher. That's why a partial book, a book profit is advisable on Eris, and then you want to hold on the rest with a trailing stop loss around the 1850, 1845 support zone. So yes, good moves today. Also, that continuation is seen. Volumes, however, might start thinning as we saw on Friday. So take some money off the table, hold the rest of the quantity with a trailing stop loss.
Okay. Let's also pull up an IRIDA to see what it's doing in trade today. Of course, the stock was in the news at the end of last week on account of Gensol. It's a plea being taken to the insolvency court. The stock is up about 1.4%. Parag bhai, I'm just wondering whether you're looking at this in the context of PFC, REC, IRIDA, all three of them, which according to you would be the best pick fundamentally?
No, I would say that, see, basically I have avoided this space up till now because renewable is not the space where the business model is completely established. And that is why I am not taking too much of interest in these stocks. But of course, on the face of it, the valuations wise, the stocks look attractive. The dividend yield in some of the stocks like PFC, REC are very good. But it is just that I don't have circle of competence to understand this space too much. So I have always in the past in NBFC space, as we speak, Aditya Birla Capital,
Retail focused,
Bajaj Finserv, and of the housing finance companies like India Shelters of the world or Aadhar Housing or Abbas. Those are the spaces where I have invested.
Okay. Point well noted. IT is kind of moving again, if you will, and if you can get the individual components of Nifty IT, you will see that, I mean, a 0.6, 0.7% upside for IT, and I think Parag Thakkar spotted it as well, pointed it out. But Kush Bora, very quickly, would you trade the large names, HCL, TCS, etc.? They've shown sparks, or you would avoid them? Upside or downside?
No downtrade on these, no short trades on these, because if you see what the Nasdaq has done, it's had a good run, and then we've seen a rub-off effect on some of these names. But despite that, I mean, these names have failed to give you that breakout. The only stock which I think even Parag bhai discussed, and we discussed it last Monday, is the dark horse, which is Wipro. Even that too is now coming close to the resistance of 265, which is the 50-day moving average, and then about 270, the 20-day moving average. So I would look to book profits here, or hold it with a trailing stop loss. If you do want to, however, trade, you are better off with some of the mid-cap names of the world, and same ones continue, the likes of Persistent and Coforge doing well. You could perhaps add a Birlasoft as well to that. But for now, Persistent and Coforge are at top of the list.
Persistent, Coforge on our list. FDC is jumping today. They make various things. Pharmaceutical company also makes Electrol. That is up. Maybe the monsoon is expecting more demand for them coming in. Sterlite, again, doing very well. And PI Industries. There's this interesting note out on chemicals. And maybe that's having some impact over there. So some movers there. Cochin Shipyard also moving. So is Garden Reach. So that defense theme continues. Shipping Corporation of India also up today in trade. But I want to thank Kush and Parag bhai today for joining us in the studio and giving us their views. And we started off the conversation with both of you with a theme on a message for your kids for Father's Day. And yes, it was on Sunday. And we have a very interesting segment right now. We have Ashwini Agarwal, founder and partner at Demeter Advisors. And we're joined by his daughter, Antara Agarwal. She's just graduated as a Master of Law in the United States. Antara, thank you for joining in. And Ashwini, thank you so much for doing this for us. And, we thought of this segment in the context of what would be the kind of portfolio you would build for your child? What would be the investing advice you would give for your child right now? So let's start with your thoughts on that.
Thank you, Tamanna, for having me on this show and making it such an interesting sort of thinking program for young parents and, of course, for young investors. So, at a young age, what I would encourage Antara to do is basically use equities and think long term. I think compounding, as we have learned, is the best friend. And if you buy good stocks which appeal to you and just hold on to them for 15, 20, 30 years, that has a huge impact on wealth creation. And the earlier you start, the better off you are. There's no point, keeping a lot of debt, barring some small liquidity that you might want to protect yourself with, and allow the money to compound would be my best advice at this point.
Hi. I'm curious about how young you were when you first heard this advice and how much of it have you already put into practice?
Hi, so thank you firstly for having me. This is really, really special. I think I've grown up seeing my dad go on TV very often. So for me to be able to join him is really, really special. He's been telling me stories, I think, since I've grown up. But I remember one of the first things he told me about investing is to invest in products that you believe in, products that you use every day, and things that you think the world needs. And his favorite story to tell me is, when Apple was just starting out, I remember my dad was a big fan. He came back with the iPod, the brick iPod that we used to have. And, we bought personally a lot of Apple products as a family, but, for whatever reason, Dad said he never invested in it. And this is one of his big cautionary tales. And I think that's the first investment story he ever told me was, to invest in things that you believe in and things that you think that the world uses, which is, what's going to grow. So I've been hearing this since I was fairly young.
I'm sure that's helped you in a way. They say that child is the father of the man. Antara, good morning, Neeraj here. I wonder if you dispense some investing advice to Ashwini himself.
Okay, so turning his exact words back on him, when COVID happened, I remember it was my last semester of college and all of our classes were going on Zoom. And I do remember calling him saying, Dad, there's this new product called Zoom. I think we should invest, think about it. And he apparently didn't. So, I've been trying. I've been trying.
So, the beauty about that advice is that, Antara, that Ashwini could tell you that, okay, I missed it at the first instance, but I'm glad I didn't, because look at Zoom prices right now. But Ashwini, great of you to get Antara as well. And here's the deal. I mean, what we're trying to understand is that one is that advice that you give to your next of kin at any given point of time, but two, about timeless advice or timeless investments that you do for your next of kin, independent of the fact that Antara might tell you that I don't need your money, but I'm sure as a dad, you do that, right? So how do you think about investments when you do them from the perspective of what you would bequeath, Antara?
So there are two parts to it. I mean, I think about earning a compounding rate of return on the assets that I have, and it has multitudes of stocks, and each with a different risk return profile. But the core of the portfolio for the longest time has been stocks which have been held for the long term. A lot of them have been consumer stocks. So very early in our careers, my wife used to work for Johnson & Johnson, and she said, I'm interested in buying this consumer stock. So we bought Britannia, we bought Pidilite, we bought ITC, we bought Levers. I'm talking about late 90s, mid to late 90s. Obviously, the money that we had was very little back then. But these stocks have multiplied over a period of time and are worth a lot of money. So the thing is to find consistent compounders. I mean, this term has been used a lot in recent past, and some of it doesn't kind of appeal to me. But I think there are businesses that do really well. So, one of the core positions I have, and not recommending it to anybody out here, to any of your viewers, is NSE. I was fortunate enough to buy shares of privately listed NSE a while ago. And I think, these are businesses that you just buy and you just sit on them, and they compound over a period of time, and they keep delivering because, it's a market leader, it's a serious mode, generates oodles of cash. Valuations, looking at valuations and pressing the trigger on them can be a mistake.
Yeah. Antara, my question's for you. And once again, it's so refreshing to hear this kind of a conversation for us, and I'm sure for our viewers as well. Do you sometimes wonder that you are in such an uncertain world, and you are a young person in such an uncertain world trying to figure out a plan for the future? What is that one big question you have and you'd like to ask your dad right now?
Oh, that's a good question. I think this sort of relates to his long-term strategy that he was talking about, just a minute ago. But I think when you're facing, right, an uncertain world, how do you find those long-term stocks that you think will weather the storm of whatever uncertainties are happening and that will really pay out in the long run? I mean, what does the process look like?
Ashwini?
Well, it's easy. Go up the quality curve, reduce the leverage. Your portfolio should not have leverage if you can help it, but reduce the amount of leverage that your portfolio companies have. So avoid people that have a lot of debt. Look for businesses that have the signs of longevity, and have the stomach to ride out a 30% drawdown on your portfolio. Those are the three things I'd say.
Oh wow!
But I have a question, Ashwini. So these are stocks that you hold intergeneration, and you'd like to transfer them. But sometimes, And we've seen a lot of companies fall by the wayside over the years. Sometimes those stories don't work, and patience is not enough. So how do you weed that out? When do you decide to pull the plug?
No, it's a great question. There is nothing which is permanent. Okay. So you look at your stocks pretty much every day, every quarter, every year. And if you feel that, the business is going through a shift and the business is being challenged in ways that the long-term, wealth creation will not survive, then you change your view. So tobacco is a great example, right? While younger people continue to smoke, the incidence of smoking is coming down. It is well recognized as a health hazard now. And I think to expect that these companies will continue to be cash generators for years to come can be fallacious at this point. So you have to judge. Nothing is permanent. I don't think I want to say that there are intergenerational stocks. I think there's an intergeneration portfolio. And some of those stocks are long-term stocks, but you need to keep an eye on them.
Okay. Ashwini, before we wrap up though, and one question on whether you believe the current market context would only give Antara an opportunity to move from fixed income to direct stocks at some point of time, or is the market or the world too volatile currently? What's your current market view?
Well, there's always an opportunity to invest. I'm an optimist. I've been close to 100% invested most of my life. And my belief is that you always find ideas to invest in. I think in her context, as she's just starting out, her financial savings are quite small, and therefore they are, invested in some income yielding type of assets. But over a period of time, I do hope that some of this will move into equities. In the US in particular, I think the economic environment is quite challenging. So I'm waiting to see when that kind of starts to reflect in stock prices. And at that point in time, I'm hoping I'll be able to give Antara a nudge and she'll listen to me.
That is an ongoing, tussle which goes beyond Father's Day. But
says a mother, huh?
Oh, yeah, absolutely. But thank you so much, Ashwini and Antara. This has been an absolute pleasure. Thank you for coming in and speaking to us.
Thank you for having me.
Yeah, and it's turned out quite nice. We thought we'll do something different, and I hope our viewers have enjoyed it as well. But having said that, back to focus on what corporates are doing, and B. Thiagarajan, Managing Director at Blue Star, joining in now. We just want to get a sense from him what a curtailed summer has done for the plans of the company. Mr. Thiagarajan, very good morning. Great to have you with us here on NDTV Profit. Let's just get a sense of what were the expectations going into a summer season, which then ended up truncated. I mean, we're speaking while it's pouring outside our studios here in Mumbai. Have you seen a bit of a dampening in the offtake for the season?
Good morning. It's a pleasure interacting with you as always. Yes, the summer season began with the expectation that the market will grow over 25% because Q4 was an excellent quarter. FY25 was an excellent financial year. And the expectation was growth of over 25%. As you may recall, last summer season was a bumper one with over 57% growth. On that, we were expecting a growth of around 25%. But right from April first week, it's bad news, sporadic rains across the country, and the early onset of monsoon resulted in, indeed, it's a big disappointment. I think the market would have shrunk by around 25% so far.
Okay, so do you see this as a clear impact on the quarter, Mr. Thiagarajan, in the kind of reduction that you're talking about?
Indeed, it will be. But the thing is that it's not new to the industry. Right. Once in 3 years, you do get into this kind of situation. But whenever monsoon has failed, full financial year, the industry still grows. I have plotted all the summer years where it was not good, or we call it wet summer seasons. Full financial year, 10 to 15% growth happens. So therefore, we are not deeply worried. It is disappointing, but it is not a disaster. Nothing to worry.
Quantify what is the kind of hit you expect to see to volumes?
It should be around 25% compared with last year, which was a growth of over 57% over FY24 in FY25. On that, there will be reduction of around 25%. So that will be the impact. But you do have many cost levers. So I think Q1 for room air conditioners will be bad. But commercial refrigeration is doing extremely well, and we are a B2B company as well as B2C company. So it is a disappointment. We will bounce back. That's where we are.
Mr. Tyagarajan, good morning. Neeraj here. So would you expect? I mean, because 2024 as a calendar was a strong year as well, and therefore there is a base effect which kind of is a high base too. Does this disrupt the annual assumptions, or could the recovery in the second half be very strong? Are there telltale signs of that happening?
Good morning, Neeraj. The full year number will be impacted marginally, I think, because the expectation was on a full year basis, at least 20% growth should be there. I think it will be 10 to 15%. See, the good news is there is going to be energy label change on 31st December 2025. See, whenever there is an energy label change, Q3 purchases are very high. And then equally, with the new energy label, there will be Q1 purchases that will be very high. So we are again betting on the summer. So let us see. But these days, the festival season skew is also good. It is not, no sale is taking place. So we are talking about growth. So therefore, if you are asking me for a full year basis, there will be a reduction of anywhere between 5 to 10% compared with the expectations. Compared with the last financial year, I still expect around at least 10% growth. 15% growth is not ruled out.
Point. Okay. Mr. Tyagarajan, the other aspect is costs. And is there a, so it's up in the air, right, about the kind of disruptions to supply chains that might be there. It will probably not be as bad as it were, but just wondering if that is under control, or are there issues at that end?
See, we had gone through worst of the times, like from 2020 onwards. This industry faced huge supply chain disruptions due to import restrictions from China. Then there were container shortages, and there were prices on many other critical items like microprocessors or copper. Now, we have built resilience within the system. Local supply chains have improved dramatically, and there are mitigation measures for electronics as well as compressors. So there are problems, but we have learned to cope with that. So we are not panicking on that front at all. There is work in progress. I think only by 2028 we will be fully self-reliant. And in the meanwhile, as you would have seen, our inventory levels have gone up. We are stocking in anticipation of shortage. We are looking at alternate vendors. Multiple things are happening. So I'm not so much worried about. But the cost is indeed an issue. You can't change the prices every month. We had revised the prices by April. And because the sales didn't happen, there is pressure for reducing the prices. We would have waited for some time to implement that. But the problem is connected with, again, the cost can go up in this volatile situation.
Just trying to understand, Mr. Tyagarajan, what is the inventory level with your retailers right now? Have they gone up?
If you are asking for the industry, I can pass a guess. It should be somewhere around 1.5 to 2 million units, maybe excess, I think. But as far as Blue Star is concerned, we will get it under control by end of this month, because we have stopped the productions. Actually, we reduced the productions by around 20% in May, and we are cutting the production by over 25% in June. So inventory on the whole is a 1 month issue. I do not see that as a problem at all going forward.
Okay, so just to recap, 20% in May, 25% in June, that's the extent to which you're reducing production. You think you will need to extend this into July?
I don't think so. We would have corrected by end June itself.
Mr. Tyag,
The manufacturing units have to run. See, imagine all these units came up in the recent past, and you have trained manpower, and it is not that the sale has become zero. We are comparing with a huge summer season of last year. There is a reduction. So there is a demand there. There is nothing to worry about.
Just last question, very quickly. The government recently is talking about setting a minimum temperature for air conditioners. Wondering if that has any impact for you at all?
It is not. Yeah, this has been under discussion for quite some time. And it is a minor modification in the controllers. That's about all. And that will be done. So there is nothing to worry about that point also.
Okay, Mr. Tyagarajan, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time.
Thank you. All the best.
All right. And from that to another conversation, Ram Ratnawires is in focus after the new Rajasthan plant starts copper tube production. Varsha Johnson to set this up for us. Varsha.
Yeah, thank you for that. So yes, as you rightly said, the main focus is company has started a commercial production in the new facility which is in Rajasthan, which if I were to talk about the current capacity, which stands at around 39,600 metric tons, and the product capabilities include copper and aluminium winding wires. The Silvassa expansion is progressing as planned, which is expected to be completed by H1 FY26. On to new expansion, which is in Rajasthan, which is the main highlight for this company. The installed capacity stands at around 24,000 metric tons per annum, and the product capabilities include copper tubes. Company is actually venturing into value-added products through acquisition. They've acquired 60% in Global Copper Private Limited, which is a leading copper tube manufacturer. Then Epevo Electricals, they have a joint venture with EPAC Durables, which manufactures BLDC motor for global market, and Tefabo Product Private Limited, which they have 60% of position, and the company's focus in renewable energy, focused contract manufacturing, especially in wind sector dominant. The current capacity stands at around 40 towers per month. With the new expansion that the company is going in, the capacity will have a addition 30 to 40 towers per month by FY26. Overall, if you see, company had a good historical performance when it comes to revenue, EBITDA and net profit as well.
Okay, thanks for that, Varsha. And let's get in Hemant Kabra, Joint Managing Director at Ram Ratnawires, on the show. Hemant, good having you. Thanks for joining in. Tell us a bit about this first piece of news, the commercial production at the new manufacturing facility in Bhiwandi. What's the size of the facility? What's the size of the unit that has started commercial production? And what changes, or how does it impact your numbers?
Hi, good morning. And yeah, we started a plant at Bhiwandi. It is one of the largest copper tube manufacturing unit in the country. Although since 2018, we have been part of this industry of by the acquisition called Global Copper. So we know the industry very well. We know the product very well. We know how to manufacture it very well. It is one of the large expansion which we are coming in, and we will be one of the leaders in the copper tube manufacturing in the country. And we got the CTO, we got the commercial production started just last week. And
Okay, can you give us some details of this, sir, Mr. Kabra? Can you give us some details of the kind of capabilities that you're looking at going forward, and what is the impact on balance sheet that you expect?
I think it's a great growth opportunity. If you see, look at the size of the company where we are going almost double the size of what we were supposed to do. What we're doing in animal copper wire business. It is a product where it covers the entire range of LWC. It covers also a very important product for IGT. Soon you will see an IGT production also coming into this business. And we will be catering to all the companies in the air conditioning business whom we are also catering to.
Hemant, so I'm still looking for a sense of how does this impact your numbers going ahead? Because there are three things to this, right? It may be a great opportunity. You've been trying to do some of these things in the past. Your numbers have shown a steady uptick though, right? What happens as a result of this and some of the other ventures that you might be undertaking? What does it do to future financials?
See, it looks very strong. If you look at, we are not, all the ratios on the balance sheet side are pretty strong at this point, right? In spite of such large expansion in the company, practically we have added almost 80% to the gross block. And we will see that now we are going to, maybe in next 2 years, we should double our revenues because of the external capacity of almost, say, 30,000 tons adding to the copper tube plant, which our entire capacity is 35,000 tons. So adding another 30,000 tons gives us great leverage for the growth for the next 2 years.
I mean, Hemant, did I hear you say that, so let's work with some numbers, right? That you probably clocked in 3,700 crores of revenues in FY25. Did I hear you say that you could nudge maybe 7,000 crores by FY27?
We can. That's the kind of capacity which you have added into this portfolio. And that gives us that kind of room to go to that kind of revenue.
And is order booking, client inquiries, demand, etc., looking strong enough for you to think of it?
Yeah, absolutely. It is. Since we are into this business since 2017, we know this entire ecosystem very well.
Okay.
So hence we have decent amount of MOU signed with most of the clients. Plus we find also some export market also coming into the copper tube business.
Okay.
I think this all gives us good leverage to come in, and we all know copper tube as a product has been largely imported, right? And now because of the local manufacturing coming in, I think it will be majorly shifted to the domestic consumption.
Hemant, so then let me try and dissect this. For doing a doubling of revenues, right, you need to grow at 40% in a year, 40% CAGR. Or let's assume that you need to nudge from the current 3,600 odd crores, a number of at least 5,000 crores, presumably, or 4,000 to 5,000, 4,500 to 5,000 crores in FY26. Your last 4 quarters, the numbers have been circa 900 crores on an average. Last quarter was 950, previous that was 900, then 940 earlier. Do you nudge the 1,100 crore, 1,200 crore revenue run rate in Q1 or Q2?
I think we should look at from Q3 onwards. We will be having a bigger surge coming into the market. As we know, copper tube is a little seasonal product.
Okay.
So you will see Q3 and Q4 as a very large number coming in because of the capex which are put in and the capacity which are put in. And by that time, the plant will be also still state and running in a very full swing.
Okay, last question. Do you improve margins from the current 4-5% or do margins stay steady?
I think margins stay steady there. But I think it just gives us a lot of what we say EBITDA as an absolute number comes in very strongly. And also the free cash flow should come in very strongly.
Okay.
But percentage margin more or less remains the same.
Okay, and no changes in debt numbers or anything because of this capex. What's the debt equity currently, if I may ask?
In terms of long-term debt to equity, it's hardly anything. I think we are in a very, very comfortable position at 0.3, 0.4. There will be, of course, increase in the working capital things, but on the term loan, we are not going to have so much.
And you don't plan to raise any equity, right?
Not at this point.
Okay, great. Lovely talking to you, Hemant. All the best with the plans. Thanks so much for joining in.
Thank you so much.
That's a mid-cap company talking about doubling revenues, possibility of doubling revenues in the next 2 years. So, well, watch out for this one. Volumes are a bit thin, but keep an eye out. Keep an eye out also on arcade developers because the stock is in focus because of the foray into the Thane market. Before we get the management, let's get in Anushi to give us some context. Anushi, good morning.
Hi, good morning, Neeraj. So what is happening with Arcade developers that they are pouring into the Thane real estate market, and this is with a 6.28 acre project that we are looking at, consideration size of about 173 crores of this acquisition that has been made. But the project is estimated to have a gross development value of over 2,000 crore. Project launch is expected at the early start of 2026. So do keep an eye out for the type of pre-sales that this company, this launch will generate for the business. Now, if you look at the potential turnover of the projects that it already has, ongoing projects have a turnover potential of 3,317 crore, while upcoming projects have a potential of 7,579 crore. In terms of how the company fared in FY25, if you look at the key operational metrics, pre-sales saw about a 20% of a growth, while collections saw about a 22% of a growth, and area sold was about 2.49 lakh square feet, which was about 23% higher as compared to last year. Now, on to the upcoming projects that we have been focusing on. They expect 4 launches in FY26 with a cumulative top line of over 4,000 crore. This includes the likes of Goregaon West, Vilmistan, which is a 4-acre land parcel, along with this 3 redevelopment projects in Santa Cruz, Goregaon West and Malad West. Also would be something that we'll keep an eye out for. In terms of how the company's guidance is, they expect a 20% of a CAGR growth in terms of top line and bottom line. And inventory level is something that we should see how they expect to monetize that.
Okay, thank you for that, Anushji. Amit Jain joining in, Chairman and Managing Director at Arcade Developers. Mr. Jain, very good morning to you. Thank you for speaking with us here at NDTV Profit. Why Thane, sir? It's a crowded market. You have large players there already, and large players recently expanding quite a bit. Why did you think that this was a good idea or a good strategy?
So large players is a validation that the market is perfectly mature, for us to enter. And it is day by day, it is getting difficult to find land parcels in Mumbai. So Thane is one area where you have land yet available to make some good product, and the market is very mature. And it's an affordable market to get a product with amenities. That is why Thane.
Okay, but do you see that kind of potential even now? And I understand it's validation in a bit, but it's also a bit of saturation. What is the kind of segmentation that you will be focusing on, Mr. Jain? Will this be premium? Will this be lower end?
Yeah,
Can you give us a sense there?
No, it's a premium product. The configuration is 2, 3 and 4 BHK. We are going for a high rise, so the land coverage is lesser. And we get abundant ground space for putting in all the amenities in place. We are coming up with 5 high rises, around 45 stories, and the configuration is 2 BHK onwards.
What will be your GDV over here, your gross development value, and then what is your total GDV that you're seeing for this financial year?
GDV for this project is 2,000 crore. We are going to build close to 1 million square feet. And we are looking at realization of, at an average, like the project should get an average cycle of 20,000 rupees a square feet. So we are looking at 2,000 crore GDV for this project.
And what is the timeline of the launches that you see from Thane?
Early 26 calendar year.
Okay.
The project principal plans are approved. We are awaiting environmental clearance for the project.
And you don't anticipate any delays, etc. there?
No, while acquisition was in process, we parallelly managed to get the approvals, principal approvals for the project.
Okay, and what is the launch number? What's on the slate for FY26? And I suppose there would be 2 from Thane project that you're talking about, but the overall number of launches you're seeing in FY26?
We are looking at 4 launches this year. So one is the Vilmistan project and 3 redevelopment projects in Santa Cruz West, Goregaon West and Malad West.
Okay. All right. Just an outlook from you before we wrap this conversation, Mr. Jain, on how you're seeing demand moving forward and the pre-sales kind of momentum that you're seeing.
We are seeing a good traction for residential markets, and we look at a 20% growth year-on-year basis from last year to this year in pre-sales, top line and bottom line, all aspects.
Thank you, Mr. Jain, so much for speaking with us. Quick conversation there with Arcade, a new project in Thane, foraying into a market where there are a lot of large players there already. There's Hiranandani, there's Raymond's, and then they're coming in as well in the premium category. So, Rustamji is there as well. So everyone is looking at Thane. I thought the reasoning was interesting, Neeraj. We've just run out of space. So we need to now go into MMR. Fair enough. While everyone's doing a redevelopment, otherwise within Bombay, this is where the space is. All right, we've not run out of space for conversations here on the channel.
But just want to mark one stock, Tamanna, as we hit that break. Tata Motors. That is down 5%.
Presentation.
Yes.
Yeah. The GLR presentation, they have said, one of the things that I saw in that, Neeraj, perhaps that's the pain point, free cash flow. Zero FCF, close to zero FCF this year.
Yes, and EBIT in the range of 5 to 7% versus 8.5 in FY25. So this number is not looking strong, and which is why a sharp 5.5% gash on Tata Motors as we speak today.
Okay, so a lot to unpack. Tata Motors, I think look at the chemical pack as well. There's a Morgan Stanley note and all chemical stocks are firing. So a lot of action happening this morning, but we have a great speaker on the other side. We'll be speaking to Mark Matthews, Head of Research Asia at Julius Baer, and a special conversation up ahead with Samir Arora, founder at Helios Capital. Power Pack Morning here on India Market Open. We'll be right back.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down.
Back with India Market Open right here on NDTV Profit. Just want to mark that the markets have taken a turn, and a very swift one at that, because there has been a sharp downtick. We're still marginally in the green, if you will. But remember, Nifty IT, for example, went up 0.6, 0.7%, just about 0.1%. Nifty Bank, in fact, 0.2% in the red. Broader markets too, maybe marginally lower. So a bit of a pullback. And Tata Motors is a case in point, but a clutch of others which might be cracking right now. So bear that in mind, particularly in the banking space. So if you look at the Nifty Bank movers, I think that's where you will see some perceptible falls. PNB, Canara Bank, IDFC First, all of them have come off in the session today. The one which is a lone star of sorts is HDFC Bank, up about 0.5%, or maybe Kotak Bank giving it company 0.36% higher.
Okay, so a maybe pain point there coming in from Tata Motors. That's what's probably pulling down the Nifty as well. But let's get the big picture here. Mark Matthews with us. He's Head of Research Asia at Julius Baer. Mark, always a pleasure to speak with you, and thank you so much for joining in today as well. When you look at the Israel-Iran conflict and the speed with which the escalation has taken place, How concerned are you right now about this flaring up?
Of course, I am concerned. Nobody likes to see this kind of thing happen, and we've never seen such a direct confrontation between these two countries as we're experiencing today. Israel wants to achieve regime change in Iran. They've been explicit in that goal. They've stated that. The Prime Minister said that. And Iran would like to destroy Israel. It's also stated that. I don't really think either of those goals are achievable. And if they're not, and they don't even share a border, then you'd think eventually the fighting will stop. And I guess that's what the market is thinking, because gold is down a bit today, and oil is up 50 cents, very little, and stock markets don't seem to be doing that badly. I guess the risk is that when you have missiles flying around and there's a lot of chaos, things can happen. And also that the politicians in Washington might decide that that the U.S. should enter this conflict. But I don't think right now that either of those things will happen, that it's going to spread beyond these two countries, or that the U.S. will get involved. What I guess I think more about is the law of unintended consequences, which states that any event will have consequences that are further down the road that you just cannot foresee. They could be good or they could be bad. So, for example, in 1963, President Kennedy was assassinated. The market didn't care about that. It was up over 20% a year later because there was no economic impact. But because of his assassination, eventually the Americans got bogged down in the Vietnam War. Of course, that took a few years after he was killed to get there. But I'm just saying that what we're witnessing now in the Middle East, there could be very big consequences in a few years from now that are simply not possible for us to predict right now.
Okay, so in terms of is it a bit of immunity building up, Mark? And bear with me, because we saw Ukraine, Russia, the initial shocker, and then that's been going on for a while. So the world now knows that there could be an ongoing conflict, and then things ease off. India, Pakistan, recently we saw that happening as well. And crude has not been impacted in that sense because the underlying demand has been dropping consistently. Is that one factor coming in?
Yes. And another is that there is a lot of capacity in the world. The Emirates and Qatar and Kuwait together can pretty quickly add another 5 million barrels to their production. And that is more than Iran currently produces. Iran produces about 3.5 million a day. And you've got the shale in the US, you've got Brazil, Mexico, Canada, lots of places in the world where there's oil. There's an abundance of oil, actually.
Okay. Mark, good afternoon to you, and great talking to you again. Would you reckon that dips that come in because of, or possible dips that may come in because of this geopolitical stress, if it were to last, and if crude were to be higher, so on and so forth, gives a buying opportunity to investors in select markets?
Yes, it does. Technically, the S&P 500, which is the global benchmark, is looking quite constructive. We just had a in excess of 20% move within a 2-month period from April to the beginning of June. And if you look back in history, when you have that kind of very bullish 20% rise within 2 months, historically that only happened 5 times before since 1950, and 12 months later, every time the S&P was up. So the U.S. market is technically looking strong. By the way, I would just add that I know it sounds hard to believe, but the U.S. is actually a net beneficiary of higher oil prices because it's been a net exporter of oil since 2020. But that's beside the fact. The thing that I think would be a great buy on weakness is India. the emerging market complex in general, but definitely India in particular. As you know, the dollar, if it goes down more, that's generally a good thing for India because it will attract foreign investors who do seem to have been buying over the last month, and they don't own much India. The GDP growth has picked up, as I'm sure you also know, from 5.6 to, sorry, I don't remember the numbers, but 7.4, I think it was, in the most recent quarter. And inflation has come down to 2.8%, and the RBI has been cutting. It's also been cutting the bank reserve requirement ratio. And the government, which was preoccupied with the elections last year, is spending on infrastructure again. Public sector capex in March, or May, excuse me, went to an all-time high. And so all of that, I think, is constructive and means that we should actually have good earnings growth this year. And then the longer term picture for India is the same as it always was, which is that no other country in the world has the increase in population that India will have over the next 20 years. Probably about 120 million people will join the working age population. And so per capita GDP will go up, and if per capita GDP goes up, more people will invest in stocks. And right now, only 5% of Indian household assets are in stocks. So all of that adds up to me to be a good picture. And if there is weakness in the market, we should take advantage of it.
Yeah, and Mark, you were right. It was 7.4% in Q4, the GDP. So yes, spot on. So therefore, Mark, the other question, the other thing that therefore comes to mind is that since FIs have just started buying back India in the last month and a half, but there is no over-ownership, despite the valuations, could there be a steady run? I mean, the markets the headline benchmark Nifty may remain stable and may not go up too much because of valuation concerns, but that may just give the thrust to the non-Nifty names or the broader market names, which are large enough in some cases, to actually move higher led by earnings growth. Could that happen?
Well, broadly speaking, the Nifty's on just north of 20 times this year's earnings. And if we get earnings growth, let's say, above 10%, somewhere between 10 to 15%, per year over the next few years, then that's not an expensive price if you're looking to own it for a few years. A few means 3. So I don't think India's at all expensive on a 3-year view, and it seldom has been. To my memory, there was only one time when India was really cheap, at least since I've been looking at it, which was the bottom of the global financial crisis. Otherwise, it's an expensive market. There are reasons for that. Capital controls are one. And the good story that India offers is another. So I don't think the valuation is that dear for people who are looking to own it on a, let's say, a 3-year view.
Okay, so that's interesting with a 3-year view. What are the spaces that are driving that optimism in your view, Mark? Are you looking at more of the domestic financials, the cyclicals? Would you be focused more on business that are not as exposed to what's happening geopolitically, because we're clearly in a time of uncertainty?
Well, we've been fans of the banks for a long time, and that's finally working out. So we're sticking with that because banks are the heart of the economy. So if the economy does well, which, as I said, we think it will, then banks are an obvious beneficiary of that. And now their loan deposit ratios have come down to levels that the RBI deems reasonable. They can lend again more than they were before. And so beyond that, I suppose the ugly duckling is the information technology sector, and people are worried about spending from the United States on IT. But I think that's also quite interesting just because it has become so very cheap. So those are the two extremes, and in between them, there's lots of other things, from materials to hospitality to the consumer. The list is endless. But anyway, I don't want to ramble. Banks are still our preferred sector.
Okay. What about the kind of consumption focus? When the typical view of India, large population, young population, and focus on internet-based companies, is that a space that you find interesting at all? Platform companies?
I have to be honest that I don't have an answer. We probably do have an opinion on it, but I just don't know. So I don't want to make something up.
Okay, no, fair enough, fair enough. From the point of view, Mark, and I just want to move to, apart from equities as well, how are you looking at gold right now? Because we've seen it hit its peak at the time of, the tariff wars and tariff fears, and a little bit right now with what's happening in West Asia. But do you see that up move on gold continuing?
What has taken the gold price up over the last 2 years is buying from retail investors in Asia. And I think part of the buying was they were worried their currencies, like the renminbi or the rupee, would fall to mitigate the impact of large tariffs from the United States. Now it looks like those tariffs aren't going to be so large, and it looks like the dollar is going to weaken. So I would imagine that retail buying from Asia should subside somewhat. But on the other hand, the dollar going down has historically been a positive thing for commodities, including gold, because they're all priced in dollars. And we do look for another 7% downside in the dollar over the next 12 months. And then longer term, I'll just say what is very supportive for gold is that I think China wants to be the largest holder of gold in the world, and the People's Bank of China currently owns officially less than 3,000 tons of it. Unofficially, it's probably in between 3,000 or 4,000. But to put that in perspective, the US Treasury owns over 8,000 tons. So if China really wants to be the largest owner of gold in the world, it has a lot more buying to do.
How high do you see gold prices going?
Once again, I don't want to make something up. We have a forecast. It is higher than where the price is now, but I don't recall the precise number.
Okay. Mark, one final question. What can disrupt this, not just India, but the equity theory for the second half? Is it increased geopolitical stress? Is it the tariff war resurfacing? I mean, it's not dead really, but per se, because there is a bit of a an agreement that seems to be at the stage. So what can disrupt the optimistic equity market theory for the second half?
Well, just because the Middle East is such a hot potato, what if the oil price actually did go up a lot? And then it would be difficult for central banks to cut rates, because the correlation between oil and the producer price index, which is what businesses look at, the business inflation basket, is 0.7. It's high. So I guess if we're thinking that oil won't really go much higher than it is now, and in fact we're looking for $60 a barrel a year from now, which is quite a bit lower than the $74 it's at today, 74, 75. But if I'm wrong and it goes to $120, for example, or 150, if things spin out of control in the Middle East, then it would be difficult for central banks to cut rates.
Okay, thank you so much, Mark. Always a pleasure speaking with you. Mark Matthews of Julius Baer there, saying that India has always been an expensive market and there's nothing wrong with those valuations. It continues to look attractive in his view. All right, quick look at what's happening to the markets here, and it is a bit of a tough morning. I want to pull up the Tata Motors stock, and Tata Motors seeing pain, specifically because of what JLR has put up, 4.5% down nearly on Tata Motors. JLR has shocked investors because it's cut its FY26 EBIT margin guidance from 5 to 7%, down from 10% earlier. What are they saying? Hiral is joining us for more.
Thank you, Tamanna, for that. So, in fact, Tata Motors is now the top loser in terms of Nifty 50. EBIT margin guidance, that has been reduced to 5 to 7% for FY26 versus the earlier guidance of 10%, and that's the key highlight. Because of the guidance reduction is what the stock is reacting to. In terms of the free cash flow as well, that is close to almost zero in terms of FY26, and they're expecting improvement on a year-on-year basis only from FY27 and 28 onwards. Apart from that, if you talk about their China premium market, that is what has been facing pressure, and this is what they've given data in terms of calendar year 24. 215 models across companies have seen a price reduction, so there is pricing pressure that is coming in terms of the Chinese market. Apart from that, 4,400 retailers have gone down in the PV segment, and the premium market has seen a degrowth of around 15%. So overall, China, which is one of the major markets for JLR, has been under pressure. Overall, another segment that they are looking to enter is the Freelander, but that will come in only in the second half of FY26. So there is a wait and watch mode on that front as well. Though FY25 for Tata Motors was a breaking year because they did deliver the best ever EBIT since FY15, record profit number in terms of FY25, the best ever dividend, and in terms of Defenders, they sold a record number of 115,000 units. So in spite of FY25 being really strong, China is the one which is going to put pressure from here on as well. And the kind of downtick that they're expecting in terms of the EBIT is going to be a concern at least for the next 1 year. 27 and 28 is what we need to wait and watch and see.
Okay, thank you for that, Hiral. So now, while it's a down day for Tata Motors, chemicals are buzzing because of this Morgan Stanley note on chemicals, and a whole host of them have been upgraded. I'm going to start by it one by one. PI Industries has been upgraded to an overweight from an equal weight. The target price, look, sharp target price, hiked to 5,000 rupees from 3,524. Big up move there. Navin Fluorine upgraded to equal weight from underweight, hiked the target price from 3,242 to 4,160. For SRF, they've maintained an underweight and hiked the target price from 2,150 to 2,150 from 1,870. For Aarti Industries, maintained an underweight and target price is hiked to 385 from 360. For Tata Chemicals, maintained an underweight, hiked the target price to 839 from 780. Now, the reasons I found very interesting as well, Niranjan, why Morgan Stanley is constructive on chemicals?
Yeah, I mean, well, the reasons, of course, will be multifold. They expect a more constructive, volume-led agrochemical cycle in 2026. They believe that will support stronger asset runs and operating leverage-led margin tailwinds against twin challenges of shaky demand and weak pricing that have shaped up FY25. And of course, as will be the case with most sectors, if not all, valuations keeps Morgan Stanley selective. So, well, that's their view on some of the chemical names.
So we're doing an interesting segment this morning where, Father's Day was Sunday, but we're taking the opportunity to talk to very well-known investors on what their philosophy is on investing, what is the kind of message they're passing down to their kids, and what would they put in their portfolio if they wanted to build a portfolio for their kids. So we're talking wisdom and wealth, and our next speaker is Samir Arora. Of course, we talked to him about what's happening in the markets right now as well. He's founder of Helios Capital, and he's had this conversation with our colleague Alex. Listen in.
And I do want to ask you about some intergenerational portfolio building strategies that you might be able to talk about. But before we get to that, and it's a day, a start of the week where there's so much that is happening globally. So it would be wrong of me not to ask you about those things first. So let's get that out of the way, and then we'll get to advice. So you've seen everything that's happened over the weekend, crude oil prices since Friday going up. How much attention are you paying to that latest conflagration on geopolitics?
So the thing is that recent experience in terms of Ukraine, Russia war, and many other wars that have gone, including India, Pakistan, that right now the assumption is that, these wars last for a short period, although of course the Ukraine war is still going on. And therefore, I think the markets have, beyond falling of 1% here or there, have shrugged it, and so have I, on this hope that even Israel is saying that, this can last 10 days, and US says that I will try and resolve it after a few days. So there's no point in panicking now and then coming back 5 days later saying, okay, it is over. So let's now hope for the best that the response of Iran is there, but it doesn't look that it is going to really blow up into a multi-country war and all that. So for now, we actually do ignore it.
Okay, so you're looking through it. But crude oil prices, they've been soft and hovering near that $65 per barrel mark for Brent. Talking about Brent, they've moved very suddenly up to 75. And I was looking at the RBI's projection or assumption, as they talk about it, for the inflation projection, it stands at $70, which is not too far away from that 75. Yeah. So from that perspective, even that's not too much of a concern. But what would cause you to worry if crude oil prices go to 80 or thereabouts?
No, not crude. I think if US gets directly involved, because the war, that's what I'm saying, it all depends on the response of the Iranian. Because if that response is sort of more aggressive, going into other countries, going into the places where US has forces, trying to stop the flow through that, the Hormuz Straits or whatever, all that is more serious and will require, or maybe not require, but will automatically lead to a more significant response from US. And then that makes it more serious. Right now, let's hope that the Iranians are also, in some sense, actually, they are doing it in a disciplined way by not trying to involve US in it. Because maybe they know that they can't handle a US response. So whatever it be, right now we'll have to see as it goes. And nothing is forever in these things, but for now, let's just.
Those are some words that I didn't expect to hear. The way that you're describing it, but let's move on from that.
The point is, 3 days later they'll say this has been resolved and oil has fallen $10.
Yeah.
So what's the point? Let's just see whether it's really looks something worth bothering about.
Let's see where it settles. So then let me ask you this. We've seen intermittent flows into Indian capital markets, and of course not whole hog buying, right? And I'm talking about foreign institutional flows here. Do you see that holding off just a tad bit while there's so much uncertainty, and what are the implications for India's market?
It might be in the short term, but again, that's what I'm saying. In every aspect, you'll have to ignore the next few days, 5-10 days. But in general, the outflow from US is very, very significant because the inflows into US since 2008 have been very, very significant. So the amount that the foreign investors have in US versus what the US investors have in non-US markets, that difference right now, something like $20 trillion. And this has happened because the US market has done very well since 2008-9, and the rest of the world has done poorly. And you can see it also from the weightage of US in the MSCI World Index, which used to be in the 50s, and now is something like 65, 67, something like that. So that it is clear that the world does not want to have this higher weight, including us. We have a global fund in which up to Jan end we had maybe 74, 75% in US. Then we raised cash, and now we have not gone back fully, but our plan would be to have only 50% in US. So that's a big difference. And I'm just one small example. And it's not only me. You can see it in flows. You can see it in ex-US world indexed ETFs have started raising a lot of money. This was an article either in Bloomberg or Wall Street Journal, because these are the only two primarily I read along with FT. But basically the article was that these ETFs, which are ex-US world index trackers, have suddenly started getting lots of flow. So many people are thinking like me. It's not that I'm the only one. But these flows, if they go into non-US, then because the proportion is, let's say, 65 US currently and 35 non-US, and you move a few percent from US to non-US, then every half-decent country will get some flows, and India is beyond that. So India should get proportionate to its size, reasonable flows. Another thing is, we really beyond a point don't need their flows right now. We first need to stop their outflows. So if that is there, and then a little bit of a flow is also there, and then the Indian guys have their
on that point, do you think that the treasury yields as they stand right now is something that will cause them eventually to move? Or
that is part of the story. That's all part of the story why people are buying gold. Even we in our new weightages want 9 to 10% just plain gold in it rather than having zero gold. And we have already got 6%. And otherwise, personally, I own a lot of gold for the last 2-3 years. Not only me, now you saw there was an FT report, I think this weekend only, that the sovereign, not sovereign funds, basically the central banks, second largest weight after US dollar has become gold and has crossed euros Of course, partly because of appreciation of gold, but also because they bought, I think, 100 tons per year or something for 3 consecutive years or something. So that is also clear. And it's all an anti-US, anti-dollar, anti-their deficit, anti-their issues. And also the fact that it was too much it had become on its own, not that somebody actively overweighted it maybe, but that the index rates became very high because of their continued outperformance for whatever, 15, 20 years.
Okay, Samir, focusing specifically on Indian equities and the valuation earnings story, do you think that it's comfortable right now? What is your base case assumption? Has that changed after you saw the 50 basis point cut? Because obviously it'll take a couple of quarters for that to flow through.
Correct. So it is not that you can have a runaway rally. Our first idea is that you should stop falling because of flows, but you can't have a 20% rally because of flows. So I would think that in the next 9-12 months, if you can be up 10%, it'll be great. And then by that time, hopefully some earnings improve on consumer side, maybe on IT side. And it's not only being driven by financials and some very select sectors. So right now, we are not saying it's some massive run, but it can be held well, and you need periods of this consolidation, you want to call it or whatever you call it, but basically it's not a one-way thing, even if there are flows from everywhere.
Okay.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down. Cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world.
Hi, thanks so much for joining in. You're watching NDTV Profit. This is Ask Profit, the show that gets you answers to all of your stock-related questions. And today we're doing a Father's Day special. Of course, yesterday was Father's Day, but well, we can celebrate it today with all of you. And the question that we're asking our experts today, and you as well, is what you can do for your dad or what you learned from your dad when it comes to your investments. Joining me on today's program is Anushi Vakharia. Anushi, good morning to you. And as I understand, your dad has been investing in the markets for quite a while. When did he start giving you advice?
Yes, so it's been since 90s that he's been a part of the market. So, you know, the conversations around the dinner table used to always revolve around stock market. So his investment advice to me was always to be long in equities, and of course, being a risk taker himself, he does believe that in the early years itself, you know, you should be as aggressive with your portfolios, with your investments as possible, because then the later stages would be where you can think about more of a conservative approach. So investment advice from him was always to go aggressive, be a risk taker.
Great, and you've started early, I'm sure. And it bodes well if you've taken advice from your dad and you've started investing in the equity market. Joining us today is Brijesh L, who's head of technical and derivatives retail research at IDBI Cap, as well as Nirav Ashar, who's head of equity research at Latin Manhalal. Good morning to you both, gentlemen, and happy Father's Day to you as well. I'm just wondering, Nirav, I'll start with you. Is there advice that you've gotten from your dad that you put into practice, and also is there advice that you give your kids?
Well, good morning and thank you for the invite, and wishing all of you a very, very happy Father's Day. I think, yes, when it comes to advice, I think I learned everything about the markets from my father. My father was working in the stock market, and in a way, while doing my college, I was attending the markets also. So I learned how to read balance sheets. I learned how to read the results. I got a very sound guidance from a lot of seniors in the market. And this was the era where we had the trading ring. So I think have seen that phase also. I've seen the computerization of the markets, how the things have gone into that paperless mode. So it's been a very, very rich learning experience. As far as the advice which I pass on to my daughter, I think I do advise her to take interest in investing on a long-term sustainable basis. But my daughter is basically a lot into arts. So I think she has very little interest in numbers and balance sheets, etc. So she feels that we should keep all these investing and all that to ourselves. She's more inclined towards art. So I think she's an artist. So a very, very different course which she has decided to follow in life.
Yeah, but if she sees her investments grow over the years, that's something that everybody likes to see, irrespective of what they enjoy doing. Brijesh, quick question to you as well. How do you get financial advice given to your kids, and did you get something for this Father's Day?
Hi, morning. So basically for me, my dad was more into a technical thing. So he was not too much into the market. But then specifically when I was like doing my college days, that is how I came into the market, and then I learned about the stock market. So it was a late journey, but later and sooner, but I somehow picked it up. But if I need to understand, give some tips to my son, then I would be definitely asking him to do some long-term bets where it's too small to understand all this. But then looking at me, maybe over the period of time, I think he may pick it up. But my advice would be to invest in a long term and to take a long term focus. This is what I would make him understand. Right now he's only 5 years old, so I don't think I would be able to make him understand anything. Maybe over a year's time, when he sees me, I think he might take that.
I mean, another 5 years and he'll be at the age that Warren Buffett started, or soon, or close to that, 11 years old. So not a bad time to start feeding some information to him. But having said that, because it's Father's Day, we've been running, or we've been asking our guests, even on this program, Ask Profit, to give us advice as to what stocks would get into a portfolio that stands the test of time, that you as a father would like to give to your child, or that your father is probably invested in? And quite a few interesting names, very large names at that. You have Purin Juvelia talking about restaurant brands that he would buy at this point. You have Nippon India from the AMC space. You had Parag Thakkar this morning talk about a variety of stocks in the financial space. Bajaj Finserv, by the way, is the way that he's playing the Bajaj Finance story, and that stock in focus on account of the stock split as well as the bonus issue today. Mr. Chokalingam talking about the likes of Nesco as well as Bombay Burma, and make sure that you see that disclaimer. He says that he's invested in those stocks as well. State Bank of India in focus again today because it's cut its savings rate. This is the rate that it's offering on its savings bank account by 20 basis points to 2.5%. This bodes well for the company, for the bank going forward as well. And finally, Gaurang talked about HDFC Bank. Now that State Bank of India has cut its savings rate, it's quite likely that HDFC Bank will follow suit. So the first question that I'm asking Nirav this morning, beyond any of these stocks, is what stocks are you suggesting that a father can buy that will stand the test of time, that they can hand to their children?
Well, I think the focus should be on long-term value creators. So I think I would recommend a Reliance Industries, HDFC Bank and Bajaj Finance.
And Brajesh, what about you? What is something that you would look forward for the next 15 years, 20 years, whatever the longer term picture is?
I think most of the people do talk of a lot of sectors, but one sector which I would like to highlight is the hospitality industry, plus the hospital space. So I think healthcare will be one space where the stocks like Narayana Hrudayalaya, KIMS, Fortis, this kind of stocks I think would be the very strong, extremely like over the next couple of years. This sector would not see any major dip. So whenever some correction happens, this would be the sector which would be act as a safe bet. So I think hospital stock should be one from a very long-term perspective will do very good over the next coming years.
Okay. All right. Since it's the Father's Day special on Ask Profit, I'd invite you to write to us. Even if you've got a message for your dad, don't hesitate to write to us on the number that you see on the screen. That's the number, the WhatsApp number, or you can call us as Ramchandra has done from Guntur. If you've got specific learnings that you've gotten from your father that has helped you in your investment journey, write to us and tell us about that as well. Ramchandra, hi, thanks so much for calling us this morning. How can we help you today?
Okay, good morning. Can I buy Ramki infrastructure at current market price?
And what is the time horizon that you have in mind, Ramchandra?
Short term, 6 months duration.
Okay, 6 months. All right, so let me go to you, Brijesh, on this one. Ramki Infrastructure is the name of the counter. Would you buy the current market price for 6 months?
Okay, so I'm not too much of a reading on this, but the stock is forming a base. So this level of 450 is maybe looked as a support zone. Upside would be a very limited, maybe 650. Another 100 points kind of a play can be there. So it's a trading opportunity. One should take 450 as a stop loss and can take that long bet.
Okay, so that's the view for Ramki Infra that we are looking at. Next question is from Paramjeet, and he wants to understand the view for ABFRL. He bought it at a price of 208, and this is before the demerger price that we are looking at, currently trading at around levels of 73 or so. Wants to understand whether he should buy more of ABFRL, especially after the demerger. Nirav, let me come to you on this counter.
Well, yes, definitely it's a good opportunity to accumulate with a medium to long-term perspective. Because we've seen a meaningful correction in the stock, and hopefully by the festival season we should see things beginning to improve. And I think the stock has corrected from 104, 105 levels to currently at around 73, 74. So it's definitely a good opportunity.
Okay, it's a good opportunity. ABFRL stock is down about 6% over the course of the last week. Sana from Chennai is writing in asking about Jio Financial Services for the medium term, and she's wondering whether to acquire it at this point. It has played a little bit of catch up. I'm wondering, Brijesh, if this is a good opportunity to accumulate for the medium term?
Yeah, I think one can take that bet. But then, having said this, lately there has been a good run, so I expect some profit booking to come. Maybe some 6% kind of profit booking can be there. I would advise to buy in a part, like maybe few at the current level, and whenever there is a kind of a small profit booking or correction, that time the one can enter more longs, but not 100% at the current level.
Okay, so that's the view for Geo Financial Services that we are looking at. But next we have a caller joining us, and this is Pratul calling us from Jaipur. Hi Pratul, how can we help you on the show today?
Yeah, thank you for having me on the show, and a belated happy Father's Day to all of you.
Right, please.
My query is on BSE Limited. I had purchased BSE 1,000 shares at about 2,600 the amount a piece. Now the stock today is trading at around 2,700. A couple of days back it was at 3,000 rupees. Now it has been consistently declining day by day.
Right.
So my question to you is, what's your call? Should I hold it or should I sell it off and switch over to NSE Limited?
Pratul, what is the time horizon that you're looking at?
Long term, short term, anything.
Okay, so you just want to
Sorry, I want to understand, Pratul, you intend to buy NSE in the unlisted space?
Yeah, unlisted, but selling off BSE Limited. Switching over from BSE to NSE at the moment.
Okay, but why specifically? Both are exchange companies. So you're saying you want to stay in the exchange space and you want to understand whether the valuations are more attractive for NSE?
Yeah, it's like the valuations are looking pretty much more attractive than the BSE Limited, and at the same point of time, there is a potential of NSE Limited rising above BSE once it gets listed.
Okay. Nirav, do you have a view here? Generally, we don't ask about unlisted shares, and I think a lot of people have jumped into the National Stock Exchange in the unlisted space, looking at this very opportunity. What is the advice here?
Well, I think his optimism stems from the fact that there's been a sharp spot in the price of NSE. So I think he doesn't want to miss out on that opportunity. And I think as the buzz keeps growing that the listing is just around the corner, I think there's a lot of interest in the unlisted space as far as NSE stock is concerned. But as far as BSE is concerned, I think it's a portfolio stock, and any correction, I think, should not disturb the investor. It's a portfolio stock, so it should be held in the from a medium to long-term perspective. And as far as NSE is concerned, I think he always has the option of doing some nominal purchases from the unlisted market at this point of time.
Okay, so that's the view that we are seeing for BSE versus an NSE, both exchange companies in focus here. But next question is from Pakshal from Savannah, and he wants to understand whether he should invest in the two-wheeler sector, and this is for the next 3 to 5 years of an outlook that we are looking at. Nirav, coming back to you on this one, any of these two-wheeler companies that stand out to you on a long-term basis?
Well, from a long-term basis, I think there are very limited players in this space. I think we have Hero MotoCorp, which is doing quite well, Bajaj Auto, which is focused on the export markets, and Eicher Motors. But I think our preferred picks would be Hero MotoCorp and Eicher Motors.
Okay, all right. So that's the view on the two-wheeler space. Venkat is calling us from Bengaluru. Venkat, very good morning to you. How can we help you today?
Good morning, sir. So I want to invest some 1 lakh rupees in IDFC first at this price.
Okay.
Is it okay, or shall I need to wait for some other correction?
Okay.
Earlier, I have made the same. I bought it at 45 rupees and sold at 70 rupees.
Mm-hmm.
So now I want to again take one more call. I am waiting for the correction, but it is not coming below 70 rupees.
Understood. And you're buying this for the long term?
For 3 years view, sir.
3 years view, okay. So since you're looking at a price action and basing your decision on that price action, let me go to Brijesh on this. Brijesh, what's the outlook on IDFC? It's hovering around that 70 mark and he's looking for an opportunity to go long. Where should he deploy?
So if his perspective is for 3 years, I think buying in the range would not be disturbing this. The level of 70 is a good level. The maximum correction which I can see is till the level of 65 because this was the range earlier from where the stock has picked up the momentum. So in a worst case scenario, this can come back to 65. But then whether to hunt for 65 is quite nobody would be right at this point. So I think 70 to 65, you should spread the quantity and whatever the quantity is looking to buy, you should buy within this spread. And if you want us to understand the long-term outlook, and then I believe easily this can go back to 90 plus over the next 3 years time frame. So I think this should be the good opportunity.
That's the view that we are seeing for IDFC First Bank. Brijesh, the next question is for you as well. Now, Benson is writing us from Coimbatore, Tamil Nadu, and he wants to understand the view on Suzlon, whether he should buy it at current levels. Now, do note that in the last 6 months or so, we've seen about a 3% of a correction in terms of where the stock prices. But considering the fourth quarter results that we just saw, a strong set of numbers that we've been looking at. Brijesh, your view on this counter?
So Suzlon, recently there was already the run has already come, and so on an immediate basis, some profit booking is expecting. This can go back to 60 levels. So that is a very decent support. And then whenever it finds support near 60 and then it starts moving up, then the stock can start start trending higher. So view is positive. The current level from the 60 to 64 is a good opportunity to re-enter the long bets, and this can go back to 84 levels. So that would be my view.
Okay. I believe we've got a next caller. Mansingh is calling us from Andhra Pradesh. Hi, Mr. Singh. How can we help you today?
Sir, good morning, sir. I want to enter into art industry, sir. Is it the right time for 1 to 2 years? Now, recently, the stock has bottomed out and Quantum Mutual Fund has bought, and it is near above 50-100 moving average and ready to make a gold cross. So, technically and fundamentally, should I take entry into this stock or should I wait or park somewhere? Please suggest me, sir.
Okay, I got your question. I'm going to make an exception and take a quick view from both. Brijesh, you heard about the technical patterns that he's studying on this chart. What do you have to say about his observation, and would you go along at this point?
Yeah, I would take a long bet because over the last 2 weeks there has been slightly profit booking, but this 425 is a very decent support. This is again from the weekly time frame since he's watching, and the 425 there has been a very strong crossovers in the moving average. So I think that 425 level will be respected. So he can wait for those level or maybe re-enter at the current level. On the way up, the 490 is a small resistance. As in when we see a breakout of 490, I think this can go back to 600 plus level. So view is positive. One should make an entry at this level and should not worry as long as 425 level is not taken down. By any chance, if things go wrong and 425 is broken, then he need to review his position.
And there was a reasonable uptick in the PAT number, in the profit number for Aarti Industries in the fourth quarter. If I look sequentially on a year-on-year basis, it's still to make a big headway. Nirav, on the fundamentals, a lot of people are wondering whether the corner has finally been turned by these chemical companies. What's the view on Aarti?
Well, I think still on a shaky ground, but I think this in fact it gives an opportunity to accumulate in a staggered quantity. So I think you can keep buying some quantity, then wait for the quarterly results. If there is an improvement in the numbers, you can add more. But I think this is the best way to accumulate this stock because you'll never be able to catch the bottom.
Okay, so that's the view for Aarti Industries that we are looking at. Next is a very interesting query that we are seeing, and this is Satyan writing to us, wants to understand of the two theme park companies that we are seeing, which one is a better choice? It's for Imagica World or a Wonderla. Now, this is an interesting one in context that this is for future generations that he wants to build. So it's not a trip to the theme parks that he expects to make, but rather an investment in these companies. So, Nirav, let me come to you on this one. What's your view? Which is the more preferred pick in this?
Well, both of them are as different as chalk and cheese. So I think if one were to look at Wonderla, then I think it's been stable right from the beginning. So they have done almost all their expansions have been done out of their internal accruals, and a very, very disciplined approach as far as the business model is concerned. Expansions have also been done in a very, very phase-wise manner and a very, very meaningful way. So I think definitely Wonderla has strong prospects going forward for it. And at the same time, I think Imagica has been a turnaround story. So it was acquired by the Malpani Group, and a lot of integration happening, a lot of work in progress still at this point of time. So if you ask me, I think the preferred pick would be Wonderla at this point of time.
Okay, the pick would be Wonderla. The next question is coming in on a stock that is under pressure, if I'm not mistaken. Tata Motors was down 4%, if I remember correctly, earlier on in the session. I wonder where it is right now. There you go. It's down it's down 4% is where it is. And this is on account of the outlook for Jaguar Land Rover's margins going forward, which are expected to be under a little bit of pressure. Krishna is calling us from Kerala. Krishna, very good morning to you. How can we help you today?
Hey, good morning. Yeah, I actually bought Tata Motors maybe a few weeks ago. 696 is the average cost.
Yeah.
Almost 4,300 quantity. Was actually planning to hold it till 800. But right now, I think the company is having some pressure. I saw it taking support at 700 level few times, trying for a breakout, failing, coming back, but never expected this move. So what's the point of view for like the next 6 months?
For the next?
6 months.
6 months, okay. Brijesh, the reaction today is on account of an outlook change from the company, from Jaguar Land Rover specifically, which accounts for a lion's share of the consolidated revenues. But from a charts perspective, where does it find support? Would you deploy? Because he's got a significant quantity already, 4,300 shares. What is the outlook for 6 months?
So first, this stock is now facing some supply. So there is a resistance which is playing its role. So 700 level, there is a resistance. Having said this, the level of 650 and 640 is a very decent support. So I believe this may come close to those points. One should average the Tata Motors at that point, because recently when the stock is formed the bottom formation, the level of 600 was a very has now is defined to a very strong support. So we have an understanding that this 600 level will not be broken. So my suggestions would be closer to 650, maybe 660. One should average it out, and I think definitely over the 6 months time frame, he's going to get an exit for sure. So maybe not even exit, might make small profits also. So outlook is positive. This has a potential to go back to 750 to 800 level. So I think one should remain invested.
800 levels are still something that we can watch out for Tata Motors, and that's a view from Brijesh. But next question, or rather the next query, is from Krishna from Hyderabad. He holds shares of PG Electroplast, and this is at a price of 800. Wants to understand the outlook for this on a basis of 1 year, and is considering whether he should average it out further or continue or look for something else. Nirav, let me come to you on this one, as this is a stock that he's looking particularly for his daughter. So it's a long-term investment that he's seeing. What's your outlook on PG Electroplast?
Well, the outlook for the EMS companies is quite strong, and I think PG Electroplast is a stock which he can accumulate further. He can average also at the current levels. So the advice is to buy with a medium to long-term horizon.
Okay, buy with a medium-term horizon is the view on PG Electroplast, looking good. There were a few updates that came through a short while back. The next question, I believe, is a caller. Okay, we've got Vishwas calling us from Bengaluru. Hi Vishwas, very good morning to you. How can we help you today?
Hi sir, good morning sir.
Yes, I can hear you. Please go ahead with your question.
Right time to buy Tata Technology current levels sir in short term in 9 months sir.
In 9 months, all right. So, and you're looking at the price movement in the last few weeks and you're seeing that it's a good opportunity. Is that right?
Yes, sir.
Okay. So, Brijesh, on the charts, it has recovered some ground, but it's languishing where it is at right now. Is this a good entry point in your opinion for 9 months?
Not very sure, because somehow there has been distribution, and this distribution can take it back to 650 or maybe 660 levels. So I see a further downside in this counter. So on an immediate basis, I think there will be some correction. one has to understand whether that downside will be held or not. Maybe it will take a little longer time. I'm not very sure of the 9 months. But on a since it is correcting, there is a further correction which is due. The 700 level is likely to be broken. So one has to keep a wait and watch kind of a strategy and hold as of now. 9 months would be difficult time to predict.
Okay, so that's the view for Tata Tech that we are looking at. But next question is for you, Nirav. And this is on the EMS side. We've already asked your view on PG Electro Plus, but Manoj is writing to us to understand the visibility for a Dixon Tech and overall the EMS space that we are looking at. Are you constructive and optimistic on this space that we are seeing?
Well, I think the EMS companies have a lot of potential as far as Make in India is concerned, and of course, I think all these companies have been scaling up their operations, and especially Dixon Technologies, they are looking at a compounded annual growth rate of around 40% in terms of revenue growth for the next few years. And they have very strong tie-ups. We've seen the tie-ups with Viva and the recent tie-up which they have done with Philips. So the outlook is looking pretty good. Valuations at this point of time are no doubt looking quite expensive, but I think the operating leverage is yet to kick in. So once the operating leverage and the financial leverage come into play, then I think we will see a lot of improvement on the bottom line also. So that will kind of justify the valuations also going forward. So I think they're good from a medium to long term perspective.
Okay. All right. So that's the view on the EMS space. Chandu is calling us from Hyderabad. Very good morning, Chandu. So we've been asking some of our viewers to tell us what advice they've gotten from their dads that has helped them in the markets. Do you have advice that you've gotten?
Yeah, so not exactly market. My father into the other field actually, but he has given the better advice is like, so whatever you want to do it, do start from early morning onwards. So whatever you want to achieve it, you just wake up early and start that one first. So take it as the first priority. So he always told me the same thing. I just followed in my study career, and even I started learning this stock market also. I am following my father actually.
Yeah, that's excellent advice. It's something that bodes well for all of us as well, because when we're tracking the markets, we get up very early in the morning. But having said that, how can we help you? What stock would you like to know about?
I like casing technology actually.
Okay.
Yeah, actually I bought around 41 quantity, around average price 1528. So still I wanted to add actually buy on dip strategy. But if I want to this like a short and medium and long term view on this. So I'm three things I'm doing like on this, on short term and medium and long term also.
Okay.
So that's the reason I selected this stock.
I got it.
So is the right stock? Yeah, it is right.
Time to add more. You want to add more? Or you want to hold?
Yeah, hold and add more. Both
Okay,
I think I want to do it.
Got it. Nirav, specific view on the fundamentals for KFin Technologies. It's trading at what, trailing 62 times, so not exactly cheap. Would you hold or would you add more?
Well, I think you should hold the position and then wait for the results, because when typically you tend to assign such high PE multiples to high growth companies. So I think the growth should justify. If you're not able to justify the growth, then I think typically in such companies, when you are assigning a multiple of 60-62 times, you expect at least a CAGR of 35% over the next 2 to 3 years. Now, if this is sustainable, then it's okay. Otherwise, there is a real chance of a correction. So I think you should hold and then see the numbers and then take a call whether to add or not.
And it's moved quite substantially high, about 67% over the last year. Brijesh, I understand you have to leave us, and thanks so much for joining us today. Always a pleasure having you on the program. Nirav, do stay with us. On the other side of this break, we'll take more questions. Viewers, do stay tuned.
That's huge. That is a biggie. It's out of
Gold Plus Clear Glass. Far ho ya near, सब कुछ दिखे क्लियर।
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down. Cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
Imports become the exception rather than the norm, and increasingly we do almost
Hello and welcome back. You're watching Ask Profit. You can call us and WhatsApp us your queries on the numbers flashing on the screen. But with that, let's take our next question. And this is Mohit writing to us from Ludhiana. He's got about 200 shares of Dreamfolk Services and this is at a price of 259. Wants to understand the 2-year outlook on the stock. If we are looking at the current price, that is he's made about a 1,600 of a profit. So let me take this with Neerav. Neerav, what's your view on Dreamfolk Services?
Well, I think Dreamfolk Services, the stock has been a slow mover in the recent past, but it will really take some time for the financials to play out going forward. So I think he should continue to hold with a medium-term perspective. And maybe even add the stock after the next quarterly results, maybe.
Got it. All right. So it's a slow burn, but hold is a view on Dreamfolks. We've got the next question from Xavier. But before we do that, actually, Ajit Mishra is joining us, Senior Vice President Research at Religare Broking. Ajit, we've been asking our experts, our viewers, to tell us one piece of advice that they took from their dads that has helped them either in life or in the markets. What is that advice for you?
Yeah, good morning, Alex. So, Alex, it's not only one advice. It's been like my entire life based on the principles that my dad taught me during the initial years. That's going to be a very competitive world because he could oversee and things. So prepare yourself beforehand and keep upskilling is something that he kept on saying this to all of us. And one important thing is to manage your finance well. Means it's not going to be like good days you spend everything which you have and then wait for in case if there'll be any situation it's going to be difficult then. So managing your finance, saving was the big part, but gradually you also made a kind of approach that how you should invest is something also that he inculcated those habits. So these are the key basically things that he has given to us, and we are always grateful for all these.
Yeah, absolutely. And this is, I think, a sentiment that a lot of people share. So kudos to all of the dads out there for giving such good advice to their children. The next question we've got is from Xavier, and he's asking about SH Kelkar, and he's looking at investing, or rather buying this for a period of 1 year. And he's wondering whether the current market price is a good one to consider. What's the view, Ajit, on the charts?
Alex, it's been a very volatile ride for this stock. Means at one point of time, in the latter half of 2024, the stock was quoting at 330. Then there was a sharp slide to 150 area, and then again we are seeing a recovery, gradual recovery towards 240. So in case if you are okay with this kind of volatility, definitely you can consider the stock, because as of now the stock has been holding above its short-term averages. So that indicates the trend is still positive. But at the same time, since we have started seeing a correction in the mid-cap and small-cap space, one should be slightly cautious, in this stock. So 230, if the view is very short-term, should be a strict stop loss, and then you can wait for a target around 260, 270.
Okay. All right. Our next caller is from Bengaluru. Mayur is calling us. Mayur, very good morning to you. And if you are a father, happy Father's Day to you. And any thing that you recall that your dad told you about life that you remember today?
Sir, he told the long term and good direction makes a lot of difference.
In the markets?
He told anything in the market and in life as well.
Oh, that's very good advice. I'm sure that it's holding you in good stead. What stock would you like to know about today?
I wanted to know about the long term, about the ITC shares, sir.
Okay. Have you bought? You bought?
It was like, yes, sir. My dad's gift for me about the ITC share. He used to hold it for a long term, so he's gifting me that.
Right.
So I just wanted to know a long perspective of how it works.
Do you know the price or the approximate average price that he acquired it, or when he acquired it, Mayur?
Yes, sir.
Do you remember when he acquired it, or does he remember when he acquired it?
Sir, it was probably in 2008, and now he's giving it to me.
Understood. And do you know what the quantity is?
So the quantity ranges up to rupees 1 lakh.
Understood.
So the present.
The present value is 1 lakh.
Some amount for the safe side.
Yeah.
And,
I got it.
I'm planning to expand it.
I got it. You're planning to add more. Okay. So Nirav, the question is for you then. ITC is a portfolio stock, and his dad bought this quite a long while back. He's wondering whether to add what his father is gifting to him. What's the advice here?
Yes, definitely he should add more quantity because of the strong prospects of ITC. The different businesses are doing quite well, and strong cash flows being generated. So valuations are very, very reasonable. So he should add.
Okay, add is the view that we are seeing from ITC. You know, what he was just suggesting from 2008, he's bought the stock, which was at the levels of around 60 at that time. So interesting one on ITC over here that we are looking at. But the next question is also from Bengaluru, and this is Shil Patil writing to us, wants to understand the overall long-term outlook on Hutco, wants to understand the breakout as well as exit price on this. Ajit, let me come to you on this one.
So Hutco, yes, it's been a steady journey since this March month bottom, and after this recent recovery, we are seeing a marginal drift towards the major averages. So it's still holding above the major averages, which is a good thing. But since we are very close to that mark, we need to be slightly cautious also. So since he's planning to buy fresh, I would recommend him to let the stock reclaim 235, which is the short-term average, so that we have some momentum in place. And then 260, 265 is something that he can wait for. In the interim, 210 should be the stop loss. In case the stocks fails to hold this level, then probably we can see further consolidation.
Okay, all right. So that's a view on Hutco. Anticipate further consolidation is the view. Deepak is calling us from Pune. I believe, Deepak, the question is on Power Grid. Also, since we're on the subject, and this is Father's Day special, any advice that you remember that your dad gave you that has helped you out?
Good morning. Hi.
Good morning.
So, yeah, I mean, father's advice is always like, treat with caution and look before you leap. Trust but verified. I mean, in very short words, that would, I think, sum it up all. And that can, help us in anything that you probably want to take a decision on.
Yeah.
So I think that would be...
That's the quintessential dad advice, isn't it? It's the quintessential dad advice. But Deepak, what would you like to know about today?
Okay, so Power Grid, I have bought initially 500 and now I'm holding about 4,500. And I've been averaging them out over the past 2-3 months. And the losses, I mean, it's not crossing 300 marks. So now I've been able to average it out about at 299.
Right.
So I hope it should cross that and I should be able to, take out my principal.
But you've got you've got a short-term perspective, is that right?
Short term, yes. I would like to, in terms of perspective, I would say I would like to make close to about 8-9% on it, and that's what I was looking at. So I just like to know as to what is the future of this stock.
Okay, so let me get a view from Ajit on this one. Ajit, this is generally a stock that people buy as part of their long-term portfolios, but if you were looking to make a bit of a gain, and he's defined that as less than 10%, what is the time frame that you would advise that he hold on for, and when is this likely to take place?
Right. So, Alex, it's like, low beta counter, as we all know that it's a portfolio stock, and off late, after the attempt of, recovery, it failed to hold this 230, 330, 325 zone. And since then, we are seeing gradual drift. So now the stock is trading below the major averages. So at least this is not a good time to add fresh. But in case if he has existing positions, he can stay put, because downside also seem capped. So close to around 265, 270 is the area where we have multiple supports. So one thing that he can do if he's planning, let's say, for 3 to 6 months, is to add more in case if it comes closer to the lower band, or wait for a breakout above 300 to enter fresh. In that case, he'll find momentum towards 330, which is 10% of those area.
Okay, so that's the view for Power Grid that we are looking at. Next question is from Puneet from Andhra Pradesh, wants to understand the overall long-term view on something like a Ashok Leyland. Nirav, let me come to you on this one.
Well, Ashok Leyland, we are expecting commercial vehicles to do reasonably well going forward. So the outlook he can expect modest returns as far as Ashok Leyland is concerned.
So would you buy at this point, Nirav, for the long term?
I think if he's holding, then he should continue to stay invested. Not recommend buying at this point.
If you were to buy something in the commercial vehicle space, what would it be, if at all? Would it be something like, and I'm widening the scope of that, not just in your traditional CVs, I'm talking about tractors as well, or farm equipment. So would you say that Mahindra and Mahindra maybe, or something else in the commercial vehicle space?
Well, I think Mahindra and Mahindra is looking quite good, and as far as buses segment is concerned, we were more inclined towards that. So we would like to look at SML Isuzu as well as Force Motors.
All right, we've got our next caller from Bengaluru. Murli is calling us, one of our regular viewers. Murli, very good morning to you. I'm going to switch the roles, and I'm going to ask a question to you, and maybe a message that you can send to your children. What is the advice that you have for them?
Yeah, definitely. I have only one son. So I used to advise him always that practice makes you perfect. Because I used to teach him mathematics and all the school days.
Right.
So I used to tell him always, don't say once you know, because he used to do abacus and you will skip many steps.
Right.
You'll suddenly get into the final result, which teachers did not like. They want a step-by-step answer because they give marks for steps.
Yeah.
So I used to tell him always, don't do that, and practice always. Even if you know it, practice again. Practice makes a man perfect. And equal, if you read 10 times and write 1 time, that is more effective. Writing 1 time is more effective than reading 10 times.
Yeah, that's very good
advice. Practice makes you perfect.
Yeah. I didn't know that.
Be early in the morning. Be early in the morning for whatever you want to do.
And great advice, Murli. I think a lot of our viewers will also benefit from that. I didn't know that you were a teacher, and a lot of the questions that you've asked in the past.
I'm not a teacher. Sorry, I'm not a teacher. I'm a professional.
Yeah, okay.
Yeah.
Okay, you're a professional. Okay, but the fact that you've given your son such advice, it explains the questions that you've been asking, because I think you've been very methodical in the questions that you've picked. So, what would you like to know about today?
About PNB housing.
Okay.
Just in the morning of this thing, Iran-Iraq conflict on 12th.
Yeah.
I was not knowing that the conflict has started. The prices were hovering around 1150 or so. Suddenly it has fallen.
Yes.
So I bought it. Around 1106, 200 shares. So I know about the company.
Yeah.
Only thing is a waiting period and averaging, which I would like to know, because I've seen the financial parameters.
Yes.
It is a very excellent setup. And the only thing is, should I add more and wait for from a 1 year point of view at least?
Okay.
With the rate reduction in the RBI rate reduction.
Exactly. That's why I'm going to go, even though it's a 1 year time frame that you've identified, I'm going to go to Nirav on this one, because Nirav, this rate cutting cycle is anticipated to help a lot of the real estate plays. But the only question is, will that benefit play out in a 1 year time frame, or would you have to widen your time horizon? And how do you like PNB Housing? He's already bought at levels of 1,106.
Well, he can continue to hold, but he will have to widen his horizon, because I think it will be difficult to expect some very quick results. We will have to hold for maybe more than a 1 year horizon.
Is this the best play though, Nirav, in your opinion, in the housing finance space, or would you pick, and I'm going to throw stocks like your Bajaj Housing Finance into the mix here?
Well, yes, I think Bajaj Housing Finance can be considered because of strong promoters, and it's a relatively smaller player, but still strong prospects as far as growth is concerned.
Okay, and what about State Bank of India? I'm just trying to get, if you are to play this rate cut cycle, and considering that we just heard today that State Bank of India has cut its savings rate to 2.5%, I think that drives home the point that you shouldn't leave excessive amounts of money in your savings bank account, and maybe you should invest it, and there are several other options as well. But what would you do with the State Bank of India?
Well, I think we've not looked at State Bank of India so thoroughly, but I think our focus is more towards the private sector banks. So we like ICICI Bank, HDFC Bank.
So that's the overall view that we are seeing, even the impact on these saving rates changes that we are looking at in terms of where the performance could be for some of these counter. But next question is from Rajiv Bhatia, and he wants to understand the picture for L&T. He's holding it at a price of 3,300, currently about 10 shares that he's bought in May 2024. Wants to understand whether he should sell or continue to hold for the next 3 months. So Ajit, let me come to you on this one.
So I would recommend him to hold, and in fact he can add more in case if he's planning, to add some fresh to his existing position above 37.20 level, because in that case the stock is likely to retest its previous record high close to around 38.50. So it looks a bit strong amid all this choppiness which we are seeing in the market. And for the entire position, he can maintain a closing stop at 35.50.
Okay. All right. So that's the view. The next question is from Satya. Satya is calling us from Bengaluru and asking about Raymond Limited, I believe. Satya, what's your question? Good morning.
Good morning, Alex. Good morning to the panel also. I have 73 shares of Raymond. Yeah. I purchased at 651 rupees.
Okay.
Average.
Okay.
So I am in a profit of around 4% right now.
Okay.
I just want to hear whether I can hold it or sell it out.
You're in a loss, right, of about 5,000 rupees?
Correct. Yeah, correct.
Yeah. And you've got a short-term time frame, Satya?
6 months.
6 months, okay. Ajit, I'm coming back to you. 651 is the buy price, 73 shares. Would you book losses or wait for a comeback in this counter?
So Alex, I would recommend him to stay put, because we are very close to the support zone. Means 560, 65 is the area basically where we have multiple supports placed. Though the stock looks slightly weaker side, but the kind of volume section that we are seeing, it seems like the sellers are also exhausted. So probably 605, 6010 is something that once the stock crosses this area, then probably we can see a fresh recovery towards 640, 660. So around that zone, he can review his position again.
Okay, so that's a view that we are seeing for Raymond. Next question is also for you, Ajit. Now, Rahul is writing to us, wants to understand a short-term outlook on Brainbees Solution. He has 2,580 shares of the company, and this is at a price of 410, currently facing a loss of 93,000 on the counter. Wants to understand whether he should continue to hold for the next 6 months. Your view on this?
So there was an attempt of recovery, means after this steady decline post listing, almost 4 or 5 months of consolidation and then an attempt of recovery, but it failed to hold above its medium term moving average. So this indicates that people are still bit cautious in the stock and doubtful of the recovery. But considering the kind of volumes that we are seeing in the decline, so it seems like okay to me. There could be an attempt of recovery once again if the stock crosses 400. We are close to that mark. 340, 45 is basically where we have multiple support. So if he's okay with that as a stop loss, he can continue to stay put. Once we cross 400, then probably 440, 460 is something that the stock might reattempt.
Okay. All right. Our next caller is from Hooghly in West Bengal. Arpan is calling us. Arpan, very good morning to you. How can we help you today?
Good morning. My query is about the HFCL share.
Okay.
I had bought 50 shares of HFCL at an average of 86 rupees. And now it is in loss.
Right.
So
a very small loss. It's trading very close to your buy price, Arpan.
Hello?
Yeah, I'm saying it's trading very close to your buy price, so the loss is only 50 rupees or thereabouts.
Yes.
So what would you like to know?
I would whether I would sell or hold it. I want to know that.
And have you identified how long you would like to hold the stock for?
I think I should hold it for the next 3 months.
3 months. Okay. Okay, I got your question. Ajit, 50 shares at 86 rupees, very close to the market price right now. What is the view? What are the key levels to watch?
So Alex, since his view is short term and the stock has been struggling for quite some time, means it's been trading below all the major averages. There was an attempt of recovery of late, but couldn't sustain even the short term and medium term again. So we are very close to its buying price. It's prudent that he should exit his position and switch to the counters, which are trading closer to their record highs. So bigger names like Bharti Airtel, ICICI Bank, HDFC, these are better stocks to invest even if the view is 3 months.
Okay, so exit on HFCL is the view coming in from Ajit. Ajit, on that note, the next question is for you as well. And Tom's is writing to us from Bangalore. He's holding about 500 shares of Wellspin Living and bought it at a price of 141. So from those levels, we're seeing about 11 to 12% of a correction. Wants to understand the next 6 months outlook on this counter. What's your view?
So this stock has been trading extremely volatile from almost like 2-3 months now. Means from 100 to 150 and then again to around 130 area. So we are currently middle of the band and the major averages are placed around 140-45 area. So the tone looks sideways to negative. So if the view is short term, I would recommend him to exit at current levels and wait for the stock to reclaim 150 for re-entry.
Our viewers will be familiar with the rare earth magnets shortage that came about because of trade tensions between China and the US. And while there's an anticipation that this will get resolved, Nirav, there's an interesting question that has come from Santosh, who's writing in from Chennai. And he's asking, are there companies that are involved in in India with regard to rare earth magnets? I know the answer to that, not many, but there is an anticipation that some of them will get into it. But he's also talking about companies contemplating recycling of rare earth magnets. I'm not really familiar with this. Have you read something like this? And if there is a play, what would it be?
Well, from whatever I've read, I think GMDC could be one potential player in the rare earth mineral space. There the prospects are looking quite attractive. I'm not really sure about the recycling part of the rare earth magnets.
Got it. Okay, that's not a problem. It is something that is dependent on reserves as well, which we don't have too much of in India. All right, it's time now, gentlemen, to hit the rapid fire round, and you know what that means. We'll throw as many questions at you over the course of 2 minutes to try and answer as quickly as possible. Aeroflex is the name of the counter we're talking about first. Dr. Abhiram is asking about this. 175 is the buy price, and he's got 2,000 quantity. Should he hold, Ajit?
Hold with stop loss at 160, target 190.
Okay, next question is from Sunil from Bengaluru. He's holding about 50 shares of Axis Bank at a price of 555. Wants to understand a 5-year outlook on this. Your view, Nirav?
Hold.
Okay, Praj Industries, I don't know what the buy price is. Angad from Indore. wants to know whether it's a hold or a sell at this point. I guess he's got a short-term time frame. Ajit?
Hold, 450 stop loss, 560 target.
Okay, next question is from Prakash. Wants to understand the view on Jio Finance on a long-term basis. Wants to understand whether he should make fresh entry at this point. Nirav, this is for you.
Add.
Okay, I don't think we're going to have a view on Raju Engineers. Ajit, I'm just going to try. I haven't looked at the counter. Raju Engineers, bought at levels of 253. Any view?
Alex, I've heard this name for the first time. Sorry,
Yes.
I can't hear.
Same here. All right, so I don't blame you. The next question that we're taking is on Avantel. If we've got a view, 85 rupees is the buy price. What's the view, Nirav?
Hold.
Okay, next question is for Kirti Vasan. He wants to understand the view on Triveni Turbines. Bought 50 shares of this at an average price of 565. Ajit, your view for the next 6 months?
Looks positive. Hold, 560 stop loss, 680 target.
Coming back to you, Ajit, Bajaj Housing Finance is the name of the counter. Bought at levels of 136.6, 500 shares. 6 months is the time frame. Should he hold or sell? This is a view from Guru.
Hold, 115 stop loss, 140, 45 target.
Okay, next question is from Vijay Lakshmi. Wants to understand the outlook on Deepak Nitrite. Bought it at an average price of 2,135. This is his average since the last 2 years. Wants to understand whether to hold or exit. Nirav, your view.
Hold.
Okay, all right. That brings us to the end of the rapid fire round and indeed this edition of Ask Profit, the special Father's Day edition. Ajit as well as Nirav, thanks so much for taking the time. Always a pleasure having you on the program.
Thank you.
All right, like I said, that brings us to the end of this edition of Ask Profit. It's been an absolute pleasure bringing it to you. To all the fathers out there, happy Father's Day and keep giving your kids the amazing advice that you always do. That brings us to the end of this episode, but there's more lined up, starting with Know Your Company up next. This is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
Hello and welcome. You're watching KYC. I'm Harsh Saita. Today we're going to focus in on KRBL. It's the rice maker in focus, and that's because FY26 could well be the year in which you see a big turnaround in KRBL's numbers. I want to know whether that is actually possible or not, because you've seen a drag over the last 3 years, and we'll go through some of the numbers. We'll also go through how the business has done, what the risks are, and that will give you a better picture. But you want to know whether export demand and growth will come back in a big fashion in FY26. And if it does, you might well see a very large turnaround with regard to the numbers, both on the top line as well as on margins, because this is where it's been a drag where the business is concerned. So that's the first point. The second point is with regard to outlook in global markets. Saudi has its set of issues with regard to distributors. US has its set of issues, and Europe has its set of issues. Europe is seeing, or rather the European business is seeing competition from Pakistan. So a lot of those factors, can it unwind in FY26, aid the numbers for FY26, and how long can those trends last going forward? All of that is what I want to understand. The second one is scope for margin expansion. So one is, can pricing come back in a big fashion? Can some of these markets see a recovery? And then will that drive up margins? Because the other piece that's dragging back margin is the pricing and the high cost inventory, which is just coming up on your screen. So that's what's really keeping the margins, or keeping a lid with regard to margins. Is that drag truly over? Then it'll be a double unwind. It'll be an unwind on the top line as well as unwind on the margins, which will be large. So I want to also understand, therefore, how the margin outlook is. Will both of those shape up in FY26, or will you see some bit of that in FY26, some bit of that in FY27? So that. Then I want to also understand how the domestic market is going to be doing. You could well again see some bit of tailwind even from the domestic market. Last piece is they are also venturing into new products. Edible oil is one of them. Then you have several other new initiatives which they will likely take up. Their new manufacturing facility is also coming on stream. And therefore, you've got all of those tailwinds also, which could likely aid the numbers in FY26. So it's an interesting inflection point at which we are currently placed where KRBL is concerned. But first off, as we always do, let's look at how the business is and what does it do. I'm going to, again, try my best to break this down. It's the leading basmati rice producer in the country. It's fully integrated in terms of its operations. It's a pioneer in the basmati rice industry. All of these is what it does, fully integrated, from seed development, contact farming, procurement of paddy, storage. Again, paddy prices is the other piece which could well impact numbers. Processing, packaging, branding and marketing. So it does all of that. It has its own brand, which is one of the largest brands in the country. It owns India Gate basmati rice. This one has a market share of 39% in general trade and a higher market share of 42% in modern trade in India, and therefore it's a large market share that KRBL actually has. It's the largest packaged exporter as well of basmati rice from India, exports across 90 plus countries. We'll come to the export numbers in just a bit. Let's talk a bit about the domestic numbers first. The distribution network, it has more than 850 dealers across India, and it covers over 4.1 lakh or nearly 4.1 lakh retail outlets as of FY25. And now let's talk about exports. 90 plus countries is what it exports to. and I will again give you geography-wise, but before that, manufacturing. It manufactures across all of these geographies, as you can see, so it has a decent presence, especially north as well as West India, decent bit of presence across those areas, which helps them also have a decent grip over distribution. Last off, let's talk about exports now. 90 plus countries is what it exports to, 29% better realization. When you're looking at region-wise export, and I told you I'll give you this, one is Middle East is roughly 58%, Africa is 11%, Europe is 11%, so that takes your number to around 80 odd percent. Thereafter, you have North America with 10%, and then you have others with 10%. So that's how it is. The max, as you can see, in terms of the number, is that Middle East number, and this is where they face some bit of concern with recently, especially with regard to distributors. How quickly can that get resolved? And part of it is already resolved, but how quickly can that unwind and start making a dent on numbers overall and gain all the market share that they've lost? That's a key piece of what I want to understand. In terms of domestic business, as you can see on your screen, it's accounted for around 74% of the total revenue in FY25. Does that change materially in FY26? And it's also got the largest rice milling plant in the country. In terms of new segment, let's talk about that and put that out of the way as well. It entered into the healthy edible oil segment and expects to generate around 200 to 250 crore in revenue over the next 2 to 3 years. That's the outlook with regard to new business as well. So that could well impact the numbers as well. Now let's talk about the factors that we'll have to watch out for when we're talking about KRBL. And I'll start off, of course, with the income statement, the balance sheet, the cash flow, the return ratios, the shareholding, the street cred, the outlook, and the valuations. A lot of this, of course, is backward looking. That's an important caveat to look at. And therefore, the ratings will obviously be on the basis of the numbers that have played out over the last 3 years or so. Again, important caveat, because all your returns going forward will be basis how the future plays out of the company. So one is you want to look at how the company has done over the last 3 years, but you also want to understand whether there is a reasonable turnaround possibility going forward, because that's what makes an investment interesting. So let's pull up the income statement. Let's start off with that. You look at the 3-year CAGR on the top line, it's just 10%. It's clocked a top line of around 5,600 crore. It's been a largely flattish kind of a move on the top line. EBITDA has been even more difficult to see growth there. Just a 4% 3-year CAGR growth. EBITDA has actually tapered off in FY25, so you're seeing more pressure. Cost side pressures is what's weighing it down. You have paddy prices which had inched up. You have realization prices, or rather realizations which haven't materialized as well as one would expect it to. And then you have all the drags from the businesses, especially sitting out of Europe, where there have been certain challenges. And therefore, you're seeing the kind of numbers that you're seeing. Profit after tax up 1% on the last 3-year CAGR basis. So not looking impressive, and no reason why one should even give this a neutral. It's a difficult time, and therefore we've given this at best a thumbs down. In fact, when I'm looking at the journey, right, from FY22, profits in FY22 were at 459 crore, 701 crore in FY23, fell to 596 crore in FY24, fell to 476 crore in FY25. So you want to see whether this again quickly unwinds and whether profitability kick-starts or not in terms of strong growth in FY26. And that's where you want to then compare the valuation which is available currently versus previously, or rather 5-year average, and see whether this could well be lucrative or not. And of course, everyone has to do that individually. Let's look at the balance sheet now. In terms of equity capital, it's fairly well capitalized. It's got very little to no borrowing, frankly, on the balance sheet, at least at this point. It has a short-term borrowing of around 300 odd crore, but it's a very small quantum in terms of borrowing, given that it has an 8,000 crore market cap and it has 5,000 crores sitting in equities. So very little to no borrowing per se, and in fact it's net cash positive at this point because the cash that's sitting on the balance sheet is quite large. You have approximately 450 crore of cash sitting on the balance sheet, as you can see on your screen. So no concern with regard to the balance sheet. We'll give this a strong thumbs up. And mind you, it is a cash flow generating company. The only concern possibly with the balance sheet is that inventories are quite elevated and inventory costs start to pile up, and you want to see whether that can be controlled or not. Optimizing inventory is important for a business like KRBL. Can they manage to do that? Well, they've suggested in their Q3 FY25 earnings call that they continue to work on the inventory angle of things. Can that change, or has that materially changed? Are we starting to see results? Is something, of course, that we'll quiz management on. But otherwise, there's no concern where the balance sheet is concerned. The numbers look solid. Let's talk about cash flows. And my point on inventory spills over to cash flow. You look at the cash flow from operations in FY24, it's largely looking tough because of the rising inventory on the balance sheet. I'll spell out the numbers for you. Inventory rose by 1,370 crore in FY23. It rose by another 264 crore in FY24. So what that does is it puts a lid on the free cash flow coming through into the business. Your cash flow from operations gets capped because all of the money that you are currently having is locked in inventory. You want that to materialize into sales and that pressure from inventory get released, but that's not happened. Whereas in FY25, that has started to unwind. So the inventory unwind in FY25 versus FY23 and 24 is of 566 crores. So you can see a large inventory unwind that's coming in FY25. And therefore, when you're seeing that operating cash flow to PAT ratio, which is on your screen, so cash flow from operations, PAT, and then OCF to PAT, which is operating cash flow to PAT, that's 131% in FY25, and that's because of the inventory unwind that's happened. So as that unwind happens, you will start to see cash flow coming through, which is what you want to see in a business like KRBL or in any business for that matter. Cash flow from operations is the key. So that's with regard to the cash flow. We'll give this a neutral. Does that sustain? Does it go back? Do we again see an inventory build up? How certain are we of that? We will quiz management and we'll try and see what they have to say on that count. Now let's talk about return ratios. And obviously, as you've seen, it's been a difficult time for the business, and therefore you see the return ratios not looking pretty at all. So yes, FY23 was a decent year, 15% ROC, but thereafter we're seeing a tapering down. You want to wait and watch and see how this plays out as ROC starts to normalize, if profitability starts to pick up. So we've given this a neutral for now because you've seen a sharp unwind with regard to ROC and ROE ratios. Let's talk about shareholding now. No concern where shareholding is concerned because you're seeing a 60% stable holding by the promoter group. I want to also try and probably just quickly highlight that they've held anything between 58.8% to 60.2% between FY17 to FY25, and currently their holding is at its peak. I know it's just a 1.5 to 2% variance, but its holding is, the promoter holding is at its peak, at least in the last 8-year period that we are considering at this point. So strong thumbs up. It's a strong promoter holding. FI interest has sharply fell in FY22. Thereafter, we've started to see a little bit of a trickle back. And since FY20, the FI holding is at its all-time high at 5%. DIIs in any case were very small, so I won't cover that. We have government holding in this as well. I'm going to spell that out. And the government currently owns around 6.3% of this company. Public, therefore, is sitting with around 28%. The peak public holding was at 34%. It had tapered down and has consistently tapered down and currently sits at a 7-year low of 28%. The number of shareholders, though, has gone up quite significantly from 35,000 odd in FY20. It's currently sitting at 115,000. So again, just for your understanding, what is the investor composition in something like a KRBL? So that's on investor composition. Now let me talk to you a little bit about street cred and how the stock has moved over the last year or so. It's given decent returns for a small cap company, 11% 1 month, 16% 6 months, 18% year to date, and around 18% over the last 12 months as well. So fairly steady in this large correction that we've seen since September of 2024. We've not seen too much damage on the stock price, and therefore that's a positive. But the 5-year returns is 45%. So you want to wait and watch how this plays out in terms of stock price performance, because we've not seen that. We've given this a neutral. Now I want to talk to you a little bit about what to look out for. What's the outlook like? What are the risks like? And this becomes important prior to the conversation. One, demand from Middle East, Europe, US is likely to support growth going forward, is what management has said. Q1 FY26 gross EBITDA at around 15% odd is what they've guided for. FY25 paddy prices are down 20% YOY. That's what they've said. Healthy edible oil launch also will aid the numbers going forward. How much? We'll have to quiz management on. Risks. Pricing pressure from exports is one risk, which is realizations as you call it. Second, can paddy prices rise? Can that be a risk? For sure. Plus high cost inventory, could that weigh numbers? Is the other big risk. Distributor issues in Saudi as well as moreover Middle East. Is that, or does that continue to be a concern? And competition from Pakistan in that European market could also be the other piece. So we've given this a neutral in terms of outlook and risks. There are plenty of them playing out. I want to quickly talk about valuations. Now, when you're looking at the trailing 12 months price to earnings, KRBL trades at 17 times. And we've taken trailing 12 months because there's only one analyst which tracks KRBL, and therefore we don't want to skew the data, right? So KRBL 17 times, but you look at LT Foods at 26 times, Chamanlal at around 17 times as well, and therefore we've given the valuations a neutral. Also, the 5-year average valuations are far lower compared to the current valuation. So again, you want to see whether there's substantial growth in profit and a valuation number 1 year forward looks attractive or not. So maybe something that we'll get better perspective on once we speak with the CFO, Ashish Jain, who's going to join us in just a minute after we take the ratings. Let's pull up the ratings now and sum up everything we've spoken about. One, the income statement, thumbs down, want more on growth. Balance sheet, cash flow, return ratios, that's how it's spelled out. And then we have shareholding, street cred, outlook, and risks and valuation. That gives us a 4.5 out of 8 on our KYC ratings. But let me go across. Mr. Ashish Jain joining us, CFO KRBL, to talk to us about the outlook in FY26. Good morning, Ashish. I want to first start off by asking you how the outlook from an export perspective looks like for FY26. Is there enough tailwind? Are the issues in each of those markets looking much better than they were in FY24 or 25?
Yeah, good morning and thank you for having us. From export point of view, we have two sides of the business. One is where we export a branded rice, and the other is the bulk export. On the branded rice exports, you would have seen in the last quarter as well as last year, the performance is far better than the preceding year. We are hoping that this year is far stronger in terms of branded exports. One of the reasons is that we are seeing good offtake in Saudi, which is one of our largest markets. So that's on the branded export side. On the bulk export side, it tends to be affected by geopolitical risks. So some of the recent news items, including the Israel-Iran conflict, is something that we are watching closely. So overall, neutral to positive output for exports for FY26.
Okay, and Ashish, just talk to us about geography specific. How is Europe shaping up? How is the Middle East shaping up for you? You've allotted a distributor. The export numbers for Q4 look better. Is this the kind of number that you will start to clock? And what's the revenue mix going to be like in terms of exports? Because currently revenue is skewed towards domestic because of likely because of certain challenges?
Sure. So, if we look at basmati export from India, the Middle East accounts for around 80 to 85% of the total export of basmati from India. So, for KRBL as well, Middle East is an important market. So therefore, in terms of the geography mix, it is really the overall direction of exports of basmati from India, and KRBL is no exception. Now, from our point of view, all Middle East countries are markets, but some markets are more important than the other. So one of our key markets is Saudi, where we have not yet appointed a distributor. However, we've seen local importers, because of the demand for India Gate rice, placing orders on us, and which we've been shipping. So that continues to happen. But of course, the overall market in terms of full potential will be realized once we have a more systematic distribution arrangement in place, which we are in the process of doing right now. Now, in terms of export versus domestic share, so if you look at our record in the past, traditionally these two segments have been roughly 50-50 in terms of revenue share. Over the last few years, because of various aspects, including the distribution challenge that we had in Saudi Arabia and some other industry-wide challenges, export has been rather muted, and while the domestic business has grown, so which is why the share of domestic business has increased. However, we continue to be very positive on export in the long run. The reason for that are very simple. 85% of basmati production is in India. So regardless of where basmati is consumed, the world looks at India for supplying that, and KRBL is very well placed in meeting that demand. So longer term demand is not a challenge. The country enjoys a natural advantage. KRBL is a natural leader as far as branded exports is concerned. So the long term potential is intact. And therefore, we are very hopeful in terms of restoring the share of both segments in our revenue.
Okay, and how quickly does Saudi normalize, sir? Give us that perspective.
Yeah, so our view right now is that we want to use the current financial year to address the distribution challenges that we had. As I mentioned earlier, the offtake in terms of supply to local wholesalers has already begun. The other efforts we are in the process of doing. So our hope right now is that in the current financial year, we are able to fix these issues.
Okay, what does the interplay between inventory, between paddy prices, and between your top line growth do to margins, sir? Give us a perspective on what we should expect on the margin count in FY26.
Yeah, sure. So before that, let me just give you a perspective on our inventory. And I did hear your comments earlier in the program. KRBL focuses on aging rice. So rice as a grain improves with age, and what we offer to the consumers across most of our SKUs is aged rice. That plus the fact that rice is a seasonal produce in India. So 95% of rice production in India, at least as far as basmati concerned, is harvested in Kharif, which is the months of October to December. So most branded and large rice players stock up their inventory. So which is why you see higher inventory, and then as we approach, as the year goes, the inventory levels fall. So because of the business model which focuses on aging, and because of the seasonal nature of the raw material, which is paddy, we carry relatively large inventories. However, that per se is not a challenge. So if you look at our track record, we've had a very long track record of successfully managing inventory. So therefore, we have internal processes to mitigate risks that might typically arise from large inventories. Now, in terms of interplay on margins, so when we age rice, it is fundamentally a different product from a rice which has just been harvested, because like I said, the grain improves with time. So let's say if we purchase paddy in end of calendar year 2024, when it has been aged for a few months or maybe even a year, it is a different and a superior product. So that combined with a brand, it gives us the ability to sell that in the market at higher prices. Now, because of this buffer that we have in terms of higher realization, the price fluctuations in the commodity rice market, we are able to offset. And again, like I said, we have a long history of being able to do so. So largely the variations in the domestic rice prices do affect us, but not in the entire magnitude as they would affect a traditional trading company or a commodity player. So that's the interlink between inventory and margins.
So, sir, very simply put, is there scope for margin upside, and how close to 15% do you get to in FY26? What's the goal?
Yeah, so I've mentioned earlier. So, if you look at our quarter 4 margins, margin profile improved. And I've said that broadly, that's the level that we are hoping to achieve in FY26, primarily for 2 reasons. One is we are hoping to see better export numbers. Exports, typically branded exports, tend to be higher margin as compared to the domestic market. So as share of branded export increases, which we are hoping to do, the margin should see an uplift. And similarly, our inventory cost should also rationalize itself as the share of the recent crop which we purchased increases in the overall inventory. So because of those 2 reasons, we hope to see higher margins in FY26.
So a 16% margin is the threshold you're looking at, because that's what you've done in Q4.
Yeah, so see, we don't give numerical guidance, but Q4 is a good indicator.
Sure, fair. Okay, yeah. Completely take your point. And so on the top line growth, now with exports coming back, does that grow as well? How should one look at that number?
See, with exports, like I said, we are evolving the situation in Saudi in terms of the distribution side. In terms of the bulk side, it continues to be wait and watch, given the recent events that have happened. So we are positive on exports, but difficult for me to give out a number at this point.
And paddy prices falling, are we seeing that sustain FY26?
See, paddy prices, like I said, 90 to 95% of the basmati paddy is harvested in the Kharif season.
Yes.
And that's when the price discovery really happens. So there is a price that gets discovered during the season. And then after that, of course, paddy and rice are traded. So the price keeps changing every day. So at this point, even before the monsoon has set in, it's very difficult to comment on how the upcoming season should behave. It's too early right now.
Okay. So we'll wait and watch on that. What about new businesses? Let's talk about the edible oils business. How quickly does that contribute to top line? Does it go 200 to 50 crores straight away from FY26? And what's the margin outlook there? What's the kind of margins you're expecting to clock?
Yeah, I'll just quickly give you a perspective on how we see new businesses. So, we believe that KRBL brings a couple of strengths. So one is, of course, our brand, IndiaGate. The second is, the platform that we bring in terms of our ability to source directly from mandis and farmers and, place it right on a retailer's shelf. And third is, of course, our ability to invest in upcoming businesses. So with that, we are looking at various new ideas. One of them, which we launched recently, is healthy edible oil. So I think that has a very strong fit. The reason is the primary raw material for that is rice bran oil, which is something that we already produce as a part of our rice milling and processing capabilities. In terms of how quickly it scales up, well, we've just launched it. The initial reaction is strong. We are first taking it across the broader channels like GT. And we are looking at about 2 to 3 crore number in maybe 2 to 3 years out of that product.
Okay. Thank you so much, Ashish, for joining us. In fact, great perspective, of course, into the industry as well as into what's in store for FY26. Couple of monitorables that viewers will obviously keep in mind as well that we spoke about. But out of time on this one. Thanks for coming and speaking with us.
Thank you.
All right. So, and viewers, completely out of time on this edition of KYC as well. Hope you found it helpful. Stay tuned to NDTV Profit. More action on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to
Markets at day's high. Nifty bounces 200 points from day's low to trade above 24,900. Sensex hovers near 81,750. Meanwhile, IT, oil as well as gas power this particular move. And Tata Motors reels under pressure. JLR shocks investors by slashing FY26 EBIT margin guidance to 5 to 7% from 10% earlier. Israel and Iran continue to strike at each other for the third continuous day. 224 people killed in Iran, according to its health ministry. Head of the Islamic Revolutionary Corps killed along with 2 senior generals. Meanwhile, PM Narendra Modi is set to visit Canada to attend the upcoming G7 summit following an invitation extended by Canadian Prime Minister Mark Carney as well. Will strained diplomatic relations now ease? Something that we look forward to. And keeping up with the spirit of Father's Day, NDTV Profit brings you special coverage through the day. Stay tuned for more. Hi there, you're watching Markets at 12 with me, Shreyansi Singh, and this is the show where we get you a highlight of everything that is happening with the markets. So let's take a look at what the markets are doing at this point in time. Before we get a little sector as well as stock specific, first things first, when you take a look at the Nifty as well as the Sensex, market is in fact near the day's high. So a decent start to the week, a decent Monday is what you're looking at. Let's take a quick look at the gainers coming in from the Nifty pack. From within that particular pack, SBI Life, HDFC Life, so some of your insurance names. Cipla from within the pharma pack, 1.7% gains coming in for Cipla as well. ONGC, Trent as well as TCS are some of your other top gainers from within the Nifty 50 pack. And on the flip side, you do have Tata Motors that is reeling under pressure, 4% knock coming in on that particular counter. And Dr. Reddy's as well as Sun Pharma also a little bit on the back foot. Largely, that's the kind of picture that you're looking at as far as the markets are concerned and some of your Nifty 50 counters are concerned. But tell you what, let's take a look at the first stock that I mentioned from the list of losers, and that is Tata Motors. Like I mentioned, that particular stock is taking it on the chin. In fact, it's reeling under pressure, 4% knock coming in for Tata Motors. On the back of JLR, in fact, shocking investors because you do have that FY26 EBIT margin. That is something where you've seen the guidance being slashed to 5 to 7% from 10% earlier. In fact, Hiral is standing by with some more details. Hiral, tell us about this particular guidance reduction as well.
Tata Motors is now the top loser in terms of Nifty 50. EBIT margin guidance, that has been reduced to 5 to 7% for FY26 versus the earlier guidance of 10%, and that's the key highlight. Because of the guidance reduction is what the stock is reacting to. In terms of the free cash flow as well, that is close to almost zero in terms of FY26, and they're expecting improvement on a year-on-year basis only from FY27 and 28 onwards. Apart from that, if you talk about their China premium market, that is what has been facing pressure, and this is what they've given data in terms of calendar year 24. 215 models across companies have seen a price reduction, so there is pricing pressure that is coming in terms of the Chinese market. Apart from that, 4,400 retailers have gone down in the PV segment, and the premium market has seen a degrowth of around 15%. So overall, China, which is one of the major markets for JLR, has been under pressure. Overall, another segment that they are looking to enter is the Freelander, but that will come in only in the second half of FY26. So there is a wait and watch mode on that front as well. Though FY25 for Tata Motors was a breaking year because they did deliver the best ever EBIT since FY15. Record profit number in terms of FY25, the best ever dividend, and in terms of Defenders, they sold a record number of 115,000 units. So in spite of FY25 being really strong, China is the one which is going to put pressure from here on as well. And the kind of downtick that they're expecting in terms of the EBIT is going to be a concern at least for the next 1 year. 27 and 28 is what we need to wait and watch and see.
Well, absolutely, Hiral. So that particular counter is the one that you're watching out for in trade today. Tata Motors is the one that you're looking at. But let's also take a look at something from the primary market as well at the upcoming IPOs, because you do have an IPO wave, in fact, hitting the market this week. Investors can anticipate at least 7 IPOs this week, including 2 on the main board and 5 on the SME platform as well. In fact, we have Mahima who's bringing us all of those important details when it comes to these offerings. Mahima?
So as you rightly mentioned, yes, there are 7 new IPOs this week that one needs to watch out for, 2 from the main board. Now, in terms of the main board space IPOs, the first one that's a new IPO is Eris Infra Solutions. The company is basically a modern platform that helps construction and infrastructure companies to manage their finances as well as their material buying. In terms of the details, it starts on 18th of June and ends on 20th of June. The price band is set between 210 to 222. Lot size is 67 shares. And the issue size is roughly 500 odd crores. The next IPO that is already open is Oswal Pumps. The company is basically a manufacturer and distributor of pumps. In terms of details, it started on 13 June, but tomorrow is the last date for the IPO. The issue price band set is set between 584 to 614. The lot size is 24 shares, and this is roughly a 1387 crore IPO. Now, in terms of the SME IPOs this week, the first one is Samay Project Services. Well, this IPO basically, the company basically offers EPC services and specializes in balance of plant services. Now, in terms of details, it starts on 6th of June, that is today, and ends on the 18th of June. The issue price is between 32 to 34. Lot size is 4,000 odd shares, and it's roughly a 15 crore IPO that they're issuing. The next one is Patil Automation. The company specializes in welding and automotive solutions. The IPO dates, again, it starts today, ends on 18th of June. Issue price band set between 114 to 120. The lot size is 1,200 odd shares, and it's a 69 crore IPO. The next one is Influx Healthcare, where this company is a healthcare focused company specializing in contract manufacturing. In terms of the details, the IPO opens on 18th of June and ends on 20th of June. Issue price is between 91 to 96. The lot size is 1,200 odd shares, and the issue size is roughly 58 odd crores. And lastly, Maya Shield Ventures will be the last SME IPO, which basically constructs roads and highways for NHIDCL as well as government departments. The IPO starts on 20th of June, that is on Friday, and ends of 24th of June. The issue price is set between 44 to 47. The lot size is 3,000 odd shares, and this is a total issue of roughly 27 odd crores. So these are the few IPOs to certainly watch out for in this week.
Well, absolutely. Thanks, Mahima, for getting us that update. So not 1 or 2, but 7 IPOs for you to keep track of this week. But let's move on. Let's get you some updates when it comes to Sun Pharma, because you do have that particular counter that is taking it on the chin as we speak as well. Sun Pharma is the one that we're talking about. UBS, in fact, has released a note highlighting the recent management changes as well as the key headwinds when it comes to this particular pharma giant. We do have Varsha standing by with some more updates. Varsha, tell us about that note.
Yeah, thank you so much for that. So US has highlighted 3 main points. One is management changes, then halal manufacturing unit, and of course the company's exposure to Israel. Now Mr. Dilip Sanghvi has been stepped down from managing director role and continue as executive chairman. His focus will shift to strengthen Sun Pharma's specialty portfolio and provide strategic oversight for the company. Now UBS views the next generation taking a larger role as positive. On the halal plant inspection, we all know that company has received 8 observation, and at the conclusion of the inspection, US FDA has issued Form 483. Now the halal plant has a history of regulatory issues and has been on import alert since 2022. This effectively restricts products from this plant from being shipped to the US market. UBS emphasized that the clearance of this plant is actually important catalyst for Sun Pharma, as several high value added products meant for the US generic market are pending from this facility. Onto the exposure of manufacturing in Israel, the total gross profit exposure to manufacturing in Israel is estimated to about $75 million, which represents almost 4% of Sun Pharma's total FY25 EBITDA. Now, UBS is maintaining a positive view on Sun Pharma primarily due to anticipated operating leverage benefit as the specialty portfolio of the US scales up. However, the stock performance may still be weak considering the overhang of US tariff on branded drugs until it gets clarified.
Well, absolutely. So that's the take coming in as far as Sun Pharma is concerned. So that's UBS and Sun Pharma. But Varsha, tell us about the chemicals pack as well, because you do have Morgan Stanley that has in fact come out with a note when it comes to this pack. You do have PI Industries where they've also hiked their ratings, and even the stock is doing quite well.
Yes, absolutely. So Morgan Stanley's research note on chemicals indicates a more optimistic outlook for the agrochemical sector, predicting a constructive volume-led cycle when it comes to FY26. What they're saying is they expect a new phase of global crop protection volume growth in 26-27, which will benefit Indian chemical companies due to improved inventory level and customer sentiments and farm profits. Now, the positive implications for Indian agrochemical companies form 30 to 35% of revenue of India's specialty chemical firms. As global volume rise, Indian companies are expected to see double-digit volume growth, a return of 20% CAGR earnings, and of course 200 basis point of increase in ROCE by FY28 according to MS. Now, Morgan Stanley has upgraded PI Industries to overweight due to its high exposure to agrochemicals and expected pronged volume increase. They also upgraded Navin Fluorine to equal weight because of improved operation margins and order book that the company has. While positive, they remain selective on valuations. They believe PI Industries stock has already priced in patent concerns, but not the upside from new molecules and domestic turnaround. For SRF and Navin Fluorine will also benefit from improving a cycle, but SRF's current valuation are at all-time high, might be pricing in peak profitability according to MS. And lastly, they've also talked about the key risk. The main risk is if the expected volume doesn't pick up, which this would worsen pricing pressure and delay returns according to MS.
All right, then it's the chemicals pack that in fact is going to be in focus. PI Industries, in fact, that particular counter is up about 4.5% as we speak as well. So that's an entire pack that you should be watching out for on your screens. As you can see, PI Industries is the one that is buzzing away in trade. But moving on, let's move on to some news and updates. Then Prime Minister Narendra Modi will be traveling to Canada today to attend the G7 summit. And that's a key global event drawing attention due to a lot of things that could be likely on the agenda, because you do have proposed Trump tariffs, escalating Iran-Israel conflict as well. We do have our correspondent Maha Siddiqui reporting live from the menu. Maha, what can we be expecting from this year's summit then?
Donald Trump's tariffs have really thrown everybody in the G7, all the countries and as well as the EU in G7 completely at this moment in a dizzy. The impact on Canada, as we have seen, is well documented already, considering there are job losses that we are talking about, especially in the sectors of where steel and aluminum is needed and required, as well as in sectors like automobiles. There are already people who have lost their jobs, and Mark Carney is pretty clear on this aspect that this is an issue that he does not want the G7 summit to fall prey to, but an important issue that is going to be taken up, considering that the European countries also want, as well as the EU, of course, also want to take this up with President Donald Trump. But what we hear and what we understand at the moment is President Trump's own interest in a multilateral forum like the G7 or a grouping like G7 is waning, and he is looking at this platform in Kananaskis as a more of a bilateral engagement platform. We understand that he will be holding bilateral meetings with certain countries, and that he is likely to use this tool of tariffs that he has unleashed across many countries to be used as a negotiating tool. So this is as far as what we are expecting in the G7.
Well, absolutely, Maha. So tariffs can be used as a negotiating tool, and that is something that we're keeping an eye on. But while we talk about this particular summit, tell us about India-Canada relations as well, because you do have efforts to reset ties strained by past diplomatic tensions. What are we expecting when it comes to that as well?
Prime Minister Modi will be in Kananaskis. Before that, he will land in Calgary on the 16th afternoon, and he's expected to then head to Kananaskis, where he will not just be participating in the outreach, G7 outreach session, but also hold meetings with, most importantly, the Prime Minister of Canada, Mark Carney. As you know, that there has been friction in the relationship between India and Canada, and therefore, this visit by the Prime Minister is being seen, one, which could act as an icebreaker. It could also lead to at least the thawing in the frosty ties between the two countries. What we will expect in the next steps, as of now, remains unclear as far as the diplomatic engagement between the two sides is concerned, considering that both sides do not have the highest representation of diplomats in each other's country, that is the high commissioners. However, we do know that both sides are talking about some intelligence sharing or a law enforcement agreement, considering that both India and Canada have had grievances against each other with regards to the issue of Khalistan, especially India, having raised that issue several times with Canada. And clearly, the friction between the two countries has been over that issue. As far as the business engagements really are concerned, or the economic engagements are concerned, the fact that India is invited to the G7 summit, this is the 6th consecutive time, is because of its market size. India is a huge economy, and Mark Carney, while defending his decision to call Prime Minister Modi or invite Prime Minister Modi, had said that India is the 5th largest economy, and it is part of critical supply chains, and that is why it has to be on the table as far as G7 is concerned. India has been called as an invited guest nation for G7 since the Biarritz summit in France in 2019.
Well, absolutely. Thanks, Maha, for getting us that very important update. Tell you what, let's delve a little deeper when it comes to India-China trade. Take a look at some of the numbers and what is being penciled in when it comes to the trade pact between the two countries. In fact, Varsha is standing by with a detailed analysis.
Yeah, thank you for that. So yes, India is Canada's 10th largest trading partner. You have cell phones, jewelry, some of the largest exporters from India to Canada. Coal, lentils, chemicals are 3 of the largest exports when it comes from Canada to India. Now, talking about, the pharma trade, what it's like. So we have significant, so India imports significant pharmaceuticals when it comes to Canada. The pharmaceutical exports to Canada were almost 511 million US dollars in 2024, and there's been a notable increase highlighting growing trade between two countries. Dr. Reddy's, Sun Pharma, Cipla, Lupin and Zydus Life lead Indian pharma exports to Canada, while other exporters include Aurobindo Pharma, Torrent Pharma and Glenmark Pharma as well. Many firms actually operate via Canadian subsidiaries or expanding through acquisitions there as well. Coming to fertilizers trade data, so India's so basically India primarily import potash from Canada. We import almost 1.2 million metric tons of potash annually. Canada, Israel and Jordan are the India's main potash suppliers. Now, India's push for domestic potash mining is partly due to strained diplomatic relations with Canada. Potash imports from Canada was down 13% between April and December 24, while those from Russia rose. Which are the companies in focus? I would say you have Coromandel International, Chambal Fertilizers, Indian Potash Limited. Now, these companies have MOUs with Canada to ensure stable potash supply. Lastly, if I want to talk about the chemical trade between these between two of the countries, India exported $225 million of organic chemicals to Canada in 2024. Exports include diverse products like ketones and antibiotics. And the companies, Indian companies with Canadian presence, you have Deepak Nitride, you have PI Industries, you have Balaji Amines and Atul, which will be in focus.
Well, absolutely. Thanks, Varsha, for getting us that update as well. So there you have it. Those are some of the companies, in fact, that you should be watching out for on the back of India-Canada trade ties. But moving on then to some more news and updates. Tensions between Iran and Israel are sending shockwaves through global oil markets, driving crude prices sharply higher. But just how significant is this impact then? What does it really mean for India's economy, and how quickly could we expect prices to be stabilizing? We do have Somit Sarkar who's joining us now to break down the numbers, explain what lies ahead when it comes to consumers and businesses alike. Somit?
Well, yes, the Israel and Iran conflict has impacted the oil prices, and we have seen a sharp surge in the prices. But if you look at Iran's importance in the global oil production, that is not much, because Iran accounts for nearly just 3.5% of the global crude oil production. Iranian oil exports are under a US embargo, and nearly 80 to 90% of this crude production that comes in from Iran is imported by China only. However, Iran has an indirect impact on oil prices, because nearly 70% of the crude oil which is destined for the Asian market pass through the Strait of Hormuz or the Red Sea, and Iran has a direct control over the Strait of Hormuz and influence on the Red Sea through Yemen's Houthi rebels. Now, Iran has a significant capacity to disrupt the global oil trade because of this, because of the fact that 70% of the crude oil passes through Iran's influence. However, the past episodes which have led to such disruptions have not resulted into a big impact on the oil prices over a longer period of time, because back in 2011-12, when there was the Iran sanction threat, oil prices had increased by 25%, and it just took nearly 4 months for the oil prices to normalize again. The Gulf tanker attacks, which happened back in 2019, led to a 10% increase in crude oil prices. However, it just took nearly 1 month for the oil prices to normalize post that, and the last Red Sea and Houthi attacks that we had seen back in 2023 and 2024 led to a 15% surge in crude oil prices, but it took just 2 months for the oil prices to normalize going forward. Now, what would be the impact on India? Now, India has stopped importing oil from Iran since 2020, and India's dependence on the routes through Strait of Hormuz or Red Sea has come down significantly, given the fact that India has increased their oil imports from Russia. Now, even with a 25% jump in average crude oil prices for the next 6-month period, this would just increase India's trade and current account deficit by just $15 billion, which is just 0.3% of India's GDP. The real GDP growth may slow down by 0.2 percentage points, and the retail inflation might increase by just 0.7 percentage points. So not much of an impact that could come in from this temporary surge that we are seeing in crude oil prices on India's economy.
Well, absolutely, Swami. Thanks for getting us that update. So shockwaves across the globe when it comes to the global oil market. That's something that we're looking at, and it's a ripple effect that we're penciling in as far as India then is concerned. But let's get you some key commentary coming in. India is going to be a winner even in turbulent times, and that's the word coming in from Ben Powell, who's the Chief Middle East and APAC Investment Strategist at BlackRock Investment Institute. Let's go across and listen into what he had to say when it comes to India.
A little bit. I mean, it's quite normal for investors to, how can I say, react cautiously to the headlines that we're seeing vis-a-vis the geopolitical context. So that's totally normal and should be expected. But there's still a lot to like in the world from a market perspective. Globally, we have the astonishing technology, artificial intelligence boom. That's continuing. And from a geopolitical perspective, geographic perspective, there are many countries which are well positioned to take advantage of kind of changing global economic environment. And India continues to be towards the top of that list for us at the BlackRock Investment Institute. A continent-sized economy, tremendous kind of demographic prospects, a growing labor force. But I think at least probably even more importantly is the gains we've seen in efficiency, productivity, which look set to continue. So it's a complicated world, that's for sure. In aggregate, probably we're all a bit more nervous given the context, but there are going to be standout winners. And yes, we at BlackRock Investment Institute continue to have India as a winner overall, even in a turbulent time.
All right, then that's some key commentary coming in as far as the impact on India then is concerned. But moving on, then let's get you some details as far as Wipro is concerned, because you do have that long-term client that is in trouble at this point in time. They've in fact filed for a bankruptcy protection in the US. Jasmeet is joining us with all of those important details.
Well, yes, Wipro's client files for bankruptcy. Marelli, which is the client of Wipro, has filed for bankruptcy on 12th of June. Let's understand a little about the deal. Wipro had recently renewed the deal with Marelli back in November 2024, and the deal was for around 4 years, and the size of the deal was $100 million. The main part of the deal was signed back in 2020. Marelli filed for bankruptcy, while this could lead and negative impact over the Wipro's cash flow, and also we can see how the profits turn out in the coming quarter. Wipro had roughly 28 clients back in 2025 versus 32, and within the size range of 75 to 100 million US dollar. While this deal which got cancelled would roughly have an impact of 1.28% on the total revenue of FY25.
Then thank you so much for getting us all of those important details when it comes to Wipro, Jasmeet. So that largely is the kind of move that we're not seeing much of a move come in as far as Wipro is concerned, but those were some of the important details that you should keep track of through the rest of this day. But keeping up with the spirit of Father's Day, then NDTV Profit is bringing you special coverage through the day. We in fact caught up with Sameer Arora, who's the founder and fund manager at Helios Capital, who talks about how you should be building your career, investing in your career first, and don't think of retirement, in fact, when starting out. Those are some of the advice that he's doling out. Let's go across and listen to what he had to say.
My advice is, indirectly you can say, although he may have given me in different way, is that initially you invest in your studies. I have reached now where very, very different only because of studies. And for that, you have to give credit to my family, and particularly my dad, even my mom. But if you want to really change if you're already a rich guy, okay, give some advice, start saving from 20th when you are 20 years old and all that, which is complete nonsense for 98% of India. First is build your career, invest in your career, and don't at 20 years say, if I save for 40 years, then I'll be having retirement. Nobody thinks about retirement when you are starting out. So I think this Twitter and social media has got it completely wrong.
All right, and there you go. That's some financial lesson coming in from a father, but that's all the time that we have on the show. Thank you so much for tuning in.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down. Cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. the big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience?
The questions you care about, asked and answered.
The big question.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Hello and welcome to NDTV Profit. You're watching Profit Buzzers. This is Hiral Dadia. Let's quickly take a look how markets are panning at this hour. Good recovery from where we started off, if you see, in terms of Nifty 50 as well. We are nearly at the day's highest levels with gains of around 0.8% coming in there. 24,930 is the day's high. 24,900 is where Nifty 50 is trading at, but we're still below that psychological mark of 25,000 right now in intraday trade. Let's pull up Bank Nifty and then we'll look at the sectoral indices and then the broader markets. But in terms of Bank Nifty, in the positive but slightly underperforming the benchmark indices, it's seeing gains of around 0.5%. If we can have the sectoral heat map to understand what's actually trying to take us higher and what's losing, it's the PSU Bank Index which is under pressure. And this is either the second or the third consecutive session where the PSU Bank Index has been in the red. Interestingly, IT, the top gainer today, followed by infra. Consumption metals also in the positive as we speak. Real estate seeing some gains of around 0.6%. And you have oil and gas, which is trading in the positive. Let's look at the individual stocks in terms of the contributors to Nifty 50 and the Nifty 50 heat map as well. Overall, to understand that kind of move. HDFC Bank, the top gainer in terms of contributor, followed by an L&T, Infosys, and then a Reliance Industries. You have a Tata Motors, which has been under pressure, but that's mainly on the back of the FY26 outlook that they've come up with regards to JLR, where they've cut the guidance in terms of the EBIT margin, and that is something which is concerning the street. Sun Pharma, Dr. Reddy's also trading slightly under pressure. Sun Pharma, yes, on the back of the Halol observations, and you have Sun Pharma and Dr. Reddy's, both of them that have exposure with regards to Israel market. So that's what it's looking like. Very quickly, in terms of broader markets, if you look at the mid-cap and the small-cap index, if we can just have that on the screens, in the positive but slightly underperforming the benchmark indices. Mid-cap is up around 0.3%. Small-cap, interestingly, is seeing cuts to the tune of around 0.2%. So that's what the markets are looking like so far. But let's move on. If you have to talk about Father's Day, it was on Sunday, but today is when NDTV is celebrating Father's Day as well for all our viewers. All the guests who speak to us as well, so it's Papa and Profit on NDTV Profit. In fact, to discuss further on this, Nilesh Shah, MD at Kotak Mahindra AMC, joins us. Nilesh bhai, good afternoon and a pleasure to speak to you, and happy Father's Day to you as well.
Good afternoon and thank you.
Nilesh bhai, my first question that comes to you is, more than anything, I mean, everyone's been talking about the advice that fathers give to their children. Let me take it reverse with you. The best advice you have got as a father from your children, assuming from the two daughters?
So I have two daughters. I've been blessed with two daughters, Sheila and Muskan. And both of them have taught me that you have to live your life. You just can't be focused on making money. You should be focused on also enjoying life. And clearly, it is with their arrival that I have started enjoying life.
So enjoying life and not only looking at making money, is that what is your advice to your children as well? How have you counter-retaliated that?
So, one, you don't argue with your kids. You don't argue with your better parts. This is the learning. And all I have taught him, follow your passion. Both my daughters are not into the field of finance. One is pursuing sustainability management, and other one is pursuing medicine. So all I have told them, follow your passion, and that passion will lead you to your purpose.
Absolutely. Passion is what you need. So Nilesh bhai, to pursue something also from here on, what is it that you're advising them with regards to how they need to learn in terms of savings and investments so that they can lead a life that you're able to give them right now?
So one, clearly money and investment is not a taboo subject in our household. We discuss about it, we talk about it. A lot of time they are watching what I speak on media. Second, I have also given them responsibility of managing their financial affairs. As I mentioned, my elder daughter is pursuing sustainability management. She's studying abroad, but she manages her day-to-day expenditure. She knows what the budgeting is. The younger daughter is studying in Mumbai at the hostel. Again, she knows what kind of allowance she will get and how she is to spend money. We are undoubtedly always there for them. But at the same time, they need to be aware how to spend money, how to save money, and how to invest money.
Here is, what you tell us, that clearly budgeting becomes a key, and from there on, how your learning curve becomes absolutely important. So for your daughters, what's the ideal portfolio that you would want to build as a long-term investment?
So again, let me first say the mistake which I have made for my daughters. I'm from a very conservative background. So PPF account opening is like a dharma. And I have opened PPF account on behalf of my daughters where they contribute money. Ideally, I should have just put them into equity-linked savings scheme and they would have made far more money. But sometimes, you just follow the tradition or a custom. And I keep on highlighting to them that despite learning and studying market so much, I have made the same error, which I advise other people not to copy. Second, being part of a family where father is working in mutual fund, they can't invest directly in stocks. So I have built a portfolio of them in terms of mutual fund schemes through SIP or lump sum investment. Whenever they got some money, especially on birthdays, on an auspicious day like Diwali, I have ensured that that money is invested and not spent. Obviously, it is at their discretion and with their permission. But essentially, trying to take small steps by talking finance at dinner table, by giving them a allowance so that they can budget their spending, by teaching them where my wealth is scattered, how they should invest, and also teaching what mistakes made, which they should avoid.
Okay, interesting point that you made about the PPF portfolio, the PPF account. And I think that's something which everyone does. And especially when it comes to girl child, I think Sukanya Samriddhi, these are few of the other schemes that the government has as well. So do you think, schemes like this versus equity-linked mutual funds probably become slightly more riskier and that's the reason why people will probably want to look at a PPF or even like a Sukanya Samriddhi.
So definitely my mindset is conservative, and hence for me having a PPF account is important. But I should not put my thought process on my daughters. They should have risk-taking ability. And if they can take risk in equities, I'm sure that will help them create the wealth. Undoubtedly, brake is important in car. But at the end of the day, without accelerator, you will not be able to reach to your destination. So asset allocation, which is recommended for others, is also recommended for them. Take risk when you can afford and manage risk.
Absolutely. Nilesh bhai, the other thing is, if someone is coming to you for advice who's a young parent who wants to build a corpus for their children, would it be the same advice right now? Say 100 rupees is what that person has. How would you advise him to allocate?
So the first recommendation from my side will be that please don't just put lump sum money. Please inculcate the habit of regular investment. Number 2, break down your child's kitty into various parts. This is for their study. This is for their entrepreneurial dream. This could be for their inheritance, and so on and so forth. Third, whenever you are making investment, do write down the purpose. One of my mutual fund distributor friend has done this job excellently, where he makes his investors write down the purpose. Now, when markets correct and they panic and they come for redemption, he simply asks, is your daughter needing educational money? Do you have to pay college fees? If not, then why are you redeeming? Just wait out the volatility. So linking investment with a purpose will help you override the volatility.
Okay, so that's an interesting advice. What is the best investment advice, Nilesh bhai, you've got from both your daughters?
Well, as I said, both of them are not in the field of finance.
But just a by the way conversation, a dinner conversation where the banter would be, Nilesh bhai, this is the fund I would want to buy. Maybe they've come and said, Dad, instead of a fund, let's just look at real estate, look at something else. So what is their way of looking at investments?
So what I have learned from them in the field of finance, like when I was pursuing both my daughters to join the field of finance, they said, Papa, how to fit society? Sustainability is more important than finance. And I said, yes. My younger daughter said, saving life is more important than finance. In fact, the best advice which I've got from them, beyond finance, also there are things. Money cannot buy everything. Money is important, no doubt about it. But beyond money also, there are avenues, and hence you should make enough money, but just don't be blindly chasing money.
Absolutely. I mean, and that's something I think this generation does want to look at very differently. So what's the best wish you've heard on Father's Day?
Well, this Father's Day, it was only a phone conversation, video conversation, personal meeting. The elder one is in Paris. The younger one is preparing for exam today, so she didn't have time.
Okay.
But both, came from heart, saying that Dad, we are there for you. Don't worry.
That's absolutely touching. Okay. From here on, your best childhood memory of a father, Nilesh bhai, that you've had, which something even that they are not with you and they are far from you in terms of one studying in the hostel, one being away out of the country, that constantly you get reminded of?
So like every time someone takes a photograph and they tell me that Nilesh bhai, thoda smile kariye, I always think of my daughter Muskan. Her name itself is, and that instantly brings smile. Really blessed by God that I have two daughters who bring smile to me every day. What more one can ask from God?
Absolutely, and that's really touching. I mean, when you say that, I think every click reminds you of your children. So that's interesting. But let's also talk about what's happening in the markets from here on. a lot of geopolitical concerns that the world is dealing with right now. You're talking about Israel, Iran as well. And we've just gone done with something with India, Pak. How are you looking at markets and the geopolitical situation? Because right now you're seeing Indian markets which are resilient.
So undoubtedly, geopolitics right now is fairly tense. Russia, Ukraine, Israel, Iran, Israel, Hamas, Indo-Pak, China, Taiwan. These are all the flashpoints, and one can never predict what happens over there. Clearly, we have to focus on building portfolio which will be resilient to geopolitical situation. Now, can we be 100% immune? Answer is no. But by focusing on quality management, diversified portfolio, and reasonable valuation, hopefully we will be able to build some immunity vis-a-vis the geopolitical situation. The second and more important thing is to manage investors' expectation. Most of the time when people anticipate something, the reactions are far more moderate. So we are also sharing with our investors that you have to moderate your return expectation. While domestic fundamentals are good, geopolitical situations are ever changing and fairly tense. And hence, please follow the dharma of your asset allocation. This is fairly valued market, neither expensive nor cheap. Moderate your return expectation, have neutral allocation to equity, be a little bit overweight large cap and little bit underweight small and mid cap, and use correction as an opportunity to further invest into the market.
Okay. And if you have to look at valuations currently, Nilesh Bhai, where do you think we are? Would you say this is somewhere on the verge of normalizing and a time to accumulate from a longer term perspective? Or would you be of the opinion that we are still expensive, taking into consideration you're asking investors to actually normalize their expectations in terms of returns?
So again, you can view this valuation paradox in multiple ways. One is, let's say, sectorally, there are sectors like defense which are very highly valued. And there is, let's say, sector like consumer discretionary, which we believe is fairly valued. There are hardly any sectors which are cheap right now. So one has to moderate the return expectation or increase the risk appetite to invest into market today. We believe this is time to go for fairly valued, reasonably valued companies, or companies where you believe growth will outperform market expectation. Today, banking and financial services, chemical, consumer discretionary space are the sectors where these opportunities are far more present. Defense is one sector where probably opportunities are less present. The second way to look at this whole valuation paradox is again large, mid, and small. Mid and small are growing at a faster pace. Large cap is growing at a slower pace, but there is more stability. So how do you create that equilibrium between large, mid, and small? Our view is be marginally overweight large cap, be marginally underweight small and mid cap. And finally, the portfolio flexibility. Please keep some dry powder, keeping in mind this geopolitical situation, whereby you can invest during a corrective phase.
Nilesh Bhai, interesting point about maintaining some dry powder. How much would you advise out of 100? What percentage should you maintain as dry powder in crisis like this?
Depending upon your risk profile, we don't take any cash call across our funds other than asset allocation. But if you want to be running an overweight equity position, today is not the market. This is the neutral weight equity position, and you can move from debt or other asset class into equity to become overweight as markets correct.
A lot of aspects that you need to consider as well. But thank you so much for joining us on the show and sharing your views. And happy Father's Day to you as well. And regards to both your daughters from NDTV Profit and the team sitting right here. So that's Nilesh Shah from Kotak AMC, clearly giving out his views in terms of what he has learned from his daughters as well and what reminds him of them when they are away. One called Muskan. Clearly, a picture is what keeps him away from them right now. But moving on, let's quickly look at markets. We're at the day's highest levels. Good uptick that is coming in so far. We are nearly seeing gains of around 0.9% now as we speak in terms of Nifty 50. Can we have that? There you go, 24,953, inching pretty close to that 94,000 or 25,000 mark. Let's see if we end at 25,000 or not. That is going to be pretty interesting. But that uptick, that buying interest has continued so far as we speak. But moving on. Iran refuses ceasefire talks, stating negotiations will begin only after its response to Israel's preemptive strikes. In fact, the number of deaths in Iran after 4 days of Israel strikes had reached at least 230, with 90% of the casualties reported to be civilians. In fact, moving on, we have India will be a winner even in times of turbulence, says Ben Powell, Chief Middle East and APAC investment strategist at BlackRock Investment Institute. Listen in as he talks about how investors are seeing this escalating Iran-Israel tension.
A little bit. I mean, it's quite normal for investors to, how can I say, react cautiously to the headlines that we're seeing vis-a-vis the geopolitical context. So that's totally normal and should be expected. But there's still a lot to like in the world from a market perspective. Globally, we have the astonishing technology, artificial intelligence boom. That's continuing. And from a geopolitical perspective, geographic perspective, there are many countries which are well positioned to take advantage of kind of changing global economic environment. And India continues to be towards the top of that list for us at the BlackRock Investment Institute. A continent-sized economy, tremendous kind of demographic prospects, a growing labor force. But I think at least probably even more importantly is the gains we've seen in efficiency, productivity, which look set to continue. So it's a complicated world, that's for sure. In aggregate, probably we're all a bit more nervous given the context, but there are going to be standout winners. And yes, we at BlackRock Investment Institute continue to have India as a winner overall, even in a turbulent time.
Right. So talking about turbulent times on the back of the geopolitical crisis, but tensions between Iran and Israel are sending shockwaves through global oil markets, driving crude prices sharply higher. But just how significant is this impact? What does it mean for India's economy? And how quickly could prices stabilize? Somit Sarkar joins in with a breakdown in terms of what lies ahead for consumers and businesses alike. Somit, over to you.
Well, yes, the Israel and Iran conflict has impacted the oil prices, and we have seen a sharp surge in the prices. But if you look at Iran's importance in the global oil production, that is not much, because Iran accounts for nearly just 3.5% of the global crude oil production. Iranian oil exports are under a US embargo, and nearly 80 to 90% of this crude production that comes in from Iran is imported by China only. However, Iran has an indirect impact on oil prices, because nearly 70% of the crude oil which is destined for the Asian market pass through the Strait of Hormuz or the Red Sea, and Iran has a direct control over the Strait of Hormuz and influence on the Red Sea through Yemen's Houthi rebels. Now, Iran has a significant capacity to disrupt the global oil trade because of this, because of the fact that 70% of the crude oil passes through Iran's influence. However, the past episodes which have led to such disruptions have not resulted into a big impact on the oil prices over a longer period of time, because back in 2011-12, when there was the Iran sanction threat, oil prices had increased by 25%, and it just took nearly 4 months for the oil prices to normalize again. The Gulf tanker attacks, which happened back in 2019, led to a 10% increase in crude oil prices. However, it just took nearly 1 month for the oil prices to normalize post that, and the last Red Sea and Houthi attacks that we had seen back in 2023 and 2024 led to a 15% surge in crude oil prices, but it took just 2 months for the oil prices to normalize going forward. Now, what would be the impact on India? Now, India has stopped importing oil from Iran since 2020, and India's dependence on the routes through Strait of Hormuz or Red Sea has come down significantly, given the fact that India has increased their oil imports from Russia. Now, even with a 25% jump in average crude oil prices for the next 6-month period, this would just increase India's trade and current account deficit by just $15 billion, which is just 0.3% of India's GDP. The real GDP growth may slow down by 0.2 percentage points, and the retail inflation might increase by just 0.7 percentage points. So not much of an impact that could come in from this temporary surge that we are seeing in crude oil prices on India's economy.
That's an interesting point. In fact, we were just discussing in the newsroom earlier as well as to what the RBI has penciled in, not in this last policy, but the previous one. They're looking at $70 per barrel taking, and that's the average that they are going to look at. Now, it's going to be interesting for how long does oil stay at these levels, or these are just intermediate spikes that we're looking at. In fact, one of the notes was highlighting that these geopolitical tensions could also take oil to $120 a barrel. If that happens, that's going to be interesting to watch out for. But we also spoke to Ryan Bol, senior Middle East, North Africa analyst at Rain Network, about how the oil price surge is looking for oil traders and what to expect going forward. Let's quickly listen in to that bite as well.
Well, I think that, and I really respect oil traders for working on fundamentals here. They're looking at supply, whether or not supply has actually changed, and not the perception of it, but the actual change on the ground. And I think this goes back to a lesson from 2019, where the Iranians hit Saudi Aramco, and it resulted in significant destruction, but oil supplies were not fundamentally interrupted for very long, and Aramco very quickly repaired the damage, and we all moved on with our lives from that episode. And so Iranian threats of closing the Strait of Hormuz is not enough to cause folks to panic at the moment. On the other hand, if the Iranians decide to carry out even a limited harassment campaign in the Strait of Hormuz, I think that would cause a lot of upward pressure on energy prices across the board, because it really suggests that tankers won't be able to cross that with the freedom that they have today. And then it also very strongly suggests that the United States would get involved militarily. And again, if the U.S. is getting involved militarily against the Iranians, it suggests all of their bases within the region are targets of an Iranian retaliation, and the oil infrastructure alongside it and the gas infrastructure alongside it would be too.
Right, so that's the word coming in from Ryan as well with regards to what could be in store with regards to crude. But moving on, let's understand what is India Inc.'s presence with regards to where Israel goes and the companies that potentially could see an impact. Moving on, firstly, we have Sun Pharma, which is in focus on the back of this, where they own majority stake in Taro Pharma, which is 66.7%. And they fully merged Taro as well into its subsidiary back then in June 2024. So that's a company which has exposure to Israel. Moving on, you have Dr. Reddy's and Lupin, both of them as well, because they have indirect ties via partnerships with Tel Aviv-based Teva Pharma. So both of these companies are the ones which have exposure to Israel as well. Adani Ports owns almost 70% stake in Haifa Port, which is Israel's largest port. They had acquired this back then in 2022 via a JV with Gadot Group. This contributes almost 2% to the company's total cargo volumes. TCS is another one which operates in Israel since 2005. 2.1% of their revenues come in from the Middle East and Africa, so it's a small portion. But yes, there is some bit of exposure. Infosys, it has its presence through subsidiary Panaya Limited in Israel. Approximately 200 employees and a turnover of around 342 odd crores is what the company did see from this in 2023. Wipro, again, in Israel, it's invested in Israel-based TLV partners. They operate in the aerospace division with Wipro Givon. So that's another company. Another tech giant, which is Tech Mahindra, also has exposure to Israel, where they collaborated with Israel firm, which is InsurTech, Antidote, and they provide IT services in Israel as well. And lastly, you have L&T. That's the engineering and construction presence over there, wherein they have an R&D center in Jerusalem and a sales office in Tel Aviv. This was since 2017. From the financial space, you have a SBI. They have one branch in Tel Aviv as well since 2007. Samvardhan Motherson, they've invested almost $15 million in Re Automotive, and that is an Israeli EV platform developer, and this they've done since September 2004. And very lastly, a small cap, which is Punjab Chemicals and Crop Protection. It generates almost 5% of its revenues, that's close to around 44 odd crores in FY24 from Israel. So these are the companies you should be watching out for, mainly in terms of what exposure they have to Israel. Nothing's happened to them yet, but these are potential ones if anything escalates further, you could see some bit of an impact that could be coming in here. So that's with regards to Israel. But we also at NDTV Profit spoke to Mark Matthew. In fact, he says that he does not think Indian equities are expensive from a 3-year perspective. And he also says that probably this is the space to bet big on. Let's quickly listen in to what he had to say.
Well, broadly speaking, the Nifty's on just north of 20 times this year's earnings. And if we get earnings growth, let's say, above 10%, somewhere between 10 to 15% per year over the next few years, then that's not an expensive price if you're looking to own it for a few years. A few means 3. So I don't think India is at all expensive on a 3-year view, and it seldom has been. To my memory, there was only one time when India was really cheap, at least since I've been looking at it, which was the bottom of the global financial crisis. Otherwise, it's an expensive market. There are reasons for that. Capital controls are one. And the good story that India offers is another. So I don't think the valuation is that dear for people who are looking to own it on a, let's say, a 3-year view.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down. Cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience?
The questions you care about, asked and answered.
The big question.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
near day's high. Nifty bounces 200 points from day's low to trade above 24,900. Sensex hovers near 81,750. IT, oil and gas power the move.
Motors wheels under pressure. JLR shocks investor by slashing FY26 EBIT margin guidance to 5 to 7% from 10%.
And Morgan Stanley upgrades its outlook on chemical sector, upgrades PI Industries to overweight with a higher target price of 5,000 rupees. Navin Fluorine also upgraded to an equal weight while remain underweight on SRF, Aarti Industries and Tata Chemicals.
Israel and Iran continue exchanging attacks for the fourth day with 224 reported dead in Iran.
Welcome back. You're watching Profit Buzzers, and we have Varsha joining also right now. Varsha, I think it's an interesting day today because we've been having a whole host of Father's Day discussion as well. One quick memory that you have with your father, which can just come to you right now.
He used to give me business lessons.
And what was the best lesson that he's given you?
So he used to say that saving is a good thing, but you need to compound that money. Paise se paisa banao.
Paise se paisa
banao is the one thing that that hit me a lot. So yeah.
Interesting. So paise se paisa banao is the key advice that Varsha has also picked up from her father. But now let's welcome in the duo with us. We have Sandeep Bhatia, Managing Director and Head of Equity India at Macquarie Capital, joining us with his son, Aryaman Bhatia. Welcome to the show, gentlemen.
Welcome, everyone. Thank you.
Thank you for having us.
Aryaman, let me start off with you. I mean, taking into consideration it was Father's Day yesterday, your best moment with your father.
So the best moment for my with me and my dad, like in my childhood, he my dad loves traveling, so he likes to take a lot of pictures. So he's taken many pictures of me as a child. As me and my dad are into automobiles and the automobile industry, he has taught me how to drive, and most importantly, we have discussions on each and every car launch which happens in the market. There are various other events which I've taken part, for example, sports days or match days, because I play a lot of table tennis. So he's cheered me in those events as well.
That's interesting. So, Aryaman, any pictures which you don't want your father to share as well with everyone, which, he probably tells you that, okay, if you do this, this is what I'm going to put it out into public?
I mean, not really, but yeah.
Okay. So taking cues from what you're saying, autos is what drives you and your dad. Is it going to be a car that you're going to gift your father, or are you expecting one to give him, and which one is that going to be?
Hopefully in the future, I might gift my dad a nice luxurious car.
And which one would you vouch for right now?
Maybe the Mercedes S-Class 450 Matic.
That's a good one. I think Sandeep is going to be really elated as well, awaiting his Merc from Aryaman pretty soon now. Sandeep, what's the best investment advice that you've given Aryaman, so far? I mean, as a father.
So, for Aryaman, I think I've always told him to look at the markets regularly. Saving is extremely important. But I've told him investments and making an investment is more important than just saving. Something which your colleague Varsha just mentioned, making money from money. So investing is more important than just saving. And a lot of people focus just on cutting costs and living within your means, of course, very important. But investing wisely, because investment is the real driver for wealth creation.
Absolutely. Investment, the real driver for wealth creation. So, what would be an ideal portfolio, Sandeep, that you would build, for your child as a long-term investment? And I mean, that is something that you would want to advise young parents as well who actually want to build a corpus for their children.
A very good question, Hiral. I think the time horizons for young investors is at least 40 to 50 years. My son, in his early 20s, just graduating, has at least a 50-year time frame before he needs to have depend on retirement income. So I would think small and growth stocks, small mid-cap growth stocks, and funds which focus on that are definitely something which they should focus on, young investors. And also, I think balance funds are immense good vehicle for creating wealth. So I think these are the kind of stocks, but I would definitely recommend putting money in stocks and equities, even if you don't think that the market is going to perform in the near term. The long term is on your side, and India's growth story is on your side. So that's something which I would recommend young investors to look at always equity markets.
Okay, that's an interesting one. Aryaman, that's the advice that, your dad has been giving you as well. One advice that probably you think you've given your dad, which has really, worked well. It might not be from an investment perspective always, but something that you would always want parents to, probably take into consideration.
One advice which I would give my dad.
Yes.
I think stay fit and to invest properly, as that's his own field. So he should succeed even more.
Okay, so health is wealth as well, right? So I think that's a great one coming in there. Okay, what portfolio, Aryaman, would you want to build for your children from here on? I know you're still far away from there, but taking the advice from your father, what is it and how would you want to look at it?
So I want my child to have a portfolio of technology stocks. As India should have companies such as Tesla, Google, Amazon, and Apple, like which we don't have today in India. So I think those should come in, and I hope in the future that happens. India should have large, successful technology companies in the future.
Right. Hi, Aryaman. This is Varsha. Great to have you. I understand that your dad giving you business lessons and stock market lessons. But I just want to know, are you interested in stock market? I mean, have you started your own study or some of the sectors that you track? I mean, how interested you are into stock market?
So I'm quite interested in the stock market. My dad has told me to look at the values of different companies and how they are doing. For example, Nifty and Sensex, if it's gone up or down. So I judge like every day before the opening bell at 9:30. I see the values and then we have a small discussion about that.
Okay, I think Aryaman, has dad given you a corpus to build your own portfolio right now?
It's still in the process, but yeah.
Or does he tell you to get it from your pocket money, save some from your pocket money and build your portfolio?
Yeah, that's one thing he's told me to do.
Okay. Apart from this, I think you're a table tennis enthusiast as well, right? So tell us something more about your journey with table tennis and how dad has played a role in it.
So my dad has really been supportive in me playing table tennis. So I've represented the Mumbai team in 2023, and I play at a really high level. So I practice for like 6 to 8 hours daily. And I'm currently preparing for the national tournaments which are coming up. So it's really intensive.
Okay, so when do we see you playing for the national level?
Hopefully soon.
We wish you, in fact, all the luck from Team NDTV Profit, and we'll actually vouch for you as well and cheer for you the moment we see you at the Nationals pretty soon. So, Sandeep, taking it from here, let's look at what's happening in terms of markets as well, right? Lots of things. I mean, it is Father's Day, but we have to talk about the current affairs as well. You have the geopolitical tensions with Israel, Iran. If you have to look at that aspect, Indian markets are seeming pretty resilient in terms of today's session. Friday, we did see some bit of a knee-jerk reaction, but there was some bit of recovery. Now, would you say in matters or crises like this also, someone should start investing and building a portfolio, or this is the best time to stay away?
See, I think portfolio building is something which depends on individuals' life cycle, how old you are, and what are your goals, whether you have immediate needs for finance or whether you don't need money now and you can wait and plan for retirement. So I think in the equity markets, India has been quite resilient. So to that extent, I don't think that Indian markets will have a significant correction. By significant, I mean over 20%. In the near term, I think risk in terms of the war in Middle East between Israel and Iran is an issue. But if there is a correction of, let's say, to the order of 5% plus, then definitely I think there is a good time for investors to come in and invest.
Right. Mr. Bhatia, I just wanted to have your view on broader markets, especially your small cap and mid cap stocks. So, considering the valuations and considering the earnings growth and the guidance is given by these companies, how positive are you when it comes to mid cap and small cap companies, and also in which sectors?
So I think just to come on the sectors and companies, I think mid cap and small cap, you have to be very selective because some of these stocks are high growth, but there's definitely a valuation issue. Some of the stocks that we like in this space are likes of Unominda, Lemon Tree, IRCTC, AB Cap. So it's a wide variety of stocks. In terms of sectors, I think look at the bank sector. Banks have 15% plus earnings growth. We have seen a rate cut. The banks are also cutting interest rates for their savers. So the cost of capital for banks is also going down. So I would think in terms of sectors, banks in the near term, but very selective in quality mid caps in the right now. As the market definitely is elevated and risks have gone up with the war in the Middle East.
Okay, so I think those are a whole host of stocks and sectors one should watch out for. But thank you so much, Sandeep, for joining us on the show. And thank you, Aryaman, as well, for making time to speak to us and, talk to us about your journey as well, not only from a financial market perspective, but even as a father-son relationship that you share. Thank you so much for being here at NDTV Profit. So that's with regards to Papa at Profit conversations that we have been having so far. But let's quickly pull up Tata Motors on the screens, JLR. That has actually shocked investors. The stock is nearly at the day's lowest levels. Mild recovery that's also come in on that one. But clearly, it has gone ahead and cut its FY26 EBIT margin guidance. Now, if you talk about FY25, we were looking at around somewhere in that range of 8%. They had guided that they would look at 10% in terms of FY26. And now they've gone and cut it down to 5 to 7%. And that's what is making the street nervous with regards to Tata Motors. So watch out for this stock pretty closely. But moving on, it's time for an NDTV Profit exclusive. Among a Midwest Asia conflict, India's oil ministry assures 3 months of reserves. Let's bring in Aishwarya to give us more details, because this is what is absolutely crucial, and that's what we were talking about where the RBI was looking at around $70 per barrel in terms of the average oil rate that they have looked at. 3 months reserve is what we are picking up so far. My colleague Aishwarya is with us to give us more. Aishwarya, what are you picking up?
You
rightly mentioned, I mean, Iran-Israel conflict is a point of concern across the world globally. Also, geopolitics does impact crude prices. And what we're picking up from our sources is that the oil ministry so far has 50% in reserves. So there may not be much of a cause of concern, because that means we have crude which was bought at lower prices and which is sufficient for India to suffice for the next 3 months amid the conflict in Iran-Israel conflict that is currently ongoing. What government sources have also said that they are expecting crude prices to normalize between $65 to $75 per barrel, but that is just one of the guesses. But this is what we're picking up from our sources. As far as the geopolitical situation is concerned, they also said that the Hormuz Strait is a key part of the discussion around this whole conflict, and that closing it will not be beneficial for anybody across the globe, because it will in fact spike prices in terms of insurance, as well as freight also will go up. So it does not serve anyone's interest or purpose anywhere across the globe. So that's the key point of discussion that we had from some of the government sources that we have spoken to.
Thank you so much, Aishwarya, for all the details. But with global energy concerns escalating due to Iran-Israel conflict, Union Minister Hardeep Singh Puri has provided a reassuring update indicating strong and effective measures are in place to maintain India's energy security firmly. To listen in.
अब कुछ लोग चिंता करते हैं कि ग्लोबल सिचुएशन, ग्लोबल टेंशन के कारण, तो मैं आपको विश्वास दिलाना चाहता हूं, हम इसमें ऑलमोस्ट डेली रिव्यूज कर रहे हैं. हमारी जो एनर्जी सिचुएशन है, हमारे पास वी हैव एनफ स्टॉक्स, हमारा अपना प्रोडक्शन भी बढ़ रहा है.
Right, so that's the word coming in from Hardeep Singh Puri. In fact, joining us is now Vinay Rajani, CMT Senior Tech and Derivative Analyst at HDFC Securities. Vinay, good afternoon and welcome to the show, and a pleasure to speak to you at NDTV Profit. Vinay, my first question coming to you is, overall, if you have to look at the way markets are panning out, there is some bit of resilience in spite of the geopolitical tensions between Israel and Iran. What are the levels you would be tracking in terms of Nifty as well as Bank Nifty?
Yeah, so recent high was at 25,222. That was the high we saw last week. And if I were to look at Friday's low, that was 24,473. So due to this geopolitical tensions, Nifty has corrected 750 points and started recovering from Friday's low. So now we are at the crucial juncture. If I were to give you the rationale behind it, it is nothing but the 61.8% retracement of the entire 750 points fall which you have seen recently. So if I were to see 61.8%, which is also a Fibonacci golden ratio, which we consider in our technical analysis. So if this level, this Fibonacci 61.8% level, which is placed around 24,940 odd level, if that is taken out decisively on closing basis, then we can say that Nifty has negated the possibility of downtrend. So 24,940 is a very crucial level in Nifty spot. If Nifty were to close above that, then we can see that we are out of woods, and ultimately we can expect Nifty to resume its uptrend. So 24,940 is a very crucial resistance. We need a close above that, then we can expect resumption of an uptrend. And talking about the overall scenario for last 4-5 weeks, we have been consolidating between 24,400 to 25,200. That consolidation is still there. So sector specific strength and stock specific strength is still there till this range holds. We can trade in those stocks which are outperforming and sectors which are outperforming. But overall, we believe that 24,940 is a crucial level above which we will turn again bullish, and we can expect momentum in that case. Otherwise, we will oscillate between 24,400 to 25,000. That's what the chart says right now.
Right. And also, just wanted to have your view, how are charts looking when it comes to upstream and downstream companies that you have?
Yeah, so the stock like ONGC and Oil India, these both have actually broken out on the medium-term charts. It looks very strong. In fact, if I were to talk about the ONGC, the oil exploration company, it has surpassed the 200 days EMA resistance, and multi-week consolidation breakout can also be witnessed on the charts. So I think overall positionally they are looking very strong. Especially Oil India took the lead, and after that ONGC is also showing strength. So overall, if I were to look at 2-3 weeks view, the way crude prices are going going up and holding at higher level, and the way charts are developing for this oil exploration company, it looks like that positionally this stock should do well, and we can expect 5 to 7% further upside. Today it might be a different day. Today it could consolidate, but overall in next 2-3 weeks I am expecting oil India and ONGC stocks to do well in the just because crude has been rising, and the overall chart setup is saying that overall it should perform well.
Okay, so that's with regards to the oil and gas space. But one other stock that is in focus today is a Blue Star. An interesting conversation we had with the management as well, but they are indicating that they've cut production to the tune of almost 20%, and this is on the back of early monsoons. And taking cues from here, I think we will see a counter impact that could be happening in terms of other companies as well, like a Voltas, Havells, EPAC, and your EMS companies like a PG, Electroplast, Amber Enterprises. All of these are the ones who manufacture ACs. Let's quickly listen in to a bite of that conversation.
It should be around 25% compared with last year, which was a growth of over 57% over FY24 in FY25. On that, there will be reduction of around 25%. So that will be the impact. But you do have many cost levers. So I think Q1 for room air conditioners will be bad. But commercial refrigeration is doing extremely well, and we are a B2B company as well as B2C company. So it is a disappointment. We will bounce back. That's where we are.
Right, Vinay. Very quickly, in terms of your AC companies, any charts that look interesting or any sell calls coming in there?
Not sell calls. In fact, Blue Star has started recovering from the lower levels after healthy correction. So it is looking good for the short term. I will not bet for the medium to long term, but yes, at least we can expect this stock to move towards the next resistance of, let's say, 1796, which happens to be the 200 days EMA. So it has surpassed the 20 days EMA, and now it is looking stronger on the chart. So for short term, we can expect 7 to 8% upside in the stock like Blue Star. But at the higher level, the resistance which I have discussed, 1790, it is a strong resistance, and around that one can look for the profit booking in the short term.
Right. Vinay, so Morgan Stanley has come out and have a more optimistic outlook when it comes to agrochemical sector. So basically they are predicting a constructive volume-led cycle in 2026, and for that they have upgraded PI Industries to overweight due to its high exposure to agrochemicals, and also they are also positive, rather upgraded Navin Fluorine to equal weight because of the improved operations, margins and order book. Although they are also bullish on SRF, but considering the valuations, they are saying that the SRF current valuation is at all-time high and might be pricing in peak probability. Just wanted to have your view on overall chemical sector and your view on PI Industries and Navin Fluorine as well.
Yeah, so all those three stocks which you have just discussed, all are in a clear-cut uptrend. Talking about the SRF first, technically SRF is looking much stronger because in the month of January 2025, when mid caps and small caps were falling, this was a stock which showed great amount of resilience and broke out from the long-term range. So on the longer-term chart, SRF is looking very strong, followed by PI Industry. PI Industry has also seen a nice recovery in last 4 months and heading towards its all-time high. So SRF low would be my first priority, going by the technicals, followed by PI Industries. And Navin Fluorine also, it is looking strong. Yes, so entire space has been performing well, but within that space, if I were to choose first stock, first priority should be given to SRF, followed by the PI Industry, and then Navin Fluorine. So yes, overall view is positive for this sector, and stocks are also looking stronger on the charts.
Right, so positive view for overall sector. Well, thank you, Vinay, for joining this conversation. Pleasure to have you. But viewers, that's all the time we have on the show. Stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, Anushi, if you look at the markets, they have gained more than 200 points, snapping their two-day losing streak, but the 24,950 level, that continues to seem as a resistance here.
Of course, what started as markets around flattish movements, but from there we have seen some strong recovery in terms of where the markets are headed. As you mentioned, 24,936 is currently the mark that we are looking at. The high was around 24,950 order levels or so. So markets up around 0.9%. That's what Nifty 50 is indicating currently. In terms of the Nifty Bank, if you are seeing over here what's happening as well, if you are seeing that's also gaining momentum, 0.6% up. Let's pull out the point contribution table to see what's happening there, which are some of these top contributors over there. Right at the top, we have HDFC Bank. Along with that, Infosys and Reliance Industries also in focus. However, what is not doing so well is something like a Tata Motors, and this is after the JLR guidance cut that we are looking at. That's the Jaguar Land Rover cut that we are looking at, which is impacting the performance for this stock today. Sun Pharma and Dr. Reddy's are also in red, so we are seeing pressure in those counters as well in the pharma space. But let's take a look at the Nifty overall, the sectoral indices as well, to see how that is shaping up. So in terms of sectors, currently all the sectors in green. That was not the case at the start of the session before. Nifty IT right at the top, seeing gains of over 1.8%. Nifty Metal up over 0.9% as well. Nifty Pharma, though, flattish moves that we are seeing, and Nifty Auto around 0.17% of an uptick. But let's see the Nifty IT index overall to see which are some of these stocks which are in focus over here. So in terms of the Nifty IT, Coforge, Tech Mahindra right at the top, 2.8% to persistent 2.5% gains there. In fact, all the stocks that we are looking at are clocking in about 2% of gains that we are seeing. Now, in terms of where the broader markets are concerned, broader markets also in Nifty Mid Cap 150 over 0.5% up in trade, while small cap 250 if you are seeing flattish moves over here. So benchmark indices performing relatively better. So that is what we are looking at. In fact, let's see the BSE 500 to see what's the stock specific action going on. Sterlite continues to be in focus, and this is one counter which has been in focus after the 2,000 plus crore of an order win that it has received, up over 13%. Sheela Foam Team Lease, another counter, seeing about 5% of gains, while what's not doing so well is something like a Hudson Agro, seeing cuts of over 4.7%. EPL, Tata Motors down about 3%, and Web of Global down about 3% as well. So Samit, that's overall picture that we are looking at in terms of where the benchmark and the broader market indices are, right? But the story continues to be on the Israel and Iran conflict, right?
Well, yes, the Israel-Iran conflict does have a bearing on the oil prices, and oil prices are currently hovering around the $75 per barrel mark. Now, if you look at Iran's contribution that comes in to the global oil market, it is just it's in fact just 3.5%, which means that Iran currently accounts for just 3.5% of the global crude oil production, and Iranian oil exports are under US embargo, which means that most of the oil that comes in from Iran is getting imported or getting exported to China. Around 80 to 90% of the Iranian oil is currently being imported by China, but there is a big indirect impact because of Iran, because Iran nearly controls 70% of the oil that is destined towards Asia through the Strait of Hormuz and the Red Sea. Now, this clearly means that nearly 70% of the oil that is coming into Asia passes through the Strait of Hormuz or the Red Sea, and Iran has a direct control over the Strait of Hormuz and influence on the Red Sea through Yemen's Houthi rebels as well, which means that, however, the past episodes have shown that there has not been much of a big impact on oil prices. Yes, for the short term, we have seen in past also that oil prices have risen, but it has not taken more than 4 months for the oil prices to normalize. For example, back in 2011, 2012, when Iran sanction threats were there, oil prices rose nearly 25%. However, it just took 4 months for the oil prices to normalize from here on. When there were Gulf tanker attacks back in 2019, oil prices rose as much as 10%, but it took just 1 month for the oil prices to normalize. And when there were the Red Sea and Houthi attacks back in 2023, 2024, oil prices rose by nearly 15%, and it just took 2 months to normalize from those levels. Now, what could be the impact on India? Obviously, if oil prices continue to remain at a higher level for a very long time, there could be a negative impact. But if it remains for a shorter period of time, then analysts are not expecting much of an impact to come in on India, given the fact that they're estimating just the trade deficit to increase by just 0.3% of the GDP. Now, to discuss more on this, let's also welcome in Janif Shah, the Vice President of Oil Market and Downstream Analysis, from Rystad Energy. Janif, coming to you on this, firstly, how big or how important is Iran for the global oil market currently?
Firstly, thank you for having me on. Great to be on this morning. To answer your question, how important is Iran? It's extremely important. I cannot understate this, partially due to the amount of volume that actually flows over into China basis, exports from a crude perspective. But if you look at, as you correctly mentioned a moment ago, the Strait of Hormuz and the controlling factor, controlling interest there, if there is any sign of a closure, which is fairly unlikely at this point as per our latest analysis, if there is a potential of that closure, it could impact around or up to 20 million barrels of crude and products, right? That's sort of 14 to 15 million barrels of crude exports that come out of, the Middle Eastern players, Saudi, UAE, Iraq, to name a few, as well as 4-ish million barrels of products. So from a global perspective, this is extremely important because most of this material actually flows over into Asia. And, where the current growth potential and factors are from a refining standpoint and a products demand standpoint are also Asia, right? So from a long-term perspective, I think that sums up essentially what we're seeing. Iran is extremely important right now, and the price indicators that we have seen this huge spike over the last 2 or 3 sessions within the oil space is indicative of exactly that.
Right. But already oil prices have shot up from $65 per barrel to nearly $75 per barrel. So how much more of an upside are you seeing to oil prices because of the current conflict?
The upside is significant. I'm not able to put a number on it right now, but we could reach somewhere higher than where we are, maybe 70s, 80s, or even 90s. Hitting the 3 figures at this point is a little bit out of reach, we would say. But part of the reason here is if you look at the global picture on supply and demand and imbalance on crude market as well as total liquids, we are currently in the global state of pure demand increase, right? So we are drawing stocks from crudes and products at this exact very month because of summer transport and travel demand. If it comes to the latter part of the year, in Q4, where we do see an oversupply of the market completely, basis the current directive of OPEC Plus on the crude supply element, that is where we would see somewhat of a downgrade in terms of or a downplay impact if this was to happen at that time period. But yes, there is a significant upside, but we have seen this sort of $8 to $10 of geopolitical risk index premium that has just been added almost overnight.
Right. Now you must be speaking to multiple experts, multiple partners as well, and clients might also be asking you this question. How long, based on the past occurrence that we have seen, do you expect these issues to persist now?
Well, I think that is on the top of everybody's minds, as you said, right? Clients, internal, everybody is discussing this exact theory. But we feel like most of the impact here is, could be down to what the U.S. administration does. It's essentially play out into the market, right? So it would probably like to think about a de-escalation crisis scenario, such that there could be an added infrastructure, a lack of infrastructure risk and a flow risk, because from a pricing perspective, the U.S. gasoline market is paramount to the current U.S. administration, right? So this right now, of course, indirectly, but it does affect what happens across in the U.S. And how that could impact the wider global markets. How long could this be? We are looking at maybe a few more days, maybe a bit longer. But again, much of this does rest on how the response comes, if there is a response, and how long those two interaction or interactive forces play against each other.
Okay, thank you so much, Janif, for joining and sharing that outlook in terms of what it could mean, the Israel-Iran conflict could mean for the oil prices out there. But with global energy concerns escalating due to the Iran-Israel conflict, Union Minister Hardeep Singh Puri has provided a reassuring update indicating strong and effective measures are in place to maintain India's energy security firmly. Listen in.
अब कुछ लोग चिंता करते हैं कि ग्लोबल सिचुएशन ग्लोबल टेंशन के कारण, तो मैं आपको विश्वास दिलाना चाहता हूं, हम इसमें ऑलमोस्ट डेली रिव्यूज कर रहे हैं. हमारी जो एनर्जी सिचुएशन है, हमारे पास वी हैव एनफ स्टॉक्स, हमारा अपना प्रोडक्शन भी बढ़ रहा है.
Okay, with that, it's time to welcome in our guest for today. That's Gaurang Shah, Senior Vice President joining from Geojit Investments. Gaurang, nice to have you again on NDTV Profit. First of all, my question is about the markets. Like on Friday, we did see a skyrocketing surge in terms of where the commodity prices were, where the oil prices were headed. Today also the impact remains on the Israel-Iran conflict. Want to get your outlook in terms of the overall sector and if there are any stock-specific action that we can be watching out for.
Well, thank you so much, Anushri, for having me on the show. Good afternoon to all of you all. Look, first of all, I think what happened on Friday and what happened today. I think Friday was the day which took serious hit or impact on fallback of what happened in the Middle East. And, we are talking of Middle East, but we don't have to forget there is another side of the geopolitical tension in form of Ukraine and Russia. However, the situation in the Middle East between Iran and Israel looks to be a little bit more serious than what is reported from elsewhere. Friday, if you actually go to see, the market started at its lowest point, I think sub 25,000 if I'm not mistaken. But by the time the trade did wind up on Friday, we did see a sizable amount of recovery coming in. Fast forward to this morning, Monday, we started off with a little bit of positive note. We went marginally down now in the red. And now as we speak, we are virtually trading at the highest point of the day. What this means is that the screen is trying to tell you something, and this is not the first time that we are facing this kind of a geopolitical situation. Yes, when it comes to crude oil and natural gas, it is a little bit more elevated on the seriousness because of the important sea route and Iran being one of the largest producer of crude oil and natural gas. And of course, the hit that the refineries have taken because of Israel aggression. And as Minister Hardeep Singh was pointing out, we are also producing more. So the dependency is coming down lesser. Our imports from Iran is virtually nil, if I'm not mistaken currently, because we have stopped importing for Iran. We are taking it from the rest of the world. For the markets, the next step forward is going to 25,000 and staying there and possibly giving a close above those 25,000 mark, because 25,000 is a level wherein we start feeling a little bit top heavy. In this scenario, I think sectors that you should look at: defense, capital goods engineering, capital market related sectors, real estate, and housing finance companies. So these are your priority sectors. Of course, our fundamental team covers a lot of other sectors also. But just to, keep the current situation, I think these sectors would be in the spotlight.
Okay, so that's the overall market view that we are looking at. But but coming to stock-specific action, what is not doing so well is something like a Tata Motors. It's down about 4% in trade. Now, JLR shocks investors, cutting its FY26 EBIT margin guidance to 5 to 7%. This is from 10% levels that we were earlier seeing. Let's bring in Hiral with more details on this.
Tata Motors is now the top loser in terms of Nifty 50. EBIT margin guidance that has been reduced to 5 to 7% for FY26 versus the earlier guidance of 10%, and that's the key highlight. Because of the guidance reduction is what the stock is reacting to. In terms of the free cash flow as well, that is close to almost zero in terms of FY26, and they're expecting improvement on a year-on-year basis only from FY27 and 28 onwards. Apart from that, if you talk about their China premium market, that is what has been facing pressure, and this is what they've given data in terms of calendar year 24. 215 models across companies have seen a price reduction, so there is pricing pressure that is coming in terms of the Chinese market. Apart from that, 4,400 retailers have gone down in the PV segment, and the premium market has seen a degrowth of around 15%. So overall, China, which is one of the major markets for JLR, has been under pressure. Overall, another segment that they are looking to enter is the Freelander, but that will come in only in the second half of FY26. So there is a wait and watch mode on that front as well. Though FY25 for Tata Motors was a breaking year because they did deliver the best ever EBIT since FY15. Record profit number in terms of FY25, the best ever dividend, and in terms of Defenders, they sold a record number of 115,000 units. So in spite of FY25 being really strong, China is the one which is going to put pressure from here on as well. And the kind of downtick that they're expecting in terms of the EBIT is going to be a concern at least for the next 1 year. 27 and 28 is what we need to wait and watch and see.
Okay, thank you for that, Hiral. Gaurav, coming to you on Tata Motors. Now, Hiral pointed out about China creating issues with the company. Along with that, even the guidance cut that we've seen. Just want to get your assessment on this counter.
So before I give any stock-specific views, just to give a disclosure, the views are of our fundamental research team. Our company, Jyojit or myself, we do not have any investment or financial interest or any other conflict of interest. However, we share similar recommendations to our clients. They might have their investment interest over there. Now, coming to Tata Motors specific, I think this is one stock which has taken the hit on the chin very recently, frequently. The issue with cash generation and the issue with JLR. JLR primarily why, Anushri, because it is a high margin product. And it contributes to a great extent to the bottom line and the top line. Domestically, there have been issues in terms of some reports I read which were saying that inventories at dealer level are at multi-month high. Offtake is not happening. We saw the numbers month on month just some time back, which was not looking very encouraging for Tata Motors. But I think whatever the problem lies with Tata Motors, its immediate effect is purely from a short to medium term point of view. Our research team, as a disclosure, maintains a positive view on Tata Motors purely from a long-term time price.
All right. Another stock that is in focus is PI Industries, and this is after Morgan Stanley has come out and upgraded its rating on the stock. Let's get in Varsha with more details on the same.
So Morgan Stanley's research note on chemicals indicates a more optimistic outlook for the agrochemical sector, predicting a constructive volume-led cycle when it comes to FY26. What they're saying is they expect a new phase of global crop protection volume growth in 26-27, which will benefit Indian chemical companies due to improved inventory level and customer sentiments and farm profits. Now the positive implications for Indian agrochemical companies form 30 to 35 45% of revenue of India's specialty chemical firms. As global volume rise, Indian companies are expected to see double-digit volume growth, a return of 20% CAGR earnings, and of course 200 basis point of increase in ROCE by FY28 according to MS. Now, Morgan Stanley has upgraded PI Industries to overweight due to its high exposure to agrochemicals and expected three-pronged volume increase. They also upgraded Navin Fluorine to equal weight because of improved operation margins and order book that the company has. While positive, they remain selective on valuations. They believe PI Industries stock has already priced in patent concerns, but not the upside from new molecules and domestic turnaround. For SRF and Navin Fluorine will also benefit from improving a cycle, but SRF's current valuation are at all-time high, might be pricing in peak profitability according to MS. And lastly, they've also talked about the key risk. The main risk is if the expected volume doesn't pick up, which this would worsen pricing pressure and delay returns according to MS.
Right. Gaurang, coming to you on this chemical space, any views on PI Industries and Navin Fluorine here?
So Navin Fluorine doesn't appear in our coverage. I won't give any comments on Navin Fluorine, but yes, PI Industries, and along with that, Aarti Industries, Pidilite, UPL, Tara Chemicals. These are some of the names in the specialty stroke agrochemicals universe, which our fundamental team is positive on. There was also thought process of China Plus One auguring extremely well for the specialty agrochemicals, but it did not happen during that time. We hope that there is a positive turnaround going into the future.
Okay, so that's the view that we are seeing for some of these chemical counters. Thank you, Gaurang, for joining and sharing that perspective. But let's talk about the pharma space now. India pharmaceutical market has seen a 7.2% of a growth in May 2025. In fact, we spoke to Sayan Mukherjee, head of India Equity Research at Nomura, regarding the space and which are the best bets for the space. Listen in.
Given the IPM growth has remained in a range of 10% in the last 19 months, what is your long-term outlook when it comes to IPM growth rate, especially considering the impact of trade generics and the private labels?
Yeah, thanks for having me on your show. Yeah, I mean, actually, the industry growth has been sub 10%. Actually, we have been grappling with 7 to 8% growth over the last couple of years. So this data that you are referring to is essentially the branded generic data, which is where the slowdown is. I remember, maybe 5-7 years back, we used to look at 11-12% as the normalized growth rate. So clearly the trend growth seemed to have slowed down to something in high single digits. And as you mentioned, our assessment is that there is market share loss by the branded generic players to trade generics, private label. We are seeing organized retail, online players. They are introducing their own private label, which is more profitable for the trade. And all these factors are eating into the market share of branded generic segments, in our view. Going forward, I would say that we may see some more slowdown. I can't rule that out at a broader market level. Especially if I think about, let's say, 5-6 year, over the medium term. And if you see even the 7 to 8% growth, a large part of this growth is driven by price increase, which is somewhere in the range of 5 to 6%. That also seems unsustainable from a long-term perspective. I think in the near term, let's say if you take a 1 or 2 year view, I think what we can, look forward to in not so strong scenario is essentially the launch of weight loss drugs like GLP-1 or diabetes drug, which are expected to enter the market sometime next year. That can boost growth because probably we will see good demand there. So that's something to sort of watch out for, or is a silver lining, so to say, for the sector.
Got that view. We'll speak about GLP-1, because I have a few questions around that. But sticking to the IPM only. Now, there was a weak volume growth as well, Sayan. Now, do you foresee any catalyst for its recovery in the near to medium term?
Looks difficult, Varsha. I think, the volume growth slowdown seems to be more structural in nature. So volume is lost to trade generics and private label, as I mentioned. And I think this is gaining more traction as people are getting aware of generic medicines. And we have more high quality medicines getting introduced in the market. Also, if you noticed, the government is also encouraging generics. The Jan Aushadhi scheme, supported by the government, is gaining good traction. They are expanding their store counts, and the data from the government suggests that this segment is growing almost 30% on a year-on-year basis, versus let's say 7 to 8% that we are talking for the broader market. So unfortunately, the volume growth for branded generics in particular, I think, is a structural problem, and we may not see a meaningful revival. One point I would like to mention is that the slowdown that you saw recently was also aggravated by very weak seasonal demand, especially when you look at respiratory, when you look at cough and cold, anti-infectives. These are seasonal products, and their demand last year was low. So depends on how the season plays out this year. So that can possibly be, some positive as far as volume growth is concerned, but that's more cyclical rather than structural.
Mm-hmm. Okay, got that view. Now, Sayan, coming to US FDA inspections. Now, I'll come to you for Sun Pharma, but before that, recently US FDA had announced that they'll be having unannounced inspections of foreign manufacturing facilities. Number one, and they've also announced increase in the fees for the inspections of these facilities. Just wanted to have your view on that.
Actually, our understanding has been that most of the inspection, at least in India, has been unannounced. So to that extent, I think the companies are all the time prepared or ready for inspection. So that's not something I think will be a meaningful difference versus, let's say, what the situation is currently. As you know, last 10 years, there has been a lot of FDA related issues that the companies have grappled with. There has been a step change in the regulatory requirements, and most of the large companies that we track have really invested in upgrading their facilities. So the recent announcement of doing all the inspections which are unannounced, or maybe even doing more frequent inspections, I do not expect that to sort of change much for companies. In fact, it could mean that companies which are more compliant, or companies which have robust processes, may outperform, in the sense that they may be able to clear inspections versus others who have probably not invested as much in upgrading their facilities. So net, not much of a change, but good for companies, especially the larger ones, which we expect would have invested significantly in upgrading their facilities.
Well, that's the overall outlook that we are seeing for the pharma sector, but that's all the time that we had on this edition of Profit Top Trade. Stay tuned for India Market Close coming up next.
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saida, with me is Neeraj Shah, and let's quickly look at how the index Nifty 50 is doing today. Good day of trade, around 1% or so higher on the Nifty. Let's look at it intraday as well. We're closer now to 25k than we have been most part of last week. Rather, we slipped post slipping below the 25k mark. Look at the way we've rallied from the low as well. That's been very impressive. 100 or maybe 260 odd points from that bottom of the day, which is what is reflecting the strength, at least at this point. But what else is reflecting the strength is, look at the heat map and look at the breadth on the Nifty. And you have 45 stocks sitting well in the green. You have nearly 30 stocks gaining 1% plus in trade on a day like this. So very good strength. The financials, the IT pack leading the way. Within the financials, it's the life insurers leading the way. The Nifty Bank actually underperforming. Let's pull up the Nifty Bank, give you some context with regard to how that is playing out. There you go. 0.6% higher on the Nifty Bank, mind you. The Nifty 50 up 0.9 odd percent. So the strength coming in likely from IT. Let's pull that index up. Very good strength, 1.6% higher. Look at it from the bottom as well, nearly 900 points up from the day's low on the Nifty IT index. So very good rally that the IT index has seen. So this is one place where there's been good traction. Let's look at the contributors on the Nifty next. So what we are seeing is, on the Nifty, the breadth is extremely strong, while the contributors, there's no large contributor sitting on that side, but just the breadth is aiding the index higher. So we're nearly 220 odd points plus higher for the day. So that's on the Nifty. Let's look at the advanced decline now on the NSE, and that is showing you a slightly different picture. Look at the breadth. Of course, it's tapering, so we're going towards 1:1, but even otherwise, the breadth is not favorable. So therefore, what you're seeing, Neeraj, on the broader markets front, which is the mid cap and the small cap, is surely an underperformance versus the Nifty.
Yep, and specific pockets may be standing out, but otherwise, yes, underperformance for sure. So, pick out the broader end of the spectrum, and there are of course a recovery from the lows of the day. Pockets which are aiding that. You pick up individual names like Sterlite Tech or Sterlite, which is 13% higher now at 94 bucks. So that one is doing very well for itself. Indraprastha Gas. After a long time, I'm seeing this move on this one. And then a clutch of chemical pharma related names. So FDC, PI Industries, Atul, Gland Pharma are amongst the names which are doing well. MCX had some positive news flow the last few days, and I think that is doing okay. Essentially, some capital market names, like, because I'm also seeing UTI AMC being in the fray. And after a long time, you're seeing KPIT Tech bouncing back. So that one is doing really well for itself. On the flip side, what's not doing well, side of Tata Motors, of course, Gujarat Fluorochem lower, Valor Estate interestingly lower, and the pharma / chemical names which are not doing well are Alembic, Newland Labs, Emcure Pharma, amongst others. Let's get in Jay Bala, founder and chief market technician at cashtochaos.com. Joins us right now on the show. Jay, good having you. It's been a while. Thanks so much for taking the time out. How do you look at today's move, Jay? Because world markets too have kind of recovered from the Friday jitters, if you will. Is India participating with that, and is it a short covering led move, or is there more to it?
My view is that, Neeraj, the markets are set for record highs quite soon, even quicker than I'm anticipating. But the very short term, there's a small possibility that the Friday's low mark the short-term corrective decline, and if the markets were to cross the high of 11th of June, I think the next move could be quite fast. Next 1,000 points higher could come really quickly. So it is not, in my opinion, it's a change of trend. It's not a short covering rally. Probably, the bears are finding out that probably there is no depth in shorting the market. Probably the bid is quite high, quite strong in the markets, and probably it's heading higher. If the markets were to go below 24,300, that would slightly delay the onset of the move higher. The market could drop somewhere close to 23,500, and then once again come back to start the journey towards record highs. My view for the next 6 to 12 months is that Nifty is headed for 29,000. Okay.
No, sorry. No, wait a minute. Did you hear that? Did I hear you say 29,000?
That's right, Neeraj. That's been my view since the third week of April.
And how short or medium term is this short to medium term view?
I mean, I wouldn't be surprised if we get record highs as early as July. So, that's the reason why I was saying the next 1,000 points higher on the Nifty could be quite quick if the 11th of June high is taken out. And so the structure, the short-term structure from the April lows, that's such that it's a nested higher highs, and typically this kind of price structure leads to very sharp up move. So we're waiting for confirmation for the market to go above the 11th June high.
Sorry, Jan, just one follow-up. So let's assume that by July, August, what have you, I mean, effectively 1, 2, 3 months, we do nudge new highs. The 29,000 happens in the next 12 months or something like that. Is there some chartical pattern there or a date pattern there?
Yeah, that's right. It's a medium-term elliott wave pattern. The April low marked the corrective decline for the markets from the September 2024 high. So in elliott wave terms, that's in my books, that's the end of the fourth wave. So the next high wave higher will take the markets beyond the September high of 26,277. Price projections work out to somewhere between 29,000 to 35,000. I'm taking a conservative stand, and I'm projecting only 29,000.
Jay, what are your picks in this market, therefore?
Right, the markets are experiencing such sector rotation, and we've seen a few sectors like real estate and capital goods perform well. I think the next rotation is coming into cement stocks. So I have a pick from the cement space. Ultratech, I'm bullish on it. A stop loss of 10,900. I'm anticipating Ultratech to reach somewhere about 12,600 to 13,000. The other one is a conditional buy from the capital goods space, Crompton Consumer. If the stock were to cross 360, I'm anticipating it to rally to about 420.
Jay, what do you make of so from the bottom, pretty much all three, which is Nifty, mid cap as well as small cap, all those three have rallied. But what we're seeing is that the Nifty 50 is showing remarkable resilience given just the breadth. We're not seeing that kind of breadth on the broader markets. You expect that to trickle through maybe later today, tomorrow?
I don't know if it's going to be happening that soon, but definitely I anticipate the rally to widen out. See, the thing is, if you look at the autos and if you look at the capital goods sector, when they are doing well, that's signaling the overall health of the markets. It's the equivalent of Dow theory for the Indian markets. When Nifty autos and capital goods clock higher highs and higher lows, that tells you the market's in an uptrend. So that's exactly where the Indian markets are. So the broadening of participation that we are anticipating or we are looking forward to is not yet happened. And I also anticipate the rally to broaden to pharma sector. Already there are some signs happening there. If 22,100 on the Nifty Pharma Index gets taken out on a closing basis, I think the Pharma Index is set to clock fresh record highs.
Jed, what's the view with regard to IT? Because that's the other one which has done fairly well from the lows.
Yeah, I've not been too bullish on the Nifty IT sector. Okay. I've been counting this as a counter-trend rally that's likely to take it to 38,500 to 40,000. It's crossed the lower range of that. But I'm more bullish on the mid-cap space rather than the frontline space. So you can look at, if you're bullish on IT, you can look at Persistent, Coforge. In the large cap space, maybe something like a Tech Mahindra. So these Tech Mahindra, I would say, is the strongest amongst these three. So Tech Mahindra, Coforge, and those are the names you want to look at, and Persistent. So in that order, Tech Mahindra highest in my ranking, followed by Coforge and then Persistent.
What about a KPIT as well? Looking very interesting. It's up 4% in trade today. What's the view there?
That's right. It's perking up. I would like it to do a little more upside work. If it were to close above 1420, and that'd be a very interesting move. It's very close to that. It could lead to a potential scale up to somewhere like 2,000 for the stock. But I don't want to preempt the move. I'll see if the stock can close above 1420. If it does that, then the stop loss is about quite tight. So you can place a stop below 1304 and expect a rally towards somewhere close to 2,000 mark.
Wait a minute. Sorry. No. Am I listening to things wrongly? Did you say a level of 2,000?
That's right. I anticipate the record highs to get taken out. It's clocking a large inverse head and shoulders pattern. And the trend line also falls at about 1420. So if it were to manage to take that out on a closing basis, I would anticipate this rally to sustain. And as I said, I'm more bullish on the mid-cap space rather than frontline names. That's the reason I'm not taking out the names of Infosys, TCS. So I'm avoiding those names.
No, completely fine. But that's an unusually bullish Jay Bala that I'm speaking to in the last 6 months. So something's changed there. Jay, what are the ideas for this afternoon? So we've asked you enough stocks on our own now. Now let's hear from you. What are the 1 or 2 ideas that you are picking up? Maybe you already gave the answers, but give us the rationale for one top idea.
Yeah, if you want to look at the large cap space, you want to look at...
No, I don't need to, Jay. I'm not putting a gun to your head and telling you give me a large cap name. You say whatever you are comfortable recommending. Okay.
Yeah, the large cap I like is ABB. As I said, I'm bullish on the capital goods space. So ABB is looking quite interesting. And it's already done the technical breakout, but volumes haven't yet picked up. It's probably pick up quite. I anticipate it to pick up reasonably, soon. I don't anticipate the stock to drop below 51.80. So that's the stop loss for this. I'm anticipating it to go back somewhere close to 7,800, maybe even higher. And from the small cap space, again, within the capital goods space, it's Schneider Electric. I don't know if I've spoken about it a month ago or a fortnight ago. If I have, I still continue to remain bullish on it. I'm anticipating the record highs to get taken out somewhere about 960,000. And I don't think the stock will drop below 640.
Numbers again once, Jay, because your voice cut.
Okay.
On Schneider.
Electric,
Yeah.
Schneider, I'm anticipating 960 to 1,000. And the stop loss is about 640, 630.
Okay. It's difficult to let Jay go. But especially given the mood that he's in.
Yes, it's impossible
he's
to let
throwing names and he's giving 30% upside on pretty much all of the names.
Which is welcome. I mean, he is giving a 20% upside on the index, which is great, or nearly 20%, which is great. So Jay, stay on. This is lovely. When you are in such a mood, we shouldn't let you go. But we need to do a small piece on the here and present as well, which we'll just do for a moment. So stay on if you can. And viewers, the more important, I mean, the one important, really important thing right now are the tensions between Iran and Israel, right? Well, to say that they are on the rise would be an understatement. The point is, how significant could this be from India's economy, and how quickly could maybe potentially crude prices stabilize? Let's first get in Somit, who joins us to break down the numbers and explain what lies ahead for consumers and businesses alike. Somit.
Well, if you look at Iran on a standalone basis, they do not contribute much to the global oil production. They account for just 3.5% of the global crude oil production. And moreover, Iran's crude is under US embargo, which means that they cannot export this crude to any other nation. And only China is the buyer for this crude. So which means that nearly 80 to 90% of Iran's crude is being imported by China. So not much of a supply or supply impact that could come in because of this war. But indirect impact could be much more, given the fact that Iran, nearly 70% of the crude oil which comes to Asia passes through the Strait of Hormuz or the Red Sea, and Iran has a direct impact, direct influence over both these routes that we are seeing currently. Now on the Strait of Hormuz, it has a direct influence, while when it comes to Red Sea, they control that via the Yemen's Houthi rebels. So that indirect wise, they could have a big impact, given the fact that 70% of the crude oil which is coming to Asia comes through both these routes. However, the past events or the past episodes or past such episodes have shown that whenever there has been a sudden such rise in crude oil prices because of such events, it has not lasted longer. Like back in 2011, 2012, when the Iran sanction threats were there, crude oil prices had risen close to 25%, but it just took 4 months for the crude oil prices to normalize from here on. Gulf tanker attacks that we had seen back in 2019, crude oil prices had increased by nearly 10% back then, but it just took crude oil prices 1 month to stabilize from there on. And lastly, when you look at the Red Sea attacks that we had seen back in 2023, 2024, crude oil prices had jumped nearly 15%, but it took crude oil prices just 2 months post that to normalize from those levels. Now, what would be the impact on India? Supply-wise, we do not see any impact, given the fact that India has already stopped importing Iranian oil since 2020, and their dependence on the routes of Strait of Hormuz and Red Sea is much lower, given the fact that India has started to import more oil from Russia back in 2022. Russian imports were nearly zero. Right now, it's around 30 to 40%. So there, supply-wise, we do not see an impact. But yes, if prices continue to rise going forward, then there could be an impact. And assuming that that there is a 25% rise and it remains for next 6 months, then the trade deficit could increase by around $15 billion, which is just 0.3% of the overall GDP. The real GDP growth could slow down by around 0.2 percentage points, and the rise in crude oil prices could also increase the retail inflation by around 0.7 percentage points.
Okay, so all of those could well impact. Thank you so much, Somit, first off. But all of those could well impact India and the macro that we're currently setting up to play. So I'm not so sure as to how that will play out. But let's talk about the fundamental, right, Neeraj? Crude, because that will be the underlying on the basis of which all of this will move. And we have Dr. Iman Naseri, who is the Managing Director for the Middle East at FGE Energy, to talk to us about the outlook for crude and where likely crude could settle as a result of everything that's playing out. So let me start off with that first question. What's the view from you?
Hello, thanks for inviting me to your program. Well, so far there has been no impact on physical market. Physical barrels and supply has remained intact. What we saw, which was a price spike on Friday, and some of that has basically come down. Some of that impact has gone. We see around $10 now risk premium, geopolitical and war risk premium on prices, which has stayed over the past few days, although the market was closed over the weekend and now that opened, has stayed at around $75. That is pure geopolitical and war risk premium. But where we're going from here basically defines the path for crude market, as well as the freight. It was mentioned earlier that the shipping market remains on their toes to see the risk for passage through the Strait of Hormuz. If we see escalation of the situation, which has remained contained between the two countries of Israel and Iran, in terms of hitting each other's sites and facilities and people, towards the destroying basically oil and gas infrastructure, and later on perhaps towards we see the risk of Strait of Hormuz closures becoming significant enough to be taken into account. We could see prices go to $80 to $100 range based on, again, how much of physical supply is at risk.
Okay. Dr. Nasseri, the other question that stays in that if indeed and from a humanitarian perspective, we dearly hope that it happens sooner rather than later, but if indeed this clash gets over quickly, whether by US participation or otherwise, what have you, would the flare up in crude prices die down as quickly? Because it's not that the demand is really strong all across the world, and led by Saudi Arabia, OPEC and OPEC Plus have presumably increased production.
Yeah, no, as I said, the $10 premium, we should have been at around that $65 per barrel right now if there was not for this. And we should see the price dial back down to around that $60 to $70 from the current $70 to $80. However, that is a big if, what you said, which is basically the current situation to de-escalate and then any sort of deal to emerge. I think looking at the reasons behind the Israeli attack on Iran, and basically reasons for Iran to retaliate and defend itself against those attacks, are very hard to be addressed and justified through any sort of peace deal. The Iranians were actively engaged in a negotiation with the US on lifting the sanctions and basically, as they call it, a peace negotiation, which were attacked by the Israelis on something that Iranians believe to be backed or at least approved by the US. The US has confirmed that they were informed and hence an implied consent, but they haven't been engaged with. So how we can see this situation to de-escalate is something that really is hard to imagine at the moment. But if we were to find ourselves in that situation, I think this $10 premium will disappear within days.
Okay, so one side, what the downside risk is to oil prices is if this conflict were to continue, say maybe for a month or two, where do you see oil prices therefore? Do you see it beyond the $80 per barrel mark, or is the current kind of rally pretty much building in for the next couple of months of possible conflict? We hope that the conflict ends, but just looking at the downsides, the upsides you've highlighted, of course, could well mean that that oil goes back to $65.
Yes, the downside of this situation, which interestingly on the price wise will be upside on the price or price going up, is basically twofold. One is that the conflict remains between the two nations without direct involvement of any external players, which starts from the US. That will be the first player that should or would get pulled into this conflict. And the Israelis have mentioned that they're expecting it to happen anytime soon. US has said that they're still basically planning on staying outside. But if they get pulled into this, and then the retaliation of Iran will be attacking on the US sites, then I think in the middle of all of this escalation, we should expect the physical barrels to get threatened. First, the supply at risk is the Iranian supply itself, which is refined products of around 1 million barrels per day on an annual average, as well as 1.5 to 1.7 million barrels per day of crude over the past year has been exported. So that's around over 2.5 million barrels per day of supply at risk first. And then obviously any damage to these export facilities or upstream assets have, according to Iranian, is going to lead into them retaliate on some other suppliers within the region, which depends on how US gets involved, on which base. It could basically translate into further damage in supply here. Any of these things will escalate further into what I call it the last step of escalation, which is Iranian threat to close the Strait of Hormuz. That puts 20 million barrels per day, or roughly 20% of the global oil supply at risk. It won't last for too long, but it is essential enough and critical enough to shoot prices to $100 or more. Those are the next steps that I try to paint in terms of downside on the situation or upside to the price.
Dr. Nasseri, we'll leave it at that. Thank you so much for taking the time out and being with us today.
Thank you.
Jai Bala, a quick follow-up to you. While crude prices have rallied and therefore that has a natural impact on the oil marketing companies, fundamentally, report after report speaks about fairly optimistic outlook for BPCL, HPCL and IOC, particularly HPCL, but the other two as well. What are your thoughts on these?
See, let me first come down from crude. Crude has clocked a double bottom, and I had anticipated it to hit a 78 mark. In fact, Friday's high was 37.62, and I don't anticipate crude to exceed 80.77 now in this leg of the move. But if that were to happen, I have from a 1 year to 18 months time frame, or rather, let me put it this way: in 2026, I'm anticipating crude to be rallying somewhere close to 170 mark. But right now, in the short to medium term, I don't think it's going to cross 80.77. First, I anticipate it to come down to somewhere close to below the 55.12 it clocked in April 2025. So that being the case, maybe there is some possible tailwind for oil and gas companies. I like HPCL more than BPCL, and I anticipate HPCL to cross 460 after probably one drop towards 360, and that will complete the corrective move for the stocks rise from about 285 to 420, and then it will resume the next leg of the up move. As long as 80.77 is not crossed on the NYMEX crude, the oil and gas companies are safe. But if 80.77 were to get taken out, which is the January high, the futures contract keeps rolling over. If the January high of the futures contract gets taken out, the oil and marketing companies are in big danger.
Okay, Jay, extremely bullish and good having you today and giving us all of those views. On a day like this, it's good to see that the mood is upbeat. We'll let you go on that note. But what we'll do is we'll continue to stick with energy. The global energy concerns escalating due to the Iran-Israel conflict. Union Minister Hardeep Singh Puri has provided a reassuring update, indicating that strong and effective measures are in place to maintain India's energy security. And he's firm about this. Listening to a short piece that we have on this one.
अब कुछ लोग चिंता करते हैं कि ग्लोबल सिचुएशन ग्लोबल टेंशन के कारण, तो मैं आपको विश्वास दिलाना चाहता हूं, हम इसमें ऑलमोस्ट डेली रिव्यूज कर रहे हैं. हमारी जो एनर्जी सिचुएशन है, हमारे पास वी हैव एनफ स्टॉक्स, हमारा अपना प्रोडक्शन भी बढ़ रहा है.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term? Buy.
All right, back with India Market Close right here on NDTV Profit. After 2 weeks, it's that time of the show wherein our colleague Somit Sarkar joins in with all the chatter from the dealing room.
Well, yes, a lot of stock that
I haven't tossed two yet.
Okay.
I'm making a wipe which says, look who's back. So there is a wipe on the screen, it says, look who's back. And it cuts, the camera cuts to you. Somit, welcome back. Good having you. How was your holiday?
It was great. Okay. It was great. So on stock side, if you look at firstly the stock that is in focus in Z Entertainment, the company is has a board meet today where it will be discussing the various proposals that investment bankers had put forth to the company, and the street is expecting some announcements that could come in on OTT stake sale, and some internal cleanup announcement could also come in when it comes to Z Entertainment. Now the second stock on this second stock on focus is GAIL. Now dealers are indicating that domestic institutional investors have been buying this counter at lower levels. In fact, the stock had opened lower at around 1.5% in morning trade, but there has been buying interest in GAIL, specifically from DI's side, and they're expecting a slew of positive announcements to come in related to pipeline tariff hike, new gas transmission policy, monetization of its pipeline infrastructure, and they're also expecting the petrochemical margins to improve from here on when it comes to GAIL. Third stock on the list is Piramal Pharma. Dealers are indicating that there could be a potential block deal soon in this counter. Carlyle could be the seller here. Carlyle owns close to 18% stake in the company, and he might partially exit from Piramal Pharma. Couple of other stocks that remain in focus on the back of block deal, Indigo and Indian Hotels. Dealers are indicating that there could be block deals in both this counter this week only. When it comes to Mazgaon Dock, dealers indicate that large HNIs have started to accumulate this counter at lower levels in trade. Today the stock at one point of time was down around 3%. Now it's down less than 1% in trade. And lastly, Biocon remains in focus. The company could soon announce fundraise via QIP. It might be announced today or tomorrow. That's what the dealers are indicating. And the price for this fundraise could be at a discount of nearly 5 to 8%. And dealers are indicating that there is strong interest that have been shown by multiple mutual funds for this QIP. So keep an eye out for Biocon as well in trade.
Okay. Certainly we'll watch out for each of these. Sumit, thanks for bringing a clutch of these items, and viewers, watch out for some of these stocks during the course of the next few days, particularly, as we said, Biocon too. Hemen Kapadia of DR Choksi Finser with us on the show to talk about his thoughts on the markets. Hemen, great having you as always. Thanks for taking the time out. Before we get to the markets, which are doing well, Hemen, anything from the list of the names that Sumit was speaking about, some interesting names out there, including Biocon, including Mazgaon Dock, or a Piramal Pharma, or a Z Entertainment?
I think a very good afternoon to you, Neeraj. Thank you for having me on the show. It's always a pleasure. I think Biocon looks good. It's been somnolent for too long. We spent months hatching eggs, doing nothing, ranges between 300 to 400. Technically, it's ticking all the right boxes, Neeraj. So it might not be an immediate view, but if you have a few months point of view, I think 367, 400 resistance levels on the upside, but the setup is positive. I say this time it is finally setting the stage. Maybe I'm preempting it. Finally setting the stage to take out 400 from that point of view. So I think Biocon looks good. As far as Mazgaon Dock is concerned, well, it's had a run-up quite a lot. The setup isn't bad, but we walked into a correction. So possibly on small declines, we remain safely ensconced in a longer-term uptrend, Neeraj. And Piramal Pharma is in a longer-term correction. I would wait a bit. Technically, things are not looking that great. So if you were to tell me to rank them, it would be Biocon, Mazgaon Dock, and Piramal Pharma in that order.
Okay, so Biocon, Mazgaon Docks, Piramal Pharma. Hemen, let me take a step back. Take your view with regard to the index. What's happening today? This kind of, 1% kind of rally, if I can call it that. How sustainable? What are levels you are looking at now?
Well, Harsh, good afternoon. I think what has happened is that there's 5 weeks have gone by. There's a 6th week, first day, so you don't count it. So 5 weeks have gone by, Harsh. The range is very clearly defined, 24,492 on the downside and 25,212 on the upside. So that's roughly a 700-point range and 5 weeks. So we've neither given a breakout or a breakdown. We made multiple attempts at both sides. But 24,492 holding on Friday, I think, was a pretty positive sign. The VIX remains below 15, so I think that is also comfort levels. But if we are going to make headway, 25,200 needs to get taken out. Yes, in between there is also support at 24,492, but the broad range is 27,492, but broad range is 24,492 and 25,212. So if and when we take out 25,212, which is a possibility, I think the all-time high is going to be under threat. So maybe that's a bit far away, but as of now, I would be neutral to positive. We are halfway in this range, but the way stocks are moving, I think the advanced decline line is improving. Things are looking better, Harsh.
How likely we breach 25,200 this week or next week, Hemen?
Okay, now that is what you bold a googly or a dusra, Harsh. But Yes, I have a feeling towards the end of the week, we would have probably made an attempt at 25,200. Will we be successful or no? We'll have to wait. And it's a weekly level, Harsh. So after 5 weeks, we need to wait for that breakout. But I think an attempt will be made by the end of this week itself.
Picks for this afternoon.
Okay, two stocks which look interesting. Firstly, I have a buy call on ONGC. ONGC hasn't done much. Most of the PSUs have gone berserk. This has been fairly technically undervalued. We're on the cusp of breaking out, rounding bottom, overcome the 55-day weak exponential moving average. Oscillators buy. It's trading at the leash for a breakout. Buy on ONGC at 252, stop loss 244, target 268. Secondly, a buy call on Havells, Harsh. Looks quite interesting, has been consolidating for almost 7 weeks now. The daily price action is turning positive, will overcome and close above the 55-day exponential average today. Looks good, indicators turning. I have a feeling it looks quite positive on charts. So a buy on 1525 at 1525, stop loss 1500, target of 1575. Modest target, I think it should be comfortably overshot. Harsh.
Okay, so those are picks coming. But Neeraj, the one stock that's really standing out for me in trade today, Nifty 50, you have 45 out of 50 stocks in the green, so the breadth is extremely strong. But yet the top loser on the BSE 500 just happens to be Tata Motors, which is a Nifty 50 counter. Let's go across to Hiral, who's giving us that perspective as to what is happening in Tata Motors. Hiral.
Thanks, Harsh. So in terms of Tata Motors, I would say it's more of a sitting down versus a standing out right now, taking into consideration it's the top loser in terms of Nifty 50. But clearly a 5% downtick is what you've seen. One, zero cash flow is a major concern with regards to FY26 and the guidance that they've trimmed. Initially, in terms of FY25, they saw a margin of around 8%. And that time they had mentioned that they will look at around 10% in FY26, which they've now trimmed it down to 5 to 7%. So these are two major concerns that they're looking at. Secondly, they've flagged off increasing pressure in China's premium car segment as well for FY25, and despite it being the world's largest auto market. Overall, if you have to look at the improvement in terms of margins, what they've said is FY27 and 28 is when they will see that slow and steady improvement that will come in, but 26 seems to be an absolute downer from here on. Moving on overall, in terms of where their investment plans go, they say that they will remain committed, and that is what will help them probably get their margins back to that 10% trajectory from here on. They've highlighted that the enterprise transformation remains critical, and this is to reimagine their journey, which is expected to progressively deliver around £1.4 billion in annual benefits. The British subsidiaries also listed present and emerging risks that could impact the profitability. What they've said is there is a semiconductor shortage, aluminium supply is flooding, there are risks of thefts in the UK, and looming concerns such as US tariffs, the transition to the battery electric vehicle market, and tightening regulations, which is impacting business from here on. Very quickly, if you see in terms of US-China trade war as well, they are seeing a couple of concerns that are coming in there, and that's the reason why you're seeing that kind of a downtick. China premium market, if you see the challenges, the premium market itself is down around 15% in terms of FY25 is what they've highlighted. Apart from that, the first Freelander, which is in a different segment, not the absolute premium one, that is expected to come only in the second half of FY26. So they will not see any cash flows coming in from this model as well, because the launch is still much later. And if you talk about the EBIT, though, if you have to talk about FY25, it's been a record-breaking year because they did give out the best ever EBIT since FY15. It also recorded the best profit number in terms of FY25. The cash flow was the second best with regards to JLR in terms of the company's history. And the best ever dividend was given out in FY25 as well. So if you have to look at the way FY25 has been for Tata Motors, with 115,000 Defenders sold, which was again a record number, and now that FY26 is becoming a downer, That is what the street is not taking in a positive way. In fact, JLR also has its analyst meet right now, which is ongoing. So a lot of cues that could be coming out from there as well today. So yes, the pressure which is there tomorrow, it is going to be interesting to see how the stock reacts and trade tomorrow as well.
Well, very interesting and plenty happening. Thank you so much, Hiral, for summing that up. Siddharth Khemka, Head Research at Motilal Oswal, joining us at this opportune hour. Siddharth, great timing. Talk to us about what you make of everything that's happening Tata Motors.
Yeah, hi, good afternoon, Harsh. Glad to be on the show. Yeah, I think while the management keeps talking about the guidance, definitely it's something that would weigh on sentiment, given that they have on two key fronts, the guidance has been lowered. A, the EBIT margin for JLR, 5 to 7% versus 10%. Q4, if you remember, Q4 FY25 EBIT was at 10.7. So that's a big negative. We highlighted that in our recent notes where we saw that that JLR continues to face multiple headwinds because of the tariff-led uncertainty in some of its key markets, Europe, China, and then US. So, the near-term outlook, we believe that demand would remain weak. Rising cost pressures would add to the margins, plus the uncertainty. So overall, net, we believe that the stock could remain under pressure, at least in the near term. Next 2-3 quarters could see the downward tick in terms of the margins. Then the bigger thing was that FY26 free cash flow to become zero. That is another thing that markets will not take that positively. So overall, we remain neutral. We'll definitely go and make our estimates or revise the rating while post the analyst meet. But I think our rating has been consistently neutral for last 2 quarters.
Siddharth, at what point does Tata Motors start looking interesting to you?
So yeah, I think see, there are 2 parts to it. In terms of valuation, you can see some attractiveness, and B, once the earnings become bottom out. So I think the next 2 quarters, the margins could see a sharp downtick as highlighted by the management. And I would see once you are there, and then from there, the bottoming out process will happen. So maybe about a couple of quarters more of pain, and then we could see a point of seeing an improvement in numbers as well as valuation.
Okay, what's your take, Hemen, with regard to Tata Motors?
Well, her 700, 740 shouldn't have broken 700. I thought it was more of a consolidation, keeping in mind the protracted decline. So currently, obviously, the short-term picture has taken a hit. From a slightly medium-term point of view, I don't think 667 looks like breaking. I know that's 20 points away, but that's a weekly support. I don't think that looks like breaking. And if you look at the volume that we've generated today, it's higher than the last 25 trading days. So I have a feeling it's a sell-off. It's a one-day selling climax. If this level, today's low, holds for the next 2-3 trading sessions, worst is over. It doesn't look very exciting, but I have a feeling a lot of the negatives are built into the price. We 1180, 550. Okay, we give a recovery from 537 to 750. That's why we are seeing what we are going on. Maybe this was a fundamental reason for that. I don't think there's too much of a downside below 667. I would be more positive than negative, 20 bucks lower. Harsh.
I'll take over from there. Hemen, stay on, both of you. We got a global voice in Jonathan Shizel, Deputy CIO, Westminster Asset Management, at a crucial time, because we'd love to understand how is it that Jonathan himself and maybe some of the other people, clients, etc., are thinking about this situation. Jonathan, great having you as always. Good morning to you. Are you of the opinion that this will be contained and therefore a flare-up in oil prices, etc., may not be the outcome that is most opined upon, or do you reckon there is a possibility? Because I hear now both views. If there's a prolonged battle, then do we see oil flaring up higher as well? How are you looking at this?
Yeah, I think the obvious thing is if you look at oil prices versus, say, gold, then clearly gold is pricing in a lot worse a scenario than what we're currently seeing in oil prices. So we think energy complex is quite attractive here from a hedging or a risk perspective. But yeah, I mean, who knows where this is going to go? It could go either way. Clearly, markets are suggesting at the moment not to get too concerned. Usually, historically, most geopolitical events are brushed aside by the market after a short amount of volatility. This one, we shall wait and see. It could, you can, as you rightly say, you can build both sides to the story, whether this can escalate or ease off. I mean, obviously, oil prices moving the way they have are not great for global growth, and ultimately that could be the fix. High prices will fix high prices, if you know what I mean.
Okay, no, but Jonathan, the argument could be that in gold's case, there is real demand. It's been there for some time now, and hence there has been that surge. Whereas in oil's case, the real demand is absent relative to gold, and therefore some bit of that dichotomy in the ratios might be well warranted.
Yeah, no, I take that point, and obviously gold is moving. It's not just geopolitics which is shifting the gold price. There's other factors at play, but I think the gold complex does look, and precious metals generally do look as though they're pricing in a more difficult geopolitical environment than oil. And I mean, oil. It was interesting to see the last month or so where before this event, before the issues in the Middle East started happening, that oil was moving higher despite increased production. That OPEC announcing an uptick in production, so quite elevated production still, and oil was moving higher. Now, was that a reflection of perhaps emerging market economies and Europe beginning to come out of its sort of sleepy phase and see a bit more growth? So I think obviously there are other factors at play in the oil complex anyway. But it was interesting that oil was moving higher despite increased production, over the last few weeks.
Okay, so Jonathan, Harsh also joining in, wanting your take with regard to how global markets are cushioning this risk, because we've seen maybe a 15% rally in oil prices. This could well pose downside risks to inflation. Global markets completely brushing that off.
Absolutely. The markets are totally ignoring, just assuming that the oil price won't move much higher. But as you rightly say, there has been nerves over inflation for some time. Yes, we've had a couple of, the inflation print last week out the US was slightly better than expected. So there's no sign of tariff inflation coming through just yet in the US. But clearly, while all that has been going on, a weak oil price and a weak energy complex has helped inflation everywhere. And that if prices remain elevated for some time, then there is no doubt that the likes of the Fed and other central banks will be a bit more cautious cutting rates. So I think that scenario is very negative for equity markets. You're seeing a rising inflation and falling growth scenario, then equity markets will, I think, take some considerable pain.
Does that, Jonathan, also mean that likely this, it's unlikely to translate? Is that how one should look at it? Because basis past precedents, on most occasions when a conflict in these geographies has arisen, we haven't seen a very permanent dent to oil prices, and the reversal has been equally quick. And hence, just trying to get your perspective, is that what equity markets are already reading, and therefore they're looking through the event?
Absolutely, totally agree with you.
And is that appropriate? Sorry.
Well, I mean, we all know that the situation in the Middle East is very fast moving. And obviously, if the Straits of Hormuz were closed off, I think oil prices, well, most people say, the experts, that oil prices would move substantially higher. But obviously, clearly, markets are saying we're not going to get that, get to that sort of impact, and therefore they're just seeing through it, as you say. As we said earlier, most geopolitical events are very quickly priced in and then very quickly priced out of markets, and that's been the right thing to do. But there is clearly risk this could escalate, and so I think most investors, perhaps as a hedge against that, cheap energy stocks which remain under-owned and remained very, very cheap valued isn't a bad way of hedging some of the risk that things could get worse.
Okay. Jonathan, one final question from mine at least. What about the a call specifically on India? I mean, it's not that foreigners are highly big owners, right? If anything, the weightage currently is on the short side, if you will, both in the trading positions as well as possibly in the long only portfolios. It's not heavily owned per se. Growth seems okay, except for this oil piece. Everything else seems to be okay. Is it a good shoe in? I know in the past you've told me that anybody who's missed India thinking of expensive valuations has only licked their wounds, right? Do you reckon that story still holds?
Yeah, I mean, obviously last month foreigners were net buyers, but as you rightly say, year to date, foreigners have been pretty heavy sellers of India. Market has bounced substantially. I think, a couple of months back, after the sell-off that we'd seen, the extended sell-off, I think India was looking very attractive. Obviously, we've, pushed very substantially higher, just short of all-time highs. So markets have moved up again, and valuations consequently are looking a bit peaky again. So I think probably in the short term, with worries over energy and India's issue about import dependency in that area, perhaps EM and India could come off a little bit. But I think ultimately the other interesting thing about this whole scenario is the dollar. The dollar clearly is not doing what it usually does in these safe haven type events. The dollar has continued to weaken off. It's not strengthened at all. And ultimately, a weak dollar is good for India and good for other emerging markets. So I think it is a balanced view. We're still quite optimistic on emerging markets and still do like India.
Okay, thank you, Jonathan, for coming in, speaking with us, giving us that perspective. We'll let you go on that note. That's, of course, the global view, global perspective also coming in. We've spoken enough about oil and macro. Let's switch back to micro. Siddharth, this entire piece around chemicals, when do you see it turning around? Because we're seeing some stocks flying today as a result of that. Is there merit in looking at any of those? Are there any favorites within that chemicals basket for you?
Sure, Harsh. I think definitely if you look at the chemical space, there are several sub-niches within the sub-segments, and each segment has their own cycle. So in between, we had some of the fluorine-related chemicals doing very well. We saw results from SRF and Navin Fluorine coming out with strong numbers. Demand is strong. The chemical prices have been pretty high, especially key demand areas in US, Europe, that being pretty strong. So clearly, that is one segment where we continue to believe and see strong earnings growth in FY26 and 27 as well. So, for example, SRF, our estimate of earnings growth is in excess of 40% for the next 2 years, while that for Navin Fluorine is a bit again on another 40% earnings growth. So for both, we see earnings growth in excess of 40%. That apart, some of the, if you look at agri-related commodities there, the PI industries kind of stock, again, we see strong demand from not only domestic, but also some of the key exports markets in the custom synthesis business. So clearly, among the chemicals, our favorite is SRF. We have a buy rating and a target price of 3,500. PI Industries, we have a buy rating and target price of 4,300.
Got it. Okay. Do we need to? Okay, just before we get into the break, though, and maybe get to the bull and bear segment too, Siddharth, a word on what do you think of, let's say, rate sensitives like real estate? Is there merit in trying to look at them afresh, considering the rate cycle is lower, even if it doesn't go down further, but is lower per se?
Yeah, Neeraj, hi, good afternoon. So I think definitely makes sense. We saw a lot of consolidation in the real estate names, and finally, with the liquidity boost and the rate cuts over the last few days, we have the biggies, including the HDFC and SBIs of the world, reducing the lending rates in housing finance by 50 basis points. I think that definitely merits a look at the mid segment or the mass segment in the real estate space. If you look at in the previous cycle, the premium ultra luxury segments drove growth, and then we saw stable stagnancy in terms of new home sales or growth in India. But with that, with the interest rates coming down now, I think there could be a revival in the shorts, especially in the mid and mass segment. National players have been gaining market share, and they are penetrating, entering into newer sub-segments. So while Godrej Properties continues to remain a pan-India player, and our top pick, something like a Prestige Estates, which has been entering into newer sub-segments, apart from its home market of Bangalore, is driving growth, and we see valuations also now improving with demand. So definitely makes sense to look at real estate in these pockets.
Okay, let's move. Thank you for that, Siddharth. Stay with us. We're going to move across to the bull versus bear segment today. And today we're going to focus in on PI Industries. That's our stock in focus. The agrochem space is gearing up. I don't know, rough terrain, or we're going to come out of one. But Varsha's here to present both the bull and the bear case on this one.
Well, thank you for that. So yes, PI Industries is buzzing now because Morgan Stanley has upgraded the stock. They're forecasting the growth for PI Industries basis volume in FY26. What they say is they also highlight that while patent concerns are priced in, but the upside with respect to new molecules and domestic turnaround is yet not reflected when it comes to stock price of PI Industries. But you know, there's also near-term growth pressure on this company because despite the long-term optimism, PI Industries have given a guidance of single to mid-teen growth when it comes, mid-single-digit growth when it comes to FY26, attributing this to industry headwinds and climate uncertainties. While volumes are strong, but pricing realizations are under pressure. This is one of the disadvantages that the company has. But though single to mid-single digit revenue growth, but they are resilient when it comes to strong operational performance. They've maintained their EBITDA margin guidance of 25% even while making investments into the new, even while diversifying into the pharma segment. This indicates effective cost management that the company has. Furthermore, management anticipates a significant pickup in growth from H2 FY26 as global headwinds are expected to subside. On the disadvantage side though, so they are diversifying into their pharma segment, which is still under losses. The company's foray into the pharma business, while strategically important for diversification, but is giving a pressure to overall company. The segment is still in an investment phase with ongoing EBITDA losses, and achieving break-even is explicitly stated over a medium term. But the good thing is they are expanding into new products, so contribution, and so the new products are already contributing almost 15 to 18% of agrochemical export revenue, and are expected to increase further as more products come in. But all this is basis on the volume growth that the industry and the company is expecting from FY26. If the volume growth doesn't come in, we're going to see re-rating on all the agrochemical stocks, including PI Industries.
Okay. Thanks a lot for that, and we'll take those flashes as well. But Varsha, thanks for that. A technical view, Hemen, on PI.
Okay, Neeraj, if you look at PI Industries, the setup is what do you say? Not bad. Thing is, it just had a very big run up relatively, sub 3,000 to almost 4,200. So we are safely ensconced in a short term, a medium term uptrend. The picture is turning positive on the long-term charts. As long as we are above 4,000, things remain hunky-dory. But closer to 4,300, 4,280, we are walking into a very strong resistance area. So looks good, everything is fine, but I wouldn't want to buy without a correction, especially when we are just 100 points away from a potential strong congestion area. Neeraj.
Okay. Thanks for that, Hemen. Stay on, gentlemen. Just need to, and we hit a break too, but just before that, some flashes on your screen. Government sources on this conflict saying that there are implications for trade over the long term. For the short term, none of the shipping contracts, etc., might get impacted. Reports state that there are issues in the Hormuz Strait as per government sources. There might be issue in the Red Sea trade as well. The shorter term might not see impact. Over the longer term, could there be issues? Yes, there well could be. Imagine if these straits are impacted or closure. And therefore, if this were to happen, viewers, then you effectively invite a lot of surrounding regions and US into the conflict as well. And if that were to happen, both agreements as well as oil prices stand to get impacted. It's an outcome that you ideally do not want to happen. So bear this in mind as you think about this conflict as well. For now though, we slip into a break. On the other side of the break, we try and talk about the top buy today, sell tomorrow ideas and more.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down.
Okay, welcome back. Thanks for staying with us on India Market Close. We'll go straight across to Anushi because we have Galaxy Surfactants, which is up 7% following Motilal Oswal's reaffirmation with a buy rating. 30+% upside, at least that's what I read today morning. Anushi, give us the rationale behind what Motilal is saying.
Okay, so it's a 34% of an upside, as you've pointed out, from Motilal Oswal on Galaxy Surfactants. A couple of takeaways that highlight as to why this 34% of an upside that we are looking at. Firstly, the plan of the company is to double its volume and grow its EBITDA by around 2.5 times. This is going forward kind of outlook that the company has stated. Especially 50% of this incremental EBITDA coming in from their organic growth. This includes the rinse-off categories like body wash and more. Along with that, specialty care is a segment wherein there would be an uptick in terms of where the margins are concerned, because of which we are looking at improvement in volumes, and along with that, demand recovery in the urban and the rural areas is also going to support this incremental volumes going forward. Now, if you talk about the valuation picture, they have valued the company at a 30 times of a multiple based on the FY27 EPS as compared to the current multiple of around 22 times that we are looking for the FY27 EPS. On this, they have arrived at a target price of 3,140, and hence the 34% of an upside that we are seeing. So these are the couple of reasons why Galaxy Surfactant is in focus on the back of this brokerage.
For that, Anushi, Siddharth, what's the risk that this does not happen?
I think the biggest risk is in the volume growth that the management is targeting. And if you look at the overall next 5-year target, so 2020 target that the management has outlined and ambitious, but what we believe is a well-structured growth. So it wants to double its volumes, grow its EBITDA by 2.5x, and 50% of this incremental EBITDA is going to come from organic growth. So there are the other challenges of finding the right kind of company or business to acquire to achieve the remaining 50% of EBITDA growth in an inorganic pattern. Plus, you have around 30% of growth projected from new product portfolio, again, approvals and market acceptability for these new products. So these kind of product-specific risks are something that is there. But again, looking at the historical track record, last 10 years of growth, the company has consistently achieved an average ROC of 22%, which only goes on to show the disciplined capital allocation and the focus on the return-oriented investments. We believe that with the correction in the stock price and with the
Siddharth, apologies, I'm interrupting. Actually, we're facing a slight issue with your audio, and therefore, your answer isn't clearly being conveyed. Let me actually, while we fix that, let me go across to Hemi and take a quick view on the technical side before we come back to
you. Galaxy surfactants has been corrective for 1/4 to 4 years now. It peaked somewhere in September 21. Since then, it's been corrective and hasn't shown any particular signs of life. Currently, yes, I think we are in an intermediate uptrend. Things are beginning to look just a shade better on the longer term charts. But for a confirmation of this impending positivity, Harsh, there's a monthly level, and like I said, it's 1/4 to 4 years, so that's pretty long time. We need a monthly closing about 2590, Harsh. That happens, I think technical green shoots will be more visibly apparent than now. But yeah, short to medium term, it's absolutely has turned the corner, Harsh.
Okay, what's your take on a Sterlite Tech, Hemin?
Oh God, that is extremely volatile stock. But yeah, we are at the risk of sounding overly optimistic. We are in a bull market. The wave pattern seems to suggest that after ages, I don't know what, after 8 years, we seem to be looking positive, bullish on all sorts of technical parameters. Virtual roadblock at 100. We take this out, we are heading up. The volume seems to suggest something major happening. Volume has been highest in what, maybe a year or so. So things look great. Okay, it seems to be in circuit, obviously, but otherwise, I would prefer a small cool off, but looks hunky-dory on all time frames. Sterlite Technologies.
33% up in the last 3 trading sessions. Hemin, this one. So let's go across. Vansh is here to give us some perspective on what's happening with regard to a Sterlite.
Right, the
Tech.
stock is up 18% in trade today to hit a 4-month high. Let's quickly understand the entire picture of the stock. They have recently announced a launch of new generation of data center solutions, expanding their portfolio beyond their traditional optical network connectivity. These new products include all sorts of cables and complete connection setups. And they are designed to serve big internet companies, also called hyperscalers and telecom providers. The worldwide market for the new generation data center is expected to grow to 517 million by 2030 at a CAGR of 10.5%. They have also partnered with Tech Data in India as an exclusive distributor for the Sterlite solutions, further extending their market and database. Tech Data is a leading global distributor and solution aggregator for the IT ecosystem. Tech Data will leverage its presence in over 70 cities for Sterlite Tech and enable them to grow. So this is what the overall picture looks like for Sterlite Tech.
Okay. Vansh, any report, etc., talking about how much of an earnings upside for FY26? Have you been able to dig out any report talking anything like that?
As of now, there are no specific reports for that.
Got it. Okay. Thanks so much for that, Vansh. I don't know if we have Siddharth Khimka back or no, but Siddharth, if you are with us, any thoughts on Sterlite? I mean, the audio was a bit hazy the last time we were talking. I hope the audio is okay. Any thoughts on Sterlite?
I think now can you hear me better?
Loud and clear, Siddharth.
So Sterlite, we don't have coverage, but I think this entire theme revolving around the data centers, that is going to be a big theme going forward. The amount of AI usage that is only going to go up. We are seeing lot more GPT style AI agents being used, and that will require not only the computing servers, the data storages to give out those answers. So it's a big theme, and the entire value chain in that should ideally do well.
Well, what a move in this one. 133% today, 20%, and I think the intraday today will also show you that it started off high, yes, but has had a massive spike in the last few minutes of trade. So good going really for Sterlite Tech here. Himen, maybe we asked you, but I would love to know, what are the medium-term targets on this one, if the charts tell you something like that?
Okay, a medium-term target would be around 130, Neeraj. Above 130, we can probably scale it up to 160. But yeah, 130 seems like a safe enough medium-term target.
What a solid move here. The other solid mover today has to be Indraprastha Gas. After a long time, it's almost like a phoenix rising from the ashes. 212 currently for this one. Decent volumes in today's session as well. Trading at the day's high currently. Himen, maybe the opportunity doesn't present itself for long, so I'm tempted to ask you first. Would you trade it as a BTST or buy today, sell in a few days at these prices?
Not a BTST, Neeraj, but buy today, sell in a few weeks is the way I would put it instead of few days. Why I'm telling you this? 217. 5 months of consolidation. Point of breakout. Looks good. About 217, it should fly to 240.
Wow. Above 217 should fly to 240. Is there an investment argument in a CGD company, Siddharth Khimka?
If you look at among the gas companies, we definitely recently have upgraded some of them. Indraprastha Gas and MGL Mahanagar Gas, these both are a buy rating for us. For Indraprastha, we saw that for FY26, the volume growth is expected at around 10%, which is a decent growth given this CGD space. And the management has guided for EBITDA margins in the range of 6 to 7 rupees per SCM in the near term. So what we are seeing is that going forward, we look at the valuation is at 15 times FY27 P, and looks a good dividend yield also. So EPS growth of 8 to 10%, and as well as dividend yield of about 2.5 to 3%. So that gives a valuation a bit attractive, and hence we believe that there definitely is an investment case in IGL. We have a target price of 225.
Okay, so IGL also in focus, bullish both beyond a certain point in technicals, but also from a fundamental perspective, not looking bad. But Neeraj, you spoke with the management of Blue Star earlier today. Didn't sound very bullish with regard to a Q1, right? And you have the whole value chain thereafter. You have something like a Symphony, which gets impacted because and competitors, of course, a Voltus and the like. Not seeing that movement on the counter. But your quick take, is there a...
No,
what did you make
just
of
that here's a management which is a leading company saying that the targets will be much lower than what was earlier set for, right? And therefore, as you said, Harsh, the whole ecosystem might tend to get impacted, right? Blue Star sales might be lower. I'm sure it's not alone for Blue Star, for the others. And then the whole EMS chain which supplies to these companies might also see that impact. So you're probably seeing that too. Being an issue. If Vijay Sales was listed, maybe it could be a small problem for them as well. So there's not a few which one's got to be a bit careful about, I would reckon. But for today's session, you're right. I mean, the stock is in a different flavor altogether.
Yeah, fine fettle after that low that it made for the day. But let's go across, listening to what Mr. B. Tyagarajan had to say, Managing Director at Blue Star, to us.
It should be around 25% compared with last year, which was a growth of over 57% over FY24 in FY25. On that, there will be reduction of around 25%. So that will be the impact. But you do have many cost levers. So I think Q1 for room air conditioners will be bad. But commercial refrigeration is doing extremely well, and we are a B2B company as well as B2C company. So it is a disappointment. We will bounce back. That's where we are.
Okay, Himen, do you have a view on any of these, at least from a technical perspective? And I'll name them: Blue Star, Voltus, Symphony, and Amber as well within that cohort of stocks.
Okay, Blue Star looks interesting, Harsh, because it's from the rounding bottom and a beautiful one at that. So I would be bullish. Okay, this is on the daily chart. Obviously, the weekly and the medium term and the longer term will take some time to confirm this prognosis. But yeah, whatever I'm saying, it looks very good. At least on short term, 1650 was a level it has taken out today. I believe the worst is over for the time being. Probably next week I'll be able to confirm that the worst is over from a medium term point of view also. Voltas that you spoke about, Harsh, it's been consolidating for a long time and now it's beginning to pick up. So I would say both. I think Blue Star that you mentioned and Voltas. Maybe Voltas a bit more because it's a kind of stock I tend to track it. Looks quite nice. About 1330, thing will start looking good. I would say I could flag off a positional buy at this point in time as far as Voltas is concerned. Harsh.
Okay, Himen, while we're at it, BTST. Himen, you're on mute maybe.
Sorry, my bad. I have a buy call on DMart Avenue Supermarket at 4080, surplus 4055, target 4130. The logic for the same oscillators buy on the intraday charts. There is a trend line breakout. Stock is on the verge of reversing a 9 trading session decline. Everything looks good from a BTST point of view. Harsh.
Okay, so that's DMart, which is the BTST pick. Siddharth, with regard to what Blue Star had to say, is it a concern for you? Does it change anything materially in terms of your expectations on FY26 in terms of EPS and top line?
Yes, I think if you look at Harsh, the Q1 or the summer season was expected to be very strong, especially for the room AC segment. However, that was not the case despite the initial temperatures soaring and the data coming in pretty strong, but then it waded and weaned over the months, and that is, I think, already there in the price. Voltas corrected from about 1900 odd levels to about 1300. So we believe that the long-term trajectory that continues to be very positive, especially for Voltas, which we have under coverage. Unfortunately, Blue Star we don't cover. For FY25, the company achieved record AC sales and continued to maintain its leadership in the room AC segment with 19% market share. They are also ramping up the Chennai facility. Overall, on the long term, next 2 years, we are projecting a net profit CAGR of almost 24%. And at current valuations, definitely a long term attractive. But having said that, Q1 numbers will not be that great and hence can expect the sector and the stock to remain a bit subdued. But definitely a good price point to accumulate for long term investors.
Okay, so that's the view with regard to Blue Star. But let's go across as Arcade as well, which is buzzing up nearly 6% after that 2,000 crore gross development value win of sorts that they've had. We spoke with Amit Jain, who's the chairman and managing director at Arcade Developers, listening to what he had to say with regard to demand as well as pre-sales guidance.
We are seeing a good traction for residential markets, and we look at a 20% growth year-on-year basis from last year to this year. in pre-sales, top line and bottom line, all aspects.
Okay. And before we get more market voices, a few stocks which are spiking up in trade, and let's just try and see if Heyman has a view on any of these. So there is Zota, there is strength in, actually I won't call Britannia as having strength, but certainly stocks like BASF are moving around a bit. Happy Forge and Ardia Forge are moving around a bit. Astral is moving around a bit. So there are some stocks which are spiking. Heyman, a view on any of these? I don't want a view on all. Any of these?
Zota, no. BSF, yes. Buy current levels for a positional trade.
Nothing like, and on Astral or any of the drone companies, no view, right?
No, Astral was good, he's good. Maybe we are a bit late in the day, but it became half. So was nothing to lose at lower levels. But yeah, 1550 is being taken out today, Neeraj. That means we are looking at a 80-point upside from here. So as long as 1550 holds, Astral further upside. So yeah, Astral is also looking good, Neeraj.
Okay. Stocks like Lotus have had a move today as well. Siddharth Khemka, one of your peer sets had a note today on chemicals, and I'm clubbing that with what's happening to CDMO. Any thoughts here on any of the pharma stroke chemical names? Anything that you like?
Yeah, Neeraj. So I think the CDMO players have been reporting strong numbers, and that is a space within the pharma segment has had the highest promise. So Laurus continues to deliver strong numbers. Q4 150% PAT growth. Obviously, there is a lot of turnaround that has happened, and the numbers were much ahead of our expectation as well. So what we are expecting is that going forward also for a company like Laurus, while the revenue is expected to grow at 18-20% on back of the sharp improvement in the margins as well as the ARV business, which is scaling up, plus the CDMO scale up, the margins are expected to improve sharply, lead to a 55% net profit CAGR, and hence the current valuations that is still supporting the upside. So we have a buy rating on Laurus and a target price of 750.
Okay. Well, and if you thought that some of these stocks are expensive, maybe you have a view. But if you think that the Indian equities are expensive, then from a 3-year perspective, Mark Matthews, who is the head of research at Julius Baer, says that that is not so. Listen to what he says about the Indian markets.
Well, broadly speaking, the Nifty's on just north of 20 times this year's earnings. And if we get earnings growth, let's say, above 10%, somewhere between 10 to 15% per year over the next few years, then that's not an expensive price if you're looking to own it for a few years. A few means 3. So I don't think India is at all expensive on a 3-year view. And it seldom has been. To my memory, there was only one time when India was really cheap, at least since I've been looking at it, which was the bottom of the global financial crisis. Otherwise, it's an expensive market. There are reasons for that. Capital controls are one. And the good story that India offers is another. So I don't think the valuation is that dear for people who are looking to own it on a, let's say, a 3-year view.
Okay, so that's another view coming in. But let's take in and let's try and digest. We took a slew of views in the morning as well. And on the special occasion of Father's Day, we asked some of our guests the best investment advice they have either given or have been given from their father, or they would like to give to their children. And here's a wrap of the most interesting answers and advices that we got to hear.
At a young age, what I would encourage Antara to do is basically use equities and think long term. I think compounding, as we have learned, is the best friend.
First is build your career, invest in your career, and don't at 20 years say, if I save for 40 years, then I'll be having retirement. Nobody thinks about retirement when you are starting out. So I think this Twitter and social media has got it completely wrong.
Kaput.
तो क्यों धन संचय, and पूत सपूत तो क्यों धन संचय, which means that if your child has good values or bad, why are you still going out and parking a kitty aside for him? If he's not the right person to manage that, he'll probably wash it down the drain.
Yeah.
And if he's got all the right values that you've passed on to him, he'll perhaps build his own.
Just don't get fantasized by a size of opportunity of a particular business. Most important thing in my view in investment is management quality, DNA of the company, balance sheet of the company, operating cash flows of the company, and leverage of the company.
You have to live your life. You just can't be focused on making money. You should be focused on also enjoying life. And clearly, it is with their arrival that I have started enjoying life.
Cutting costs and living within your means, of course, very important, but investing wisely, because investment is the real driver for wealth creation.
Hemant, 10 to 20 seconds. Give us your thoughts. What in your opinion, best advice you've got or you'd like to give?
I'd say start an SIP for a proper mutual fund as you're driving an Ola Uber. Your personal investment is going to help you buy a car. The SIP is going to run your car and your house. So I would say SIPs plus personal investment is, there's nothing else. Your gold, silver, ETFs all are good, but equity beats everything hands down.
Okay, Siddharth, yours?
So I would suggest believing in the power of compounding, be it in life, be it in your learnings or in investments. Stay put in the hard work, and the results will be there in the long term.
Thank you so much, gentlemen, for coming and speaking with us and for those valuable thoughts. A minute to close now. Let's quickly look at where the Nifty 50 is closing in at. We've rebounded substantially from the day's lows, but we're largely flat over the last hour and a half. We're just about 50 points from the 25k mark. So that's on the Nifty. Very different picture on broader markets. Wait and watch on that one. But let's look at the intraday on the Nifty 50 as well. And that'll give us perspective. There we go. We flatlined there. We've hit a high of 24,967. So around 25 points lower from that point. Let's look at the breadth on the Nifty, and that heat map will reflect that. Very strong breadth is what has led to the kind of moves that we've seen. 46 stocks in the green, just 4 stocks in the red. SBI Life, HDFC Life and BEL, the top gainers. So financials dominate, but financials within the insurance space dominating. The financials otherwise have taken a bit of a backseat. They've underperformed the Nifty at least today. The other sector which has done fairly well for itself is IT, and let's pull up the heat map on the sectoral indices as well, and that will give us an indication. IT up 1.5%, realty up 1.3 odd %. So those two taking center stage. There's also metals which has silently climbed up 1% as well in trade. No index or no sectoral index in the red, and that's a key positive. In fact, when you're looking at the breadth, otherwise it was unfavorable to start off and for a better part of the day as well. But we've reversed that and we've closed largely 1:1 where the breadth is concerned. So a clear thumbs up with regard to how the improvement in breadth has worked. Let's look at the Nifty mid cap and small cap indices as well. And from the lows of the day, we've rebounded very well. So it's a healthy sort of recovery that we've seen. Nearly 500 or rather 400 odd points higher, 420 odd points higher from the bottom for the Nifty mid cap. The Nifty small cap also very, very similar vein. Just very strong recovery that we've seen, 0.5% higher at close on the Nifty small cap. The BSE 500 top gainers, top losers will largely reflect some big moves that some stocks have made. In terms of losers, Hudson Agro has slipped 5%, but outside of that, Tata Motors was the one big slip up in trade within the Nifty pack, which is now sitting 4% lower at close, the one big negative contributor, if at all. But look at all the big gainers of the day. Those are some names. Galaxy Surfactants up 6% on that Motilal Oswal note, suggesting a 34% upside. What to watch out for tomorrow? Now, this is the key. You've got the Bank of Japan interest rate decision, which will come out tomorrow. We'll have to wait and watch as to how that comes out and likely impact of that on markets. But some dividend adjustments, Hindustan Zinc will be one that I'll look out for. And you'll also have anchor exit to anchor lock-in period You'll have Vishal Megamart and Sai Life in focus on the back of that. But completely out of time on this edition of India Market Close. From Neeraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. Market Express will take the action forward.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is,
hello and welcome. Good afternoon. You're watching Market Express and I'm your host Manika Mishra. Let's get straight into the show. Markets end in the green. Nifty ends near day's high around the 24,900 mark, whereas Sensex ends near the 81,800 mark. All sectors closed in the green today, signaling broad market strength. Nifty indices like IT, metal, realty and oil and gas surged between 1% and 1.56%, leading the rally. Meanwhile, auto, FMCG, media and banking sectors also edged higher, though their gains remained modest, hovering between 0.16 and 0.29%. Global oil prices jumped 5.5% as Israel launched strikes on Iran's South Pars gas field, disrupting production. Analysts warn that a prolonged conflict could push prices even higher, especially if Iran retaliates by blocking the Strait of Hormuz, a key oil shipping route. Government sources confirmed disruptions in the Hormuz Strait with potential trade challenges in the Red Sea. While shipping contracts remain unaffected for now, prolonged instability could have broader implications. Authorities continue to assess the evolving situation and remain in touch with exporters as they navigate uncertainties in global trade. Hardeep Singh Puri has stated that the oil ministry has 50% reserves purchased at lower prices, which is also sufficient for 3 months amid global conflicts. Sources expect oil prices to stabilize between $65 and $75 per barrel. Government sources warn that Iran's defense capabilities should not be underestimated as Strait of Hormuz shuts, through which 20% of global oil flows are shipped. Insurance costs are expected to rise. India and the US are intensifying efforts to double bilateral trade, but significant tariff reductions are essential for success, government sources told NDTV Profit. Both nations aim to enhance market access through their priorities, though their priorities differ, with each targeting specific items and sectors. Lowering tariffs should be a shared goal, with the US exploring options like the Trade Protection Authority or seeking congressional approval to achieve reductions. India seeks preferential and sustained advantages to boost trade as negotiations for an interim deal gain momentum. Now, government sources also told NDTV Profit that Indian auto component industry is monitoring tariff impacts, currently experiencing minimal disruption but risks significant challenges if prolonged. India will pursue exemptions if other countries secure them, aiming to protect its trade interests. China's rare earth restrictions are a global response, not solely targeting India, but significantly affect the Indian auto sector. The government, through SIAM and ACMA, is facilitating discussions with Chinese counterparts, while the NEA and Commerce Department engage in diplomatic and commercial talks. India is making every effort to ensure essential rare earth imports continue to support its industries. And the military exchanges worsened between Israel and Iran overnight on Monday as strikes hit residential areas, voiced killing and wounding civilians as global leaders voiced alarm over the conflict between the two warring enemies spilling into the wider Middle Eastern region, calling for de-escalation. On Sunday, Israeli strikes reportedly killed the intelligence chief of Iran's Revolutionary Guards, Mohammad Qasem. The number of deaths on both sides has mounted. In retaliation for Friday's preemptive attack, Iran unleashed waves of missiles at Israel over the weekend, killing 10 people, including children, and bringing the overall toll to 13 dead and 380 wounded. Iran's health ministry, meanwhile, said that at least 230 people have been killed in Israeli attacks since Friday. Iran has responded to India's request to evacuate Indian students trapped amid Israel's ongoing bombings. Despite closed airspace, Tehran confirmed all land borders are open for safe passage of Indian nationals. Iran's foreign minister approved India's diplomatic mission, requesting names, passport details, and travel plans to ensure safe border crossings for diplomats and civilians. India is coordinating to secure the safe return of its citizens. Ben Powell, Chief Middle East and APAC investment strategist at BlackRock Investment Institute, has highlighted India's resilience amid escalating Iran-Israel tensions. He noted that investors are acting cautiously, but India could benefit from shifting global policies and emerge as a winner even in turbulent times. At least 99 people who died in the Air India Ahmedabad-London plane crash have been identified through DNA testing. Authorities have handed over the bodies of 47 victims to their families. Nearly 600 doctors, assistants, and drivers have been roped into the handover of the bodies. Investigators have found the cockpit voice recorder, a key tool in determining the cause of the June 12th Air India crash. Earlier, only the flight data recorder had been recovered. The discovery has reported to P.K. Mishra, Principal Secretary to the Prime Minister. He chaired a high-level review meeting at the Circuit House and discussed the ongoing relief, rescue and investigation efforts with senior officials from the central and state governments, AAIB and the Airports Authority of India. A high-level team from Boeing and India's Aircraft Accident Investigation Bureau has arrived in Ahmedabad to begin a detailed probe into the tragic crash of Air India Flight 171. The Dreamliner went down on June 12th, claiming over 270 lives, including medical college residents and students who were in their hostel when the aircraft plowed into the building. Investigators are now combing through the debris to uncover what led to one of the nation's deadliest aviation disasters. And focusing on the markets, the IT sector has shown positive momentum, up 1.6% today and 2.6% in the last 5 days. Quick Heal leads the top gainers with a 7.4% 0.55% surge, followed by Newgen and Nelco. On the downside, MetLife, Unicom and RateGain each fall over 2.79%. Nifty IT is riding a two-day winning streak, extending its most recent upward trend to 6 consecutive sessions. Despite the short-term gains, the sector remains down 14.3% over 6 months and 9.81% year-to-date. Investors watch closely as the sector attempts a rebound. And despite a 30% share in the Indian electric scooter market, Ola Electric's FY25 revenue fell 9% to 4,645 crore rupees, and Q4 EBITDA plunged to negative 101%. Its stock price has seen a significant drop, falling from a peak of 146 rupees per share to the current trading price of 48 rupees per share. Moody's has upgraded Yes Bank's credit rating to Ba2 from Ba3, while shifting the outlook to stable from positive. The upgrade reflects a gradual improvement in the bank's credit profile, supported by stronger capital levels and higher loan loss reserves. Now, these improvements have enhanced the bank's ability to absorb potential losses and manage risks more effectively. The stable outlook suggests Moody's expects the bank to maintain its improved financial position going forward, marking a positive development for both investors and stakeholders. Arcade Developers is making a big move into Thane, launching a new 6.28-acre project with an estimated gross development value of 2,000 crore rupees. Now, this marks the company's first entry into the Thane market as part of its larger plan to execute projects worth 14,000 crore in gross development value. The Thane project is expected to boost Arcade's presence in Mumbai metropolitan region and signals strong growth ambitions for the real estate developer. Syngene's Bengaluru facility has received the establishment inspection report from the US FDA, confirming its compliance with good manufacturing practices. Now, the inspection outcome was voluntary action indicated, meaning no critical issues were found and only minor improvements are suggested. This clearance is a significant milestone for Syngene, strengthening its reputation for quality and paving the way for continued business with global clients. HBL Engineering has secured a major order worth 132.95 crore from South Central Railway to implement the Kavach safety system. The project will cover 48 stations and 446 kilometers of railway tracks, with completion targeted in 18 months. This win boosts HBL's order book to nearly 4,000 crore, following a strong FY25 revenue of 1,967 crore rupees. The Kavach system is designed to enhance rail safety and efficiency, marking another significant step forward for HBL Engineering in the railway sector. Birla Corporation has been declared the preferred bidder for the Gauram Khan Ki Dhani limestone block in Jaisalmer, Rajasthan, following a state e-auction. The block spans nearly 500 hectares and is known for its high-quality cement-grade limestone. Securing this mining lease will ensure a steady raw material supply for Birla Corp's cement operations and support its long-term expansion plans. The company will pay 20.6% of the limestone's value as revenue share to the Rajasthan government. The formal lease grant awaits regulatory approvals. And IOL Chemicals has earned REACH certification for acetic anhydride, a key step that now gives the company access to the lucrative European Union market. This certification confirms compliance with strict EU safety and environmental standards, which is mandatory for exporting chemicals to Europe in quantities above 1 ton per year. As a strong player in active pharmaceutical ingredients like ibuprofen, IOL Chemicals expects this achievement to boost its export volumes and strengthen its position as a leading API supplier. Sun Pharma's Halol plant in Gujarat faces fresh US FDA trouble. After an inspection from June 2nd to June 13th, the US regulator issued a Form 483 with 8 observations highlighting procedural and documentation lapses. The Halol facility has a history of regulatory issues and has been under a US FDA import alert since May 2022, meaning it cannot ship products to the US market. As a result, the plant currently generates no revenue Sun Pharma says it will address the concerns and take corrective action to resolve the issues raised by the FDA. Privi Specialty has decided to cancel its planned 1,000 crore qualified institutional placement or QIP. The company says the move comes on the back of stronger financials and an improved cash position, eliminating the immediate need to raise additional funds from institutional investors. This decision signals Privi's growing financial stability and confidence in managing its operations without external equity infusion. Investors and stakeholders can take this as a positive sign of the company's robust balance sheet and healthy cash flows. Ramkrishna Forgings has revealed an inventory overstatement of 220.52 crore for FY 24-25, reducing its net worth by approximately over 6%. The discrepancy arose from incorrect production entries and unrecorded rejections. The company's board plans to implement process improvements and take disciplinary actions to prevent future issues. Despite this setback, Ramkrishna Forgings continues to focus on capacity expansion and strategic growth initiatives. Morgan Stanley upgrades its outlook on chemical sector, upgrades PI Industries to overweight with a higher target price of 5,000 rupees. Navin Fluorine also upgraded to an equal weight while remain underweight on SRF, RT Industries and Tata Chemicals. Zee Entertainment's board will meet today to review recommendations from investment bankers. Market watchers anticipate updates on a possible OTT platform sale and internal restructuring efforts as the company looks to streamline operations. Sterlite Technologies has launched a new generation of data center solutions. This move is a leverage for its leadership in optical network connectivity. The offerings include advanced cabling and end-to-end connectivity to power AI-driven data center infrastructure catering to hyperscalers, co-location players, enterprises, and telecom providers. These solutions aim to build agile, scalable, and sustainable data centers aligning with the global market's projected growth to $570 billion by 2030 at a growth rate of 10.5%. STL has partnered with Tech Data India as its exclusive distributors. Now, this move will utilize Tech Data's network across 70 cities to deliver these solutions to channel partners and customers nationwide. State Bank of India cuts its savings account interest rate to 2.5%, its lowest ever effective June 15th. The move follows a 50 basis point repo rate cut by the Reserve Bank of India earlier this month. SBI also reduces fixed deposit rates by up to 25 basis points, impacting both new and renewing deposits. The rate cut aims to align with the broader market trends and protect the bank's margins. Motilal Oswal maintains a buy rating on Galaxy surfactants with a target price of 3,140 rupees, signaling confidence in the company's growth trajectory. The firm plans to double volumes and boost EBITDA by 2.5 times, with half of the incremental EBITDA expected from rinse-off categories. Specialty care segment volumes are set to improve while valuation stands at 30 times FY27 EPS, up from the current 22 times multiple. The outlook remains optimistic for sustained expansion. Early monsoons bring a slowdown in cooling demand, impacting consumer durables like air conditioners, coolers, and fans. Blue Star's managing director, B. Tyagarajan, notes that Q1 AC sales will be substandard, prompting the company to cut production by 20 to 25% in the first two quarters. The India Meteorological Department has announced an early above normal monsoon, potentially the earliest in 6 years, raising concerns over seasonal demand shifts. As the industry adjusts, companies brace for the ripple effects on volumes and pricing. India's May trade deficit stands at $21.88 billion as both goods exports and imports decline year-on-year. Services exports show solid growth while services imports remain relatively stable. Meta Platforms has appointed Arun Srinivas as MD and Head for India. He previously served as Director and Head of the ADS business for Meta India since 2022. Before joining Meta, he held significant positions including COO and Global Chief Marketing Officer at Ola. The funeral of former Gujarat Chief Minister Vijay Rupani will take place this afternoon with full state honours following his tragic death in the Air India Dreamliner crash. Chief Minister Bhupendra Patel visited the site and paid his last respects to the veteran leader. Amitabh Kant, India's G20 Sherpa since July 2022, announced his resignation, including a distinguished 45-year career in public service. The former CEO of Niti Aayog, who played a pivotal role during India's G20 presidency in 2023, shared his decision via social media, expressing gratitude to Prime Minister Narendra Modi for entrusting him with transformative initiatives. Kant, instrumental in securing the unanimous New Delhi leaders' declaration and facilitating the African Union's inclusion in the G20, highlighted his contributions to programs like Aspirational Districts Program, Make in India and Startup India. The death toll in the collapse of the iron bridge on the Indrayani River in Pune district has risen to 4, and 2 bodies have been recovered in the ongoing rescue operations, with divers and emergency personnel deployed on the site. Maharashtra CM Devendra Fadnavis said that the iron pedestrian bridge had been declared dangerous by the district collector and warning boards had been put up at the site. India's population census 2027 will be conducted in 2 phases, marking the country's first census since 2011. The first phase, starting October 1st, 2026, will focus on housing and household data, while the second phase, beginning March 1st, 2027, will cover demographic, socio-economic and caste enumeration. This will be India's first digital census, allowing self-enumeration and ensuring stringent data security measures. A helicopter crash killed 7 passengers on board amid bad weather. A case has been registered against helicopter service operating firm for alleged negligence. This marks the 6th helicopter crash on the Char Dham route in Uttarakhand in just over 40 days. Prime Minister Narendra Modi addressed the India-Cyprus CEO Forum in Limassol, Cyprus, underscoring India's ascent as the world's 5th largest economy and its trajectory to become the 3rd largest in the near future. He highlighted transformative economic reforms, including the implementation of the goods and services tax, rationalized corporate tax rates, and the decriminalization of thousands of laws, all aimed at enhancing ease of doing business and fostering trust in India's stable policy environment. US President Donald Trump's administration is considering significantly expanding its travel restrictions by potentially banning citizens of 36 additional countries from entering the United States. Earlier this month, Trump signed a proclamation that banned the entry of citizens from 12 countries, saying the move was needed to protect the United States against foreign terrorists and other national security threats. The ICC Women's ODI World Cup 2025, the second major ICC tournament of the year, is scheduled to commence on September 30th, 2025 in India and Sri Lanka. A highly anticipated group stage match between hosts India and Pakistan is set for October 5, 2025 at the R. Premadasa Stadium in Colombo in Sri Lanka, a neutral venue. This arrangement stems from a hybrid model agreement between the Board of Control for Cricket in India and the Pakistan Cricket Board, under which India-Pakistan matches and ICC events hosted by either country from 2024 to 2027 are played at neutral venues due to geopolitical tensions. Pakistan will play all their group stage matches in Colombo as part of this agreement. JJ Spawn clinched his first major championship at the 2025 US Open held at Oakmont Country Club by sinking a dramatic 64.5-foot birdie putt on the 18th. Despite a challenging, Spawn rallied after a 96-minute weather delay. Former Australian captain Ricky Ponting hailed Aidan Markham's title sealing century against Australia in the ICC World Test Championship final, saying that it is up there with the finest runs scored during the tournament finals. No stranger to scoring big runs on grand occasions, Ricky Ponting has a history of stepping up when it mattered the most. And with that, it's a wrap on Market Express, but do stay tuned to NDTV Profit as there's a lot more lined up for you right on the other side.
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
Nifty Sensex snapped their two-day losing streak to close near 1% higher. Mid and small cap indices also gained but underperformed the benchmarks. All sectoral indices end in the green. Government is engaging with Siam ACMA to facilitate discussions with Chinese counterparts, says Commerce Secretary Sumit Bhartwal. Adds that diplomatic commercial discussions are in progress on it. Investigators recover cockpit voice recorder from Air India plane crash. Boeing team reaches the crash site to examine the crash details. Death toll mounts on both sides, with 13 dead and 380 wounded in Israel. Meanwhile, government sources say back home there will be a meeting of all shipping lines, stakeholders, container organizations and concerned departments this week to discuss potential issues. Government sources say oil ministry has 50% reserves, expected to be sufficient for 3 months amid the Iran-Israel conflict. Sources also tell us that oil prices are seen to be normalizing at $65 to $75 per barrel. SBI cuts rate on savings account for deposit of up to 10 crore rupees to 2.5% per annum, lowest rate offered by the bank, effective from the 15th of June. 7 IPOs to hit the market this week. Aris Infra Solutions to be the sole main board IPO along with the 5 other SMEs. Oswald Pumps IPO ends today. PM Modi makes a historic first visit to Cyprus as he begins his 3-nation tour. The country confers him with its highest civilian honor. Hello and welcome. Good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest updates on markets as well as national and international news. To begin with, markets end in the green. Nifty closed near day's high around the 24,900 mark, while Sensex ended near the 81,800 mark. All sectors closed in the green today, signaling broad market strength. Let's go across to my colleague Harsh for a wrap of the day's market action.
Well, an excellent move on Indian indices today. We saw the Nifty first begin that move, 1% up, in fact, at close today. But from the bottom, we saw very strong moves both from the Nifty mid cap as well as the Nifty small cap indices. So the broader markets followed suit, and the late rally and the flattish move on the Nifty led to broader markets really catching up versus the Nifty, at least at close today. So it's played out very well. Now let's talk about the Nifty first. Outside of Tata Motors, the breadth was extremely strong. We had 46 stocks close in the green, just 5 stocks in the red, one of which was Tata Motors, and on the back of the guidance there was a bit of a downtick that stock saw. So one was news specific, but outside of that we had a clear coat of green. Within those that gained, you saw HDFC Life, SBI Life stand out. So there's life insurers and the financial services which, or rather other financial services outside lenders, which really led the rally. You had a BEL as well within the defense pack, which was really shining in trade today. So those were some stocks which moved, but no big contributors. So when you're looking at the contributors, no major ones that really stood out. So it was just the breadth which kind of aided the index ahead, at least in trade today. So that's on the Nifty 50. Let's talk now about sectors. The Nifty IT was one which really stood out, and the Nifty IT did very well with all constituents within the IT index in the green. So it was a solid day, 1.5% plus, and a good outperformance that we saw there. Within broader markets, Realty was the other one which stood out. All sectoral indices closed in the green. That was the other big positive. You saw the mid cap and small cap index also closed in the green. I did mention that, but there was a slight bit of underperformance versus the Nifty on those indices. The Nifty Bank, again, a slight bit of underperformance, but we saw again a bit of an outperformance in the last hour and a half of trade. So the Nifty Bank also has done fairly well for itself. Overall, it was a solid day of trade, at least on the Indian exchanges, brushing off anything with regard to Iran, Israel. But you're looking at the BSE 500 top gainers, top losers. Let's pull that up on the screen. And those were some big gainers, very few losers. As you can see, the breadth was even Steven, despite the kind of move that we saw across sectoral as well as benchmarks.
Right, Harsh, thank you so much for that. And shares of Tata Motors fell over 5% today after it signaled that its unit Jaguar Land Rover's free cash flow for the year is likely to be close to zero. This raises concerns over near-term profitability and cash generation. And what raises more caution is the muted guidance and the sharply reduced expectation of margin growth. JLR, in fact, is expecting to record its EBIT margin at 5 to 7%, which is almost half of the earlier expectation of 10%. And the primary reason for the downward revision could be challenging condition in China's premium passenger vehicle market, where a mix of fierce competition and aggressive discounting has taken a toll. To put things into perspective, so far in calendar year 2024, over 215 models have seen price cuts, and the number of retailers in the passenger vehicle segment has dropped by 4,400, leading to a 15% decline in the premium range. These pressures are expected to weigh on volumes and margins in the short term for the company. And moving on the special occasion of Father's Day, we asked our guests some of the best investment advice they have either been given from their fathers or would like to give their children. And here's a wrap of the most interesting answers and advices we got to hear.
At a young age, what I would encourage Antara to do is basically use equities and think long term. I think compounding, as we have learned, is the best friend.
First is build your career, invest in your career, and don't at 20 years say, oh, if I save for 40 years, then I'll be having retirement. Nobody thinks about retirement when you are starting out. So I think this Twitter and social media has got it completely wrong.
पूत कपूत तो क्यों धन संचय. and पूत सपूत तो क्यों धन संचय, which means that if your child has good values or bad, why are you still going out and parking a kitty aside for him? If he's not the right person to manage that, he'll probably wash it down the drain.
Yeah.
And if he's got all the right values that you've passed on to him, he'll perhaps build his own.
Just don't get fantasized by a size of opportunity of a particular business. Most important thing in my view in investment is management quality, DNA of the company, balance sheet of the company, operating cash flows of the company, and leverage of the company.
You have to live your life. You just can't be focused on making money. You should be focused on also enjoying life. And clearly, it is with their arrival that I have started enjoying life.
Cutting costs and living within your means, of course, very important, but investing wisely, because investment is the real driver for wealth creation.
Right. And moving on, the State Bank of India has cut its savings account rate by 20 basis points to 2.5% per annum. Now, this is the lowest ever savings account rate the bank has offered since the deregulation of these interest rates in 2010. For balances below 10 crore rupees, the lender was earlier offering an interest rate of about 2.7%, and for accounts above that balance, the bank offered 3% interest rate. I'm now being joined by my colleague Vishwanath Nair to give us more important details from the story.
The State Bank of India has cut its savings account interest rates by 20 to 50 basis points. Essentially, for savings account deposits under 10 crore, the interest rate has been brought down from 2.7% to 2.5%. And similarly, for deposits higher than 10 crore, that number goes down from 3% to 2.5%. Now, so a flat sort of 2.5% rate applies across all deposits. This is an important move because typically this is an indicator that the lender is going to go ahead and cut interest rates on other loans, such as the marginal cost-based lending rate loans, which will ensure broader transmission of interest rates to borrowers as well as depositors. Already, the bank has cut down interest rates on external benchmark linked rate loans, essentially loans which are linked to the repo rate. This is after the Reserve Bank of India announced a 50 basis point rate cut on the 6th of June, and then a 100 basis points cut in the cash reserve ratio for banks. So essentially, higher liquidity and lower rates will translate into better interest rates for the borrowers and lower return rates for depositors. At 2.5% now, this is SBI's lowest ever savings account rate in the history of the bank, and especially since 2010, when originally the savings account interest rates were deregulated. Till before that, 4% was more or less an accepted benchmark, but since then, of course, banks have played around with that rate a lot. But a move by the largest lender on reducing its savings account interest rate is an important one because it is being accompanied by cuts on the fixed deposit rates as well, where interest rates have come down by about 25 basis points.
Right, Vishri, thank you so much for that. And now let's take a look at the upcoming IPOs. Investors can anticipate at least 7 IPOs this week, including 2 on the main board and 5 from the SME space. My colleague Mahima brings you all the details on these new offerings.
So as you rightly mentioned, yes, there are 7 new IPOs this week that one needs to watch out for, 2 from the main board. Now, in terms of the main board space IPOs, the first one that's a new IPO is Eris Infra Solutions. The company is basically a modern platform that helps construction and infrastructure companies to manage their finances as well as their material buying. In terms of the details, it starts on 18th of June and ends on 20th of June. The price band is set between 210 to 222. Lot size is 67 shares. And the issue size is roughly 500 odd crores. The next IPO that is already open is Oswal Pumps. The company is basically a manufacturer and distributor of pumps. In terms of details, it started on 13 June, but tomorrow is the last date for the IPO. The issue price band set is set between 584 to 614. The lot size is 24 shares, and this is roughly a 1,387 crore IPO. Now, in terms of the SME IPOs this week, the first one is Samay Project Services. Well, this IPO basically, the company basically offers EPC services and specializes in balance of plant services. Now, in terms of details, it starts on 6th of June, that is is today and ends on the 18th of June. The issue price is between 32 to 34. Lot size is 4,000 odd shares, and it's roughly a 15 crore IPO that they're issuing. The next one is Patil Automation. The company specializes in welding and automotive solutions. The IPO dates, again, it starts today, ends on 18th of June. Issue price band set between 114 to 120. The lot size is 1,200 odd shares, and it's a 69 crore IPO. The next one is Influx Healthcare, where this company is a healthcare focused company specializing in contract manufacturing. In terms of the details, the IPO opens on 18th of June and ends on 20th of June. Issue price is between 91 to 96. The lot size is 1,200 odd shares, and the issue size is roughly 58 odd crores. And lastly, Maya Shield Ventures will be the last SME IPO, which basically constructs roads and highways for NHIDCL as well as government departments. The IPO starts on 20th of June, that is on Friday, and ends of 24th of June. The issue price is set between 44 to 47. The lot size is 3,000 odd shares, and this is a total issue of roughly 27 odd crores. So these are the few IPOs to certainly watch out for in this week.
Right. Thank you so much for wrapping the IPO buzz for us, Mahima. And now, moving on, the escalating conflict between Israel and Iran is also threatening to disrupt key global shipping lanes. Sources have told NDTV Profit that along with issues in the Hormuz Strait, there may be issues in Red Sea trade as well. Now, to tell us the impact on shipping contracts, let's go across to my colleague Rishabh.
What we've understood from official sources on this developing Iran-Israel conflict is the fact that the government is keeping a very, very close eye on the situation. They are monitoring all developments very, very closely. What is also very interesting is that a meeting has been called that will have all the stakeholders, such as the container organizations that are there, of all shipping lines, all the authorities involved with that, all the government departments also involved in the entire sort of shipping lines and the supply chain part of business. All of them will meet this week, and all of them will discuss the sort of issues that they might face, and the contingency plans in case radical steps like the Strait of Hormuz is closed, something that is essential with regards to the sort of trade that comes in, especially with regards to energy that flows into India via that. What we're also seeing is that the government does see the fact that if these issues prolong, not maybe beyond a month, is when there will be certain serious implications for exporters. But because these shipping contracts are so far only sort of for a month, they are not seen to be as sort of deeply hurting the exporters so far.
Right, Rishabh, thanks for that. And India's trade deficit has narrowed to $21.88 billion in May from $26.43 billion in April. According to Commerce Secretary Sunil Barthwal, India has done extremely well despite global policy uncertainties regarding trade and conflicts. Rishabh joins in with the key takeaways from the trade data briefing and what he's picked up from his sources.
Right. What we've also seen with regards to the trade data that came out from the Commerce Ministry today, what we're also seeing is the fact that India has done this well despite all the sort of global uncertainties that are currently also taking place, the geopolitical challenges that are coming in for May. The April-May export growth stood at about 5.7%. Merchandise exports were also in positive territory, and the trade deficit has eased to about $21.8 billion. What we're also learning on the various key 3 FTAs that India is currently in talks with, the UK FTA, the talks of which were closed, another 3 months or another couple of months before we'll have the final text that is being signed by the two sides. That's an update on the UK FTA. On the EU FTA, there are some tracks that are being worked upon this week. Momentum has picked up, and the frequency of meetings between the two sides has gone up from quarterly earlier to monthly now. So a very clear indication with regards to the speed of the deal, and the target that was of the end of year that continues to remain. There is no sort of pushing off that also. And most importantly, the US bilateral trade agreement, what we're seeing is that the first tranche of the early harvest is on track for July 9th or before July 9th. That is also the the tariff pause period, the 3-month pause period, also ends on July 9th. The first and the early harvest will be done before that. The first tranche, which was scheduled for fall of this year, for September, October of this year, that also remains on track. And what is also very important is the fact that tariffs will continue to play a very, very keen role as part of these trade talks. And what we're also hearing is that both sides are very much focused on reducing tariffs, because that is the only way that both the countries will be able to double trade to $500 billion by 2030. That was the main target of this bilateral trade agreement. And the way to reach there is obviously reduction of tariffs. And the ball is sort of in US's court, is what we're hearing from the Indian government officials, is that US has to now figure out what the sort of way is to reduce tariffs on that front as well.
Right, Rishabh, but stay with us. Rishabh is in fact live. The Commerce Secretary Sumit Barthwal has given notable assurance on rare earth minerals. While speaking at the briefing on trade data, he said that the government is engaging with representatives of the trade sector, such as auto sector, such as SIAM and ACMA, to facilitate discussions with their Chinese counterparts. Could you give us more important information on this as well?
Malika, what we heard from the Commerce Secretary itself is the fact that a very key assurance coming in from the government, especially with regards to the rare earth backlog situation that has taken place with China controlling all the exports. What we're hearing is a guaranteed assurance, is the fact that they are working, especially with the Chinese counterparts. So like we have here in India, SIAM, Society of Indian Automobile Manufacturers, ACMA, which is an association of component manufacturers. We are constantly in touch with the Chinese counterparts of the same with regards to how to source these Chinese rare earth magnets. This is a multi-ministry issue. It's not just the Ministry of Commerce that's dealing with it, but MEA is involved. The MHI, the Ministry of Heavy Industries, is involved. So multiple industries there, all of them talking on various levels with China and with Chinese industry with respect to how we can have more of these minerals coming in. Remember, we reported a few days back that India has barely about 30 days of supply left before production is hit considerably. So that is something that we have our eyes on, and we continue to track this.
Right, Rishabh. Thank you so much for getting us that update. And officials investigating the recent Air India plane crash in Ahmedabad have confirmed that the cockpit voice recorder has been found. This is a crucial discovery to help ascertain the possible cause of the accident that killed 270 persons, including 241 on board. Earlier, the Aircraft Accident Investigation Bureau had confirmed that only the flight data recorder of the ill-fated plane was found. Now, a team from Boeing has reached crash site to analyze the crash details. And following the tragic Air India Dreamliner crash that claimed 241 lives, including former Gujarat Chief Minister Vijay Rupani, the state observed a day of mourning. The national flag will fly at half-mast and official events remain suspended as a mark of respect. Rupani's mortal remains were handed over to his family after DNA confirmation. His funeral will be held in Rajkot with full state honours. Chief Minister Bhupendra Patel visited and paid his last respects, calling the veteran leader's passing a deep loss for Gujarat and the nation. And these on your screen you can see are the visuals of Gujarat mourning the loss of Vijay Rupani. Vijay Rupani lost his life in the ill-fated plane accident, the Air India crash in Ahmedabad, just a few days ago. His funeral, as I said, will be held in Rajkot with full state honours. And tensions between Israel and Iran intensified overnight, with fresh strikes hitting residential areas, leaving scores of civilians dead and wounded. The death toll continues to rise, at least 13 killed and 380 injured in Israel, while over 230 people have died in Iranian territory since Israeli strikes began on Friday. NDTV's Mohammad Ghazali is joining us with more details on the same.
First, the latest update is that Iran has just launched a barrage of ballistic missiles towards Israel, towards the city of Haifa, Tel Aviv, Bani Brak, one of the neighborhood in Tel Aviv city, as well as towards Jerusalem. Though the Israeli aerial defense system is intercepting missiles, incoming missiles from Iran, but there are reports of multiple hits in different cities. Now, coming to your second question, that are we into a full-blown war, or will it escalate further? What we can pick up so far due to the trends of what is happening in the last 3 days is that we are already into the mid of a full-blown war. And why it is not going to de-escalate very soon? One, because as well from Iran's point of view, it is an existential threat for their government, because if they don't continue to respond, perhaps the internal political pressure of Mr. Khamenei and his regime will certainly increase over the coming days. When it comes to Israel, they have started the war. They want to dismantle the entire nuclear program of Iran. Before that, they will also not stop. And as far as US is concerned, if Mr. Trump intervenes now and doesn't dismantle or weaken Iran, he will be remembered as one president who allowed Iranian regime to develop a bomb and let it pass through. So all three of them, though if we are going through all the statements coming from different stakeholders, it will appear that perhaps there will be mediation and perhaps this war will stop. But all the three parties are into it, and they are getting a direct attack onto each other. Despite Mr. Trump changing his tune every day, first he said that Iran will sort of suffer.
And now giving you an NDTV Profit exclusive. Amid West Asia conflict, India's oil ministry has assured 3 months of reserves. My colleague Aishwarya is here to give us more details on the same.
Well, we're closely watching, even globally, and India as a country as well, watching what develops further of the Iran-Israel conflict. And of course, there will be damage in terms of the crude oil prices. That going up is the likelihood when these kind of conflicts happen, especially in oil-rich areas. So what we're picking up from our sources currently is that oil ministry has about 50% of reserves as far as India is concerned, and has this fuel or crude that was bought is of course at cheaper, lower prices from earlier. And that is enough for India to suffice for the next 3 months. And sources in the government are hoping that this will subside, or the conflict will kind of, the impact will be a little lower, and could be that we expect this to have an impact, and the oil prices will also normalize or come lower, anywhere between $65 per barrel to $75 per barrel. And apart from that, as far as the geopolitical conditions are concerned, we must not underestimate Iran's defense power, as well as what our government sources are telling us. And the key area which does impact freight, insurance, etc., is the Hormuz Strait. And if the conflict or the war escalates further, it will have an impact on global supply chain and eventually crude prices as well. That is the context. In light of that, the government sources are suggesting that closing that is not in anyone's interest. Globally, all the countries will be impacted as far as insurance and freight is concerned. So those are the details that we have been discussing and picking up from our government sources.
Right, Aishwarya. Thank you so much for giving us that important update. And with global energy concerns, viewers, escalating due to the Iran-Israel conflict, Union Minister Hardeep Singh Puri has provided a reassuring update indicating strong and effective measures are in place to maintain India's energy security firmly. Listen in as we slip into a very short break.
अब कुछ लोग चिंता करते हैं कि ग्लोबल सिचुएशन, ग्लोबल टेंशन के कारण, तो मैं आपको विश्वास दिलाना चाहता हूं, हम इसमें ऑलमोस्ट डेली रिव्यूज़ कर रहे हैं. हमारी जो एनर्जी सिचुएशन है, हमारे पास वी हैव एनफ स्टॉक्स, हमारा अपना प्रोडक्शन भी बढ़ रहा है.
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the